Good morning, everyone, and welcome to the March 27th Traders Corner Investors Summit, your roadmap to profits in 2025 and beyond. I'm Anthony Chapman, your host for today's event. We're thrilled to have you join us for what promises to be a powerhouse lineup of industry leaders, master educators, and trading professionals, all here to give you actionable strategies for stocks, options, and futures in today's unpredictable markets. In a time when tariffs, rate speculation, and global instability continue to move markets, having the right information and the right community is absolutely critical. Let's dive right in. Our first presenter is Norman Hallett, founder of the Disciplined Trader, and he'll be sharing the basics of prop trading, a perfect session to ground us in the fundamentals of what it takes to get funded and stay funded in today's dynamic markets. With over 40 years of trading experience under his belt, Norman is not just a teacher, he's a mentor and a voice of reason in an often chaotic industry. If you're considering prop trading or already on the journey, this session will help you avoid common pitfalls and set yourself up for success. Please help me welcome Norman Hallett to the stage.
Anthony, did you say tariffs?
Yeah.
Did you say tariffs? You better go out and buy your car now, or before those tariffs take hold. Thank you, Anthony, for
You're welcome. Thank you
for that. I am called a disciplined trader because I give a darn about the mental and emotional element of trading. Most, if not about all other teachers and so on, talk about the trading plan and the trading process, but they don't talk about what could be the most important reason that most traders do not succeed, and that is the mental part. So everything that I do, I weave into the mental. I weave the mental state and the mental information and correction into those plans. In fact, in the early part of my career, I was known for writing trading plans for professional traders. In fact, I have several books I've written and numerous papers, not only on trading plans, but on the mental and emotional aspect. So what you're going to get from me today is a combination of both, which is a much faster track to your success. So I'm going to offer you a trading plan that infuses a lot of that mental and emotional wherewithal so that you can take control. Look, prop trading, if you've heard about it and you're listening to this presentation, if you're prop trading and you're struggling, then you know what I'm about to say. And if you're prop trading, and if you're considering prop trading and you see the beauty, the possibilities of prop trading, the fact that you can be trading 10, 20, 30 times, 50 times the money that you're trading right now and still receive 90 to 100% in some cases of the profit that you generate. If that sounds really great, I believe that it is. I believe that it is, but it is no panacea. If you are not winning in your retail trading right now, it's likely you will not win, even with the advantages of prop trading. You won't win there either. So you need a trading plan that not only addresses the factors that are involved and really take advantage of the advantages of prop trading, but also also reverse some of the hurdles that are put in prop trading. Now, these hurdles that are put into prop trading with all of the firms that offer it are not meant to trip you up. They're meant to direct you into acting and being a professional trader. As a commodity trading advisor myself for Payne Weber and other firms, I can tell you that the way we trade is different than the way a retail trader trades. And the basic part of that, the reason for that, is that when you're trading for a large organization and you're trading other people's money and responsible for those results, they don't like you. You really don't want to let go of what they call open trade equity, meaning that when you have a position on that is active and it is profitable, especially to a great extent, to give that money back is not can get you fired. And when I was at one point in my career, I was running a room of 63 professional traders who were dealing with trying to do their best with trading other people's money. I can tell you that the issue of letting go of open trade equity can get you fired, as well, which is what I did many times to some of these people. But I'm saying to you that it's a great advantage, and I don't want to push down your excitement about the idea of trading several $1 million. I just qualified yesterday not only for a $250,000 account, but for a $50,000 account in the same day. It's not unusual if you know what you're doing. So here I have another $300,000 to trade, in addition to all of the other thousands of dollars that I'm trading right now. It's possible for you, but you have to think and act like a professional trader. So this presentation, I am going to zip right through it, and I'm going to give you an offer at the end that is really experimental in nature, because it reflects the trust that I have in the process that I can relate to you, that you can be successful. Okay, so I'll show you a little bit more about that in a second, or in about a half hour. But right now, I've just used the first 5 minutes of my 45-minute presentation to really set this up as something with great advantage, and something that you should be excited about if you're a retail trader. The fact that instead of trading $5, $10, $20,000 in your own capital, even $50,000, you can be trading $1 million and more. It really is that is the truth. What's interesting about this is that those traders, those retail traders that are already trading $100,000 and $200,000 and plus accounts, they're the ones that seem to be gravitating even faster than those with smaller accounts. And the reason is, why not take their own $250,000 that they're trading and put it in a piece of paper for and get 4, 5, 6% on that money and trade somebody else's money at the same time. So there's a lot of ways to cut this, a lot of ways to do it. I am going to introduce you right now to the basics. Okay, let's get going. I won't be able to take questions here, but I will say that at the end of this presentation, and for the foreseeable hour or so, I'll be on the page that I direct you to, that you can ask questions to me through the chat. That's the University of Cincinnati. I graduated with a math degree. Here's a picture of that room. It's not an exact picture, but I don't have an actual picture from the 1980s. But this is a picture from the 1980s, but not my room. But it looked a lot like this. I just mentioned the professional traders that I was guiding. Payne Weber is a firm that actually bought me out of that craziness in the upper right-hand corner, and I was working as a commodity trading advisor for them. It's the only, I put this up because it's the only firm that you probably heard of. In any event, I've written several books on designing and constructing effective trading plans. This is one book that's still available. Books have been written about me because, as you can see, I get really, maybe I talk too fast, I know I do, but I get excited about the opportunities and possibilities. And I talk, and I'm going to present this today. You'll see it. It's right between the eyes. I'm not going to pull any punches with you. This is not for everybody. Trading, day trading, is not for everybody. So, and it's risky, as you know. So I might as well say it now. Risk capital should be used, and past performance, all the successes that I'm talking about myself personally, and any of the testimonials, has nothing to do with you other than to say others are doing it. Okay, Their Money, Your Profit is a new site that I've come up with about 1.5 years ago that really focuses, that offers my assistance on helping you prop trade. This is a study that I did, and if you'd like a copy of this study, write this down: admin@thedisciplinedtrader.com. This study was actually done over 1.5 years ago, 1.5 years ago, but it's still valid in its parameters. When I was first looking at some of the, maybe it's 2 years ago, I looked at the top firms in the industry, and many more have popped up. Which firm should I be going with? Should I be dealing with? Should I be recommending my clients who've been asking me which are the best firms? And rather than look at this, I'm going to zoom in on the winner in a second. But if you want a copy of these parameters, just email me and I'll get it to you. The idea here is the main weight, the weighting that I used, not W-A-I-T-I-N-G, but W-E-I-G-H-T. The weights that I put on my analysis were: how long have they been in business? How long have they been in business? And Are they growing? Are they paying out their successful traders more and more each month? Those are the two basics, and that took about 60% of the weight. I wanted to know that they'd be around if I was successful, and if I recommended people to it, and I wanted to know that they were growing. Simple and straightforward. The winner in this particular case was Apex. There's another firm that I also like. They are Top Step. I've had accounts and been paid by both of them, so I know that they know how to go full circle. Apex has a very high rating. Trustpilot still do. You know, you kind of, I don't have 100% confidence in it, but it's nice to know. They're always asking me, or Trustpilot, to pay them money to help to expose what I do, but somehow I think in there, when you start paying for things, who knows? But 4.8, it's a great rating for these companies. This is a zooming in on one of those little sections that I just showed you, and let's concentrate. Whoops, that arrow went to the wrong place. I know what I did. I changed this slide. This arrow should be at 50,000 right here. This arrow should be at 50,000. This is where I'd like you to start, even though I mentioned the 250 before, where I'd like you to eventually be. But here is, why do I like this? Because of this. You start with $50,000, and all you have to do is make $3,000 to go to 53,000, and all of a sudden, this test account, this qualifying account, and I'll show you the stages in a second, you now become funded. You make that 50,000, 53,000, and they're going to hand you an account of $50,000 to trade for real. Okay. Now, while you're attempting to make that $3,000, if you have a drawdown from any high in any high watermark, and that includes open trade equity. Remember, I mentioned the importance of open trade equity. If you come down from your high watermark, including your open trade equity, and you've come down over $2,500, you've busted this account out, and you have to pay for it again to start again in the testing phase. What does it cost you? It says $167 a month, but it's never been that. It's either $16. They either discounted 70, 80, or 90%. This is 90% discount. The most you'll pay is $54 a month while you're trying to make $50,000 into $53,000. That's the evaluation stage where you're being evaluated. Can you trade? There are some rules. You can't just make one trade and make it $3,000 and give you the money. They want to see a march toward an effective process that you have. They don't care what the process is, but they don't want to see you taking all of the, getting lucky and then handing you $50,000. So there are some rules. I won't go through that, but they're not abusive and they're not unreasonable. Okay, so this is not a real figure. This is a real figure, and so is all the way to $54. Now, it won't take you, if you're a decent trader right now, it's not going to take you a month to make $3,000 on $50,000. It's just not. If you're a new trader, it may take you 2 months. So you'll have invested as much as $108, let's say, in 2 months of these fees, if it's only a 70% discount. I hope I'm not throwing too much numbers at you, but all you really need to take away here is, if you make this 50,000, 53,000, you are now funded. But don't let the equity come down below 2,500 from your peak, including open trade equity, or you got to start again. Okay, so that's what that's about. So let's continue. Again, if you want, this right here is another. This is I have a relationship with Apex. Not only do I do business with them, but I actually lecture for them on the mental and emotional part. But they gave me this link for my people that I would like to send to them, that will really guarantees you the best price, advertised or unadvertised. So you can go ahead and use that if you'd like. Okay, that's the disciplintrader.com/Apex. In fact, I think Traders Corner also has a good link for you also. So we're in that same boat. We can both refer you. The 3 phases of prop trading. I've talked to you exclusively so far about the evaluation stage. After that, you're going to get funded, and when you get funded, similar numbers, only different result. If you start with $50,000 in a funded account, and you and you make that 50,000 52.6, not even if you're profitable $2,600 and you make it 52.6, you can start asking for money. It's as simple as that. Now, after you get good at the funded phase and you expand your that 50,000 to say 60,000 or 70,000, then you can consider what I believe should be your goal right from the beginning, and that is the consistent income phase, a phase where you now are where now I just took a trip to Egypt, and earlier this year I went to Istanbul, and you can request money while you're there. I'm not trading, but I got plenty of room between the 50,000 and the 60,000, say, in my account, and I can request $2,000 if I see something that I want to buy. In fact, you can request as many times as you want. I think you need to have 8 days between your requests. But it's not a once a month thing with Apex. But a consistent income phase, this is where you want to be. You don't want to be fighting in these phases to prove yourself. You want to take a few of these accounts, even 2 or 3, and you can have as many, literally, as 20 different $50,000 accounts. In fact, a lot of the traders who have managed to be making $100,000 a month, when you the way they say they're doing it, I'm not one of those people yet. I don't trade like that, like this. They use what they call a trade copier, and they'll actually have 20 accounts that make $300 in one trade, and all of a sudden they have a $6,000 day. That's a lot that we can talk about at a future date. I like to do it a little bit differently because I like a relaxed life. I don't like all my eggs in one basket. I'm more of a diversification. But there is a phase that you can reach, called what I call the consistent income phase, that you want to continue to think about as you are taking wins and losses in your trading plan. Every trading plan has wins and losses. The good ones have a lot more wins than losses, but during those losses, you can let it affect your mind. So when you keep the consistent income phase in mind, it's a much easier ride for you. You can stay motivated. Okay, so here's the highway to the consistent long-term income phase. Okay. And I'm referring to a $50,000 account. Okay, the evaluation stage. I've talked about it already. Let's put some stamps on it. You've got to get to 53,000 to be funded. You got to make $3,000. If you go below, if you suck up $2,500 below your open trade equity high, you bust out. Let me just give you a little bit more detail. Let's say I have a $50,000 account, and I have one trade on, and it's up $1,000. It's an open trade. I want more. I put a break-even stop in. The market comes down and stops me out. Now I still have $50,000. You know, so if it was my own money, I'd say, hey, I'm a jerk for, you know, I wish I had taken that 1,000. Okay, nah, big deal. Still have the 50,000. In this game, now that line is not 2,500, it's 1,500 because they count that against you. Now, some traders would say, oh, this is a rigged thing. No, it's not. This is the way professional traders act. You don't give away, you don't give away a 2 or 3% gain in a single trade because you want more. What I like to do, and what I think you should do, is have a scalping element so that you can continue to take money and pad your distance between that 2,500. But that's another discussion. Again, the evaluation stage, you start with 50, get to 53,000. Don't fall below 2,500 of any peak, including open trade equity, and you're going to get the money to trade. Okay, so have a scalping element in your trading plan, I believe, to keep that pad. In my lousy example, if you had 2 contracts on and both were up $1,000 and the market came down, or both were up $1,000, you took the profit on one of them and you let the other one go to break even, you'd have a $51,000 equity because you did take 1,000 of the 2,000 you had, but the 1,000 that you let go would offset the 1,000 that you took, and therefore you'd still have that floor of 2,500. Again, maybe that's higher math, but I think you understand what I'm saying. Having a scalping element pads your distance to the $2,500 line. And I got to tell you that the reason traders fail in this is the angst and the cortisol level that occurs in your body that makes you do stupid things like get too aggressive or too careful or whatever. You don't want to be near that $2,500 line. So right from the beginning, you want to do the things that keep a nice cushion between you and that $2,500 and let your account build in that way. Okay. So again, to open an account right now, it's anywhere between $16 and it's actually $50. It's more like $54. Okay. So it's very inexpensive. Don't let these small fees stop you from continuing to vision what I've asked you to vision before. Okay. Again, if you bust out, you can reset. You don't have to open a new account, but you can reset the one that you had. And right now, they say it's $80 on list, but it's always been $40 or $45. I've seen it as low as $35. So it's cheap to reset. But if you're a trader that's struggling and you keep paying them $50 and $40, all of a sudden, you're up to $1,000. Now, that's okay, because once you get, if that's your training cost and you start to get funded and you get funded and start making money, that $1,000 is easier to recoup. So look at it as payment for a business that you're in, because if you're looking at this as anything other than a business, you're looking at it at the wrong way. When you prop trade, you are becoming a professional trader. You're not trying to be a trader. You're not taking a shot. You're not seeing if it's for me. No, you're doing nothing. That you are committing to develop to be a professional trader, a winning professional trader. If you don't have that commitment, do not do this. Do not trade. Okay. Very inexpensive to test. Be aggressive. May make sense to an experienced trader. If you're very aggressive and you keep blowing out, and you have plenty of money, you can get past the evaluation stage pretty quickly. It's not recommended for a trader who's struggling with their own accounts and so on. Use the evaluation stage instead of the demo stage. I've written a paper last year, on the death of simulated trading. Why simulate trading when you can trade in an evaluation account? And if you're good at it, you get the payoff, which is a funded account. All right, so passing $80, once you pass, you're asked to pay either $80 a month to trade your funded account or $140 a lifetime. As I mentioned, I just passed a 25 and a 250 yesterday, and and in signing up to now trade the $250 to get rewarded, I have to choose these. Well, it wasn't 140, it was only $85 for some reason. So these are maximum numbers, okay? And now I have $250,000 to trade that I get 90% of the profit. I actually get 100% of the first 25,000. So all of these numbers, I don't want to confuse you, but you're getting the lion's share. But you gotta prove that you can trade. And don't worry about them. They're making money, because still 85 to 90% of people who enter this game are losing and just paying fees. But that's not going to be you, because you're going to recognize the value of the mental game in this, and infusing the mental game into a trading plan so that you don't even have to think about it. So the only choice really when you pass is lifetime. Why? Those who pay $80 a month don't have confidence in their system or that they're going to last. So there's really no choice here. Okay. Let's go into the funded phase, because we only have a short period of time left. You've got to build that 50,000 to 52.6, as I mentioned, not even 53, but 52.6. Once you do that, you can start withdrawing money. Now, but also there's a $2,500 red line. It's just as it is in the qualifying phase. However, that red line doesn't move. Okay, at 52.6, that red line is at 50,100. Once it's at 50,100, it never moves. So if you build this account from 52.6 to 62.6, okay, now you've got a nice $10,000, $10,100 before there's a red line. Now you can really start trading with larger positions, with larger risk, and really start making some money. This is where that consistent income phase comes. Okay, so if busted out, you have to revert to the evaluation stage again. So you don't want to bust out a funded account, but you also don't want to be too careful, because if you're too careful, you won't trade properly. Okay, too careful means lack of confidence. Trading, adjusting your position size because of the opportunity that you see on the chart, that's one thing. Okay, getting scared and going small is another thing. Getting close to the red line and saying, I'm just going to get aggressive, what the hell, is another thing. You are now a professional trader, okay? Now, you should trade conservatively in the evaluation stage, okay? You can withdraw anywhere from $500 to $2,000 in the first few months. Actually, I think it's 2 months with Apex. It's different with other firms. But after you have withdrawn for a couple of months in a row, even once in this month and then once in April, then there's no limit to how much you can withdraw. I can build my account to 60,000 and ask for 5,000 if I want. Okay, so there is a withdrawal range in the beginning, but it's lifted after a while. So be conservative with withdrawal in the end, because again, your primary goal is to build up that equity from 50 to 60 or 70 so that you don't have to worry about that red line and you can start trading more freely, okay? You may withdraw again at any time. I think you need an 8-day, they change the rules from time to time, but I think right now you need 8 trading days between requests for money. Whatever, small point. Now let's get into real quickly the consistent income phase, and then I'm going to give you an offer that I know you've never seen before, the way I've constructed it, and I think you're going to want to take advantage of it. I can't do it forever, but I want to do it now to see how your response is. I did it once, and the response was great, but once is not enough to really test a new idea. So I want to show you that you've never seen my offer before. So a consistent income phase, this is that third phase. You can, once you withdraw again for 2 consecutive months, there's no limit to the number of times you can withdraw. Now, the goal after the no limit is achieved is to continue to build the account and keep the minimum withdrawal so that these $2,000 to $5,000 biweekly withdrawals, whatever, can continue even through less successful trading periods. That's some word salad that says what I've said before. If you build it up, you can take out more and still have plenty of cushion between you and the red line. So you want to build it to 60 or 70,000 so that you have plenty of room. Okay. I think I've given you a pretty good picture. One of the things that I offer is one-on-one consultation with me. I'm going to make it a bonus here for you so that once you learn my trading system, and it's a simple trading plan, I believe in simplicity. I think that's important with any trading plan. The simpler a trading plan is, the more likely you are to follow it. The more you have to look around at volume and crossing moving averages and whatever, the more you have to look at, and RSI and MACD, the more you have to look at, the more you can't focus on the core trigger that gets you in or has you take a profit or has you put in a stop. You can't run the mechanics of placing orders and scaling in and out of a contract when you're looking at too many things. Simplicity, and I know this from that room that I ran. Okay, so this is prop trading firms can fund you up to $300,000. I like the 50 and I like the 250 for reasons that we can discuss at some other account, and you can earn as much as 90% of the profit. In fact, on any of these accounts, they'll actually give you 100% of the first 25,000. Why do they do that? To make it even more attractive to you, to everybody, because if you can get past the evaluation stage, which you can almost do if you're lucky in some respects, but once you're in the funded phase, the luck leaves, and you really have to act like a professional trader. They know that you're likely not to. Now, you've already paid your $140 to be in the funded phase, so they've gotten a couple of monthly payments when you were qualifying, and then you got another 140. You're still not a professional trader. You got lucky. You have to go back. You bust out. You have to go back to the evaluation stage. And what's the result? They picked up $250, and you're trying again because you were in the funded phase and you want to do that again. It's all a magnet. It's a suck of getting you in, and that's okay. That's okay for the professional trader. It's okay for a trader who is willing to learn and to be a professional trader and act and have a trading plan built by a professional trader that can guide you simply to be a more professional trader. They're looking for people who don't take that route and just say, I can do this, and have the big ego and don't recognize the fact that they have to look inside as well as outside in order to succeed. So they're just taking all their money, but giving him a great opportunity. They're giving him an opportunity, but all they're doing is paying fees. That's not you. To be in the 10%, you have to have a trading plan that recognizes all of this. And I know nobody better really than somebody who's run professionals who are responsible for other people's money and needed trading plans, who's written books on trading plan. I can help you with this if you allow me to do so. Okay, that's my goal, to help take a retail trader and morph them into what it takes to be a professional trader. I have passed, many of these. They send you certificates when you pass with both Top Step and Apex, and once you start, this is the first one that I took. It took $1,000, and every time you take money out, they give you a certificate. But let's get to it so that I've got about 10 minutes here to show you exactly what I'd like you to consider. I think you've got a pretty good grasp of the potential for those who get serious about this. Listen, as a retail trader, there's really nobody to be responsible for except for you and watching your money, and maybe having your significant other get upset because you keep trying to do something that's not working, and you keep saying, just give me one more chance. You take 2 years off and then you ask for another chance, but you haven't changed anything, so the result is the same. I run into that a lot, and I've turned around relationships and I've turned around results for traders with paying attention to operating and acting like a professional trader. I mean, professional traders are nothing more than a trader who follows specific guidelines and rules and does it with intention and focus, okay? So for passing the prop trading evaluation and getting funded and paid on a consistent basis, I want you to consider owning my loaded gun simple trading plan. I call it loaded gun because the basic trigger that we use to enter a trade looks like a little gun. My wife hates that name, hated when I put it on, but I know that traders and people like action names, and you got to name your product something cool, so I named it Loaded Gun, and she's still unhappy about it. Anyway, in the Loaded Gun Simple Trading Plan, you're going to get the core Loaded Gun Trading Plan. Okay, it's really constructed of a series of videos. There's not a lot of them. There's only 2 basic videos, and they don't even add up to an hour and a half. All the rules fit on one sheet of paper. You'll download the piece of paper, and it'll how to get in, how to get out, what you should watch for. It's all on one sheet of paper. It is a simple trading plan. Again, I am convinced, and I know from personal experience and those that I've coached in those trading rooms and over the internet now for almost 20 years, simplicity is going to work for you, okay? Also, I include what I call nuances. Now, nuances are small adjustments that you can make to the trading plan or at moments of time in your trading that fit you as an individual. And I say that because every trader is different. And one of the things to be a successful trader is you have to honor and respect and inspect first who you are and your weaknesses and strengths. And in your trading plan, you need to play to your strengths and try to reverse or soften the weaknesses. That's what the nuances are about. I'll give you an example of a nuance. This is not an exact nuance, but it's something that I teach, that if you are somebody who has a problem with patience, and I'm one of those people, I was one of those people. If you have trouble with patience and you're waiting for the setup to happen, it's not happening, it's halfway through the trading day and you can only trade for 2 hours, you start looking for what I call A minus B and B minus trades. You don't want to do that. So there are things that you can do in order to expose more triggers in the trading plan that you've already seen works if you follow it. Okay, and that is things like lowering your candle size. In other words, if you trade off a 5-minute candle chart, go to a 2, go to a 3, go to a 2. A good trading plan will also be just as effective with a lower time frame than a higher time frame, but it will expose more. You can also look at different more markets at the same time, no more than 2 or 3, especially 2 if you're just starting out. But looking at 2 markets doubles your chances. So I am all about finding out who you are as an individual and then adjusting the trading plan, suggesting some of these nuances for you so that you can be a more successful trader without having to have the trading plan fit you instead of you working on your mental state. And you really should be working on your mental state too. But I find that traders, most are too egotistical to do that. And therefore, I've included these nuances to help you along anyway, even in your ignorance. But I didn't insult you there. All right. The videos, there are 7 right now nuances. You'll inspect them. We'll look at them together. We'll see if I suggest or anyone fits you. But again, nuances, you won't see this again. Why? Because I made it up. Nobody does this. Nobody even cares about the mental part. I do. So simplicity and making the trading plan fit you. And all of these nuances, one of the conditions is it doesn't increase your risk profile to any great extent, 1 or 2 or 3 or 5 ticks or whatever, but it still keeps you within these per trade parameters that I would like you to follow as far as loss capabilities are. We have monthly get-togethers. Every month, we just had one yesterday. Every last Wednesday of the month, we get together where we share our experiences, our winnings, our struggles for new people if you're still struggling. I give you some updates on some of the nuances I'm working on, some of the things I'm working on. If you can't be there, it's a recording, but it's really just a loaded gun owners party that we have. It's every month. It's usually about an hour. Yesterday was almost an hour and a half because I had a number of things to say. In fact, I cried at the end of it, believe it or not. I get so emotional about wanting you to win. Not proud of that. I don't know if I'm proud of that or not. All right, here's one of our charts look like. I mean, these arrows are some of our the signals, but this is simplicity. This is simplicity. I just want to flash it at you and show you the kind of charts. You don't see a lot of stuff on here. You don't see a lot of work. This is the chart we work off of. All right, let's work together and make this happen. Here's bonus number 1. For the first 90 days that you own the Loaded Gun Simple Trading Plan, you and I can get together as many times as you want. I want to give you 90 days of unlimited private one-on-one Zoom coaching with me. We'll get on a Zoom call. You have my calendar. You'll book a call. We'll get together. One of the boxes is me. One of the boxes is you. And I'm going to find out. We'll share our screens. I'll share mine. If you want to share yours, show me what you're doing. You have a question about the system. I want you to get it down pat. It's a simple system, but I can't tell you how many times people will somehow try to bend a simple system based on what maybe worked with them before. And if that's the case, I can help you to infuse that in what you're doing. I have a lot of experience with any trader doing anything in any system. So, but I want you to marry this simple system that I'm giving you. If you want to infuse stuff, a lot of maybe a third of the people do it, but I'd like to know what you're doing so that I can help you to say whether it's going to hurt you or help you. But just following what I give you is not only good enough, but all you probably should be doing in my estimation. 90 days of unlimited private one-on-one coaching. In fact, it's important to note that the 90 days that I'm talking to you about starts with our first meeting. So if you were to purchase on the special deal that I'm going to give you that you've never seen before, if you purchase it today, because it's only a one-day thing, one-day offer, because this offer is experimental. If you purchase today, go ahead and look at the videos and get a sense of it. Look at some of the past get-togethers. They're all recorded. Get a feel for this simple trading plan, and then book your first meeting with you. That's when the 90 days start, not when you buy. Okay, your 90 days start with our first meeting. Okay, so that's the first bonus. Okay, I'm not going to give values to this. I mean, I did, but this is very valuable because I think I know traders, and my thing is helping you. My focus is helping you. I'm going to be with you there every step of the way as you perfect this simple trading plan and be and act like a professional trader. Mike said I passed an Apex 100 eval in 4 days, with loaded guns, scalping, but a few runners. I like a scalp and a runner. We use that combination. I don't want to take off the the possibility for a nice big trade, okay? That's what we're here for. Mostly scalping, but a few runners brought it home. Still have a few trading days, but he made $6,000 in 4 days this week. He loves the plan. He was a good trader before. I think he's a great trader now. And Tisha is in charge of the mental work that we do. Sandra said, I'm making some progress now. It was some critical situations at the beginning, but she's making progress. She credits my guidance and my voice in her head. I now have 3 funded accounts with Apex and requested my first small payout from 2 accounts yesterday. So she's already taking money and she's doing that now. And here's Pat. He runs our trading room. I don't supervise this trading room. Pat is a loaded gun owner. He's had a lot of different, you'll see his testimonial when you look at the offer page, but he's bought just about every program out there. And this is the best that he's seen. He's been there over 30 years. He spent $35,000 on companies, and he's listed them here. I forgot he listed them in his. All of these, I found nothing that compares with loaded gun. Look, some of these people are Hubert Centers is a smart guy, and you know, I know a lot of the Vantage Point. These people have been around, but I believe that maybe their system is too complicated for somebody who's making the transition from retail trader to a professional trader. So, but simple makes that transition for you. Loaded gun is so easy, very easy on the eyes to find signals, good customer support. That's me. If you trade on the ES, the S&P, for 8 to 10 in the morning, you're gonna find and make the significant money. That's when he runs his trading. He runs it 5 days a week. Loaded gun is the best thing he's ever seen, worth far more than what you spend. He's blessing me, and I appreciate that. Pat Fail, you'll get to meet him if you decide to do this and you want to be in the trading room. He runs our trading room, okay? And the second bonus I want to give you is I'll set it all up for you. If you're just starting, you know, if you have it all set up and you have your data feed and you have Ninja Trader, which they give you, so none of that costs anything with these people, then you may not need this. But if you're just starting, sometimes the Apex and Top Stats, they have a more advanced setup, can be confusing to people like me. So I'm going to connect you with my young genius. His name is Brady. He's going to jump into your computer, set everything up for you, and all you have to do is start trading. I'm saying, and now Roger paid the $150, which is a service that we offer that I send Brady over. He said, all in all, it went well. Brady is obviously skilled. His cursor darted back and forth, ended up feeling like it. I'm giving this to you. I want to get you all set up to go. You'll have the trading plan. You'll have some meetings with me. You'll have the platform. You'll have the data feed. You'll be ready to go. I want you to get going on this, okay? You'll have access to the trading room. Pat runs it 5 days a week in the mornings. 3 of the days, Monday, Wednesday, and Friday, he runs it for all traders. Tuesdays and Thursdays, he starts talking like a professional trader and uses big words. So it's only for advanced traders. You'll have access to that. So, and here's my guarantee. I'm so confident that you're following the loaded gun simple trading plan will result in you getting funded by a prop firm so that you risk their money, not yours, receive 90% of the profit. Just share your experience with me that you follow the simple rules, and I'll give you your money back and plus $500. It's never happened. I don't expect it to happen, but you have it for you. All right, here's what I offer you, okay? The loaded gun simple trading plan, okay? The coaching for 90 days. I'll set it up for you. You'll do the trading room. It's a total value of $56.47. I just added up everything. Don't worry about it's got a high value. I think you can see from other people's offers and my experience and what my value is. It's only $14.97. I'm cutting it about 70%, but I'm doing more than that. This is the part you've never seen before, okay? All I'd like you to do is invest in yourself. Even half of that now, $745 now. That's it. You got to have some skin in the game. I'm not going to give it to you free. $745, but I am going to give it to you partially free. Okay, and then I want the other $745 from your profit. Okay, I don't know anybody that even gives part of what they're offering and allows you to pay it from your profits, because I don't think they have confidence in their system. I do. I believe I'm going to get paid. It's the honor system. I'm never going to ask you for the money. I am never going to mention it. I'm going to forget about it as soon as you purchase. It's on you. But I think you're going to want to pay me. From my experience, I know you're going to. I really believe that you're going to want to pay me. I don't believe I'm going to get screwed in that. So listen, and I'm not even looking to get screwed. The bad word, I take it back. I trust you, you trust me, and this is my way of showing it, okay? So all you have to do is go to theirmoneyyourprofit.com, use the coupon code March 27th, okay? Theirmoneyyourprofit.com, use the coupon code March 27th. Let's do this together, but it's only it's only good for today because this is experimental, okay? This whole idea of paying half through your profit, it's never been done before. I've never done it. I've never seen it before. But because of my past experience with those that are trading it, I'm willing to make this offer confidently that I'm going to get my full payment. I'm going to get my full discounted payment. So that's my offer to you. I hope you enjoy this. I hope you see the potential, and I hope you see this is not for everyone. So I appreciate, Anthony, the opportunity to present this because I'm really passionate about getting people on that last stage of long-term income. Thank you again.
Thank you, Norman. I know you're very passionate, sincere, and you know what you're doing. Can you put that in the chat box as well? I wasn't able to do that. Can you put your
okay, we'll do.
code and HT? Thank you so much. Thank you, Norman, for that incredible presentation on the basics of prop trading. Your insights into what it really takes to succeed and stay consistent in the prop world were invaluable, really. And thank you as well for the generous offer you've made available to our audience today. Traders, be sure to check the chat box for the special link. Norman's putting it in it now, and take full advantage while it's still available. You know, it's a great opportunity now because markets are kind of slow. I think what he's offering right now might be really great time. Now let's keep the momentum going. Up next, we're bringing on a trader and educator who is all about turning strategy into income. Casey Stubbs of Freedom Income Options will be joining us to present how to replace your paycheck with options trading, a proven strategy for consistent weekly income. If you've been looking for a roadmap to generate consistent income with options, this is the session you do not want to miss. Let's welcome Casey Stubbs to the summit.
Hello.
How are you?
Hey, Casey, are you there? Hey, Casey, Norman.
Norman, I was paying attention to your session.
Listen, I just got to tell it, you know, that room that I showed you before, that was a room full of options. And if you want a guy that knows options, this is your guy. I mean, not only is he handsome and can somehow pull off that whatever that beard is, but he's a great guy too. So if you're into options, don't go away.
Well, thanks for the plug, Norman, but I think you lost the entire audience when you said I was handsome. Okay, gotta love Norman. Norman was one of the first guys I met when I got involved in this business, so he's a great guy. Okay, I'm trying to share my screen. Are you guys seeing anything yet? Let's see here.
We see your PowerPoint.
Oh, you did? Okay.
Please confirm. Yeah, no, you have it right now. You have it up, I think.
Show screen.
It's just not in presentation mode.
Okay. All right. So tell me what you see. Everyone in the chat, tell me what you guys see, because I can't see what I see. What do they see? Can you guys see? Tell me what it says on the. Tell me what it says on the screen. Anyone? Oh, okay, wait. Paul says the presentation freedom income options. Okay, all right, great. We'll just go for it. All right, everybody. Thanks for being here. My name's Casey Stubbs. Freedom Income Options. Replace your paycheck with 1% weekly returns. A proven options trading system to create income in just 1 hour per week. So, disclaimer, trading has risk involved. Not every trade is a winner. You can only risk money that you can afford to lose. Welcome everyone. I'm so excited that you're here. So I want you to think about this. What if you could stop relying on a job and replace your paycheck in just 1 hour per week? I'll show you how I've done this and how you can too with the Freedom Income Engine. So this past Monday, all the members and I took this trade together, and it was 1.4% or $366 in just 4 days, or you could even say it was 367% annually, because we did this 3 times every 4 days. And so yeah, this is what we do, and this is how we did it, and we're rocking and rolling. And I just did another trade this morning for another 200. So this week has been phenomenal, and the return on investment is amazing. And the way I design it to work is I only am trying to do just 15 minutes a week in trading. But the problem with that is it's so easy to make extra money. I always pop back in a few times. You know, I jump in even though I'm only supposed to jump in 15 minutes a week, I jump in a little bit extra just because I like to get extra money, even though I don't need to. So anyways, the point is, we've designed this without spending all day staring at charts or taking huge risks, because I know a lot of people are time crunched, right? A lot of people are time crunched. So that's what we've just done. So I want to give you guys a little bit of background on how this thing. So I'm going to talk about me, about this guy. This guy's named Me, and this was me in the military back in 1999. I was in Kosovo, and I was on the radio. That wasn't my job, but you know, they knew that I liked to talk a lot, and so here I am now behind the mic still. 26 years later, still behind the mic. But I'll tell you about what I was doing. So back then, I was on a deployment, and I was in the military, and I was making $200 a week. 200, right? Think about that, $200. Now we know that inflation has changed the game a little bit. $200 is like absolutely nothing nowadays. I mean, I think that nowadays they're like, you could see my rank. For those of you that know the ranking structure, I was a specialist and I was making 200 a week. I think specialists now make maybe 500. I'd have to go look it up, 500 a week. But anyways, the point of sharing this is because I learned this system as a very young man in some respects. I didn't learn the whole thing. It took a lot of years, and I'm going to go through that. But I put $200 a week. I had it, and I put most of my money in the markets. And, you know, I was on this deployment. We didn't have internet. The internet was around then, but where I was, there was no internet. Like, we were way out, you know, on a deployment. We had no access. We didn't even have cell phone access. But what I did have is I had a satellite phone, and I would call my broker, and I would say, it was E-Trade, and I'd say, buy this, buy this, buy this. And I'd use the satellite phone. And so I was trading without any news, any information, nothing. I was just calling on the satellite phone, putting most of my money in the market. Well, the funny part about that was that by the time I got out, so I joined the Army in 96. By the time I got out, which was in 2000, I had over $30,000 in my trading account. And it was like, what? A 23-year-old with 30K? Back then, that was good money. That was probably 60,000 in today's money, to be honest. So that was enough to get me started and to actually have me quit my job and trade full time at 23 years old from trading, from collecting income from trading. Now, I wish I could tell you that that's what happened, but what happened was not the same. Disaster struck, okay? And so what that means is that I was young and dumb. I was smart because I put my money in the market, But I was dumb because then I got a little bit crazy and I ended up taking the whole thing out and I started a business. And that business ended up crashing and burning. And so the good news is when you do new stuff, you crash and burn, you learn a lot of valuable lessons. So if there's anybody here in life that's learned valuable lessons, you know, raise your hand. I'm sure that that we've been there. So we either learn or lose. And when I lose, I learn, and I'm always growing, right? I'm always growing and I'm always improving. And as a result of the pain, I've learned a lot of things. So I took it all out. I started a business, the business crashed, and then I had to start over again. And I did the same thing. I grew it back up, and this time I got it even bigger. And guess what? I thought I had it made, but then more stuff happened, right? Life got in the way. I made some personal decisions that weren't real wise, and I had to pull all the money out, right? I built that thing up, enough money to live off of with my system. But of course, I made some more some more problems, right? And then guess what happened? I did it again. But this time I didn't make stupid mistakes in life and had to pull it off, but I got really risky and aggressive, and I thought that I could turn that thing into unlimited amounts of money. So I grew it up, and then I blew it again, and I dropped it down to nothing. Okay, so I've done this through the course of my life so many different times. So I hope that you guys cannot relate to this story at all, but that's my life, okay? And it's a little embarrassing at times, but finally, after many years, I finally said, you know what? I don't need to do that. I don't need to do that anymore. I finally wised up. So now I'm trading a strategy that did a 93% win rate last year. It's absolutely amazing. And how do we do it? Well, it's a simple system that delivers 1% in just 15 minutes a week. And the goal is to protect your portfolio and profit from downturns. Strategies that will help minimize losses and maximize gains. Now, take a look at this chart, okay? Now, I wish, and I was talking with a friend on Tuesday, and he's older than me. He's probably he's old enough to be my father. And so fortunately, I've still got some good time in my life ahead. I'm not that old, but he was sharing with me, and he's like, you know what? I'm so haunted by the past. I always look back and I'm like, oh man, these decisions that I made, I wish I didn't make it. What if I would have done this? And it's like, you can't look back at the past, guys. You've got to start today changing the game, okay? I look back at my past and I'm like, oh my goodness, I am a train wreck. But I'm not going to do that. I'm looking back now to tell you guys, hey, I made some mistakes. But then I look ahead and I'm saying, I'm going to start over. And it's like, oh no, you got to start over. Well, I've started over 8 times. I think I can do it again. But next time I'm not going to do it. But I feel like in order to avoid that regret and not look back, is you got to find purpose in the circumstance that you're in right now, right? And so if you're trying to my focus is on replacing income. And what I mean by that, this is a chart designed to help people replace their income. Okay, designed to help them replace their income. This is designed to help you replace your income. And how do I do that? Well, we just start somewhere, right? We start somewhere. So if you have $10,000, we go for 1%. So that's $100 a week. You know what? $100 a week, that's good money, right? Back in my day, when I was in the Army, I made $200 a week. So I'm already ready there, right? And it's so funny because, and again, I'm not looking back, but it's so funny because I was making $200 a week, and by the time I got out, I had 30K, which is 3 200 a week, I had already done it. I already accomplished my goal of replacing my income at a 23-year-old, except for I didn't have the emotional wisdom or, you know, the decision-making wisdom that I do now. I have gained the wisdom because I made a lot of mistakes over the years, and I have kept growing and kept pushing, right? So anyways, here's the chart. I could have replaced my income at 23, but maybe now you could have done it at 23, but maybe now you're 56 and you're getting ready for retirement. I want you to replace your income now so that you can be ready for retirement, right? That's what I do. I help people replace their income. So wherever you're at, there's two things you need to know, okay? Two things you need to know. Number one is you need to know how much you need to replace. So if you're in retirement and you're like, okay, I need 2K weekly, which is 8K a month. Well, how much do we need to do? Well, if you need 2,000 a week, we need to get to $200,000. Okay, 200,000. So right here is 200,000. Okay, right there. And so if you start at 10K, boom, and you make 1% a week, you're going to be at 200K in 5 years. Now, if you need a little bit more than that, you need 10K. Well, there's 10K, 1 million. You need 10K. That's $10,000 a week, $40,000 a month. Okay, boom. Right? Do you need 40K? I use that number because I got a big family. I'm not a luxurious guy. I don't like have a yacht, but I have a big family, which is like I need a yacht to get them around. I got 9 kids. I live with my mother-in-law, so we got 12 people in one house, right? We need some cash. Okay, so my number is 10K, right? So I don't know what your number is, but you need to know what your number is, okay? Then you got to figure out what you're going to start with. So some of the people that I've worked with have been able to replace their income in as little as 1 month because they're like, you know what, Casey, I have 200K in my retirement, but I'm not retired yet. I'm going to retire in 5 years. I need to replace my income. And I'm like, well, what do you need? They're like 2K a week. And I'm like, okay, well, let's do this. And we have literally been able to replace their income in 1 month. And they're like, wow, I'm not even going to retire yet, but I'm still going to get this extra income, right? I'll retire in 5 years, but I've already replaced my income in 1 month. By the time I actually retire, I'm going to have doubled my income, okay? So my mission, I actually have a real mission. You know, I said, when you start over, let's find a purpose. What's your purpose, right? I want you to think about this. What's your purpose? So I talk to my clients and I always ask them, I say, what's your purpose, guys? So and I do calls, you know, if you end up signing up with me, you'll get on a call and I'll be like, what's your purpose? And so one of the guys I just talked to this week, he's like, well, I'm getting old, so I want to teach this to my kids and I want to have them be able to have the money to be able to run this replacement income strategy. And all I'm going to do is learn it and I'm passing it off and I'm handing it off to them. And I'm like, that is a good purpose. Okay. You know, another person, you know, was a working mother and she really needed to have more time for kids because her kids were little. Well, you know what? She didn't need a lot of money because her kids were little, her expenses were low. She didn't need that because she didn't have a big job. So it didn't take her long to replace her income. Okay, this doesn't necessarily going to take you a long time. It could take you 9 years if you need $1 million, if you need 10K and you're starting at 10,000. Yeah, but there's other strategies that we work on. We could do what I did, right? Remember that picture I showed you guys where I was like young and really aggressive? Norman Hallett would have said I was young and handsome. But I put money in every single week. We can do that. We can do that. We can accelerate this by putting money in every week. And I also have another strategy that I teach that helps people replace their income even a little bit faster. because it's one of the bonus strategies that I use. So we are on a mission to get 100,000 people to replace their income. And I'm serious about that, right? I am not going to stop until I hit my goal. And when I hit my goal, I don't know. I might bump it to a million people. Who knows? But we're changing the game here for people. All right, so freedom income option traders, we have a secret, and that is that we're not trying to time the market. We're not trying to make amazing trades. We're not trying to do anything. All we're trying to do is replace our income with weekly gains. Simple option selling to make a 1% per week. And to be honest, you know what? We do this. We do this. It's not really for traders, guys. It's more for regular people just like you, just like me, for people that want to replace their income. So what if you could replace your paycheck, right? What if you could do that? Not by guessing, not by gambling, but by following a simple, repeatable process. And I call this the Freedom Income Engine, right? So I'm on a mission. I've said that before, right? I'm on a mission to see 100,000 traders replace their income. And I've been trading the markets for 30 years. This is a little bit older picture of me. And this even is older now. You guys can see me on my camera. I'm a little bit older than even this. But I've been trading for 30 years. And in that time, I've discovered the path. And I've been training and educating for 15. So half of the time I've been educating. But I was making a crucial mistake, and I kept making things complicated. That went along with the disaster story I told you guys earlier. I kept trying to find and master some of the most difficult trading strategies. And I was also going for home runs because I love home runs and I love complicated. But here's the funny part. The simple escape method was available to me all along, but I just needed that moment of wisdom and clarity to discover it. I think what had to happen is I had to land on my face enough times to say, okay, Casey, this was fun when you were young. Actually, it wasn't. It was fun with the stupidity, but it's not fun anymore. You know, the self-destructive methods. I gotta just do this now. This time, you know, sometimes you just gotta have that moment of clarity and something clicks. It just clicks. Like, okay, I'm not doing this anymore. So the simple escape method was available to me all along. And so now my goal is to help you replace your income with options, because when I had my moment, I began a journey and I'm like, okay, I'm starting it with everybody else around me. So let me explain how I'm going to do that. The problem was that it was too confusing and it was too hard for the average person, right? Again, you can see by my history that I'm not the sharpest tool in the shed, right? I'm not the smartest man around. So I had to make it simple for myself and for everybody else that I was trying to help. So people didn't know where to get started and they didn't know what they needed to do to become successful. Sorry about that, was my phone. I had to figure out a way where it was simple for the average person to understand. And I had to unravel the mystery and make it known so that anyone could follow along. So to do that, I built a simple system. And I came up with something that I call the Freedom Income Engine, and I had to come up with the following pieces. It had to be consistent. It had to have a high win rate. It had to be so easy that a child could follow along, or someone like me, a hard-headed man, a stubborn hard-headed man. It had to be fast and require minimal time since people are busy and they have packed schedules. It had to have a growth component so that people that didn't have a lot of money could participate, right? So like I showed you on that Freedom Income guide graph where the price was going up, we had to get you to your number as fast as possible. And so when you start working with me, you're gonna go through the education, which doesn't take too long, and then I'm gonna get on a call with you and I'm gonna be like, we gotta get you to this point quickly. How can we do this? Okay, so, and finally, I had to make sure that it would work in all market conditions. And there's a picture of a bear there. That means bear market, a picture of a bull, meaning bull market. And the symbolism is that it'll work in all market conditions. See how I came up with that image? Probably didn't have to explain the symbolism because you guys are smart enough to figure it out, but that's why I did that. So I got to work on my most ambitious project of my entire career, and I came up with the Freedom Income Engine. And it's built on 5 core pillars: high win rate, risk control, weekly compounding, and it had to be done in 15 minutes a day or an hour a week. Simple, simple, simple. And it had to have a high growth component. To prove that this works, I'm going to show you some real trade examples. I actually didn't put any others other than that first one, but wow, I've done really well with this. So imagine stacking gains week after week. It's like, wow, okay. So it's really powerful. It's amazing. And I want to help you. So you might be wondering, how do I know this works? Well, here's the thing. I've spent 30 years in the markets, and I've interviewed hundreds of the world's top traders in the How to Trade It podcast, which I recently rebranded to the Freedom Income Engine. Why? Why did I rebrand? Because I learned the secret, and I didn't need to talk to traders anymore, because now I'm just highlighting the success stories of my options traders. I'm highlighting the stories on my new podcast on how these traders were able to replace their income. But during the process of interviewing the world's top traders, I discovered the secrets, okay, including Tom Sosnoff. You know, Tom's one of the world's leading options trader. I'm sure you guys are familiar with him. You know, I got some of his best secrets, and I'm applying those to this system that I'm teaching. I'm also the author of The Complete Trading System. Love that book. Been hearing so many great reviews on it. It's been exciting for me to be able to help people, right? So during the course of my career, I've been searching for the best way to find income replacement. And so I built this system after testing everything. And this is what actually works. It's not about getting lucky. It's about not being stupid. Ding, ding, ding. Can you not be stupid for a change? Not talking to you guys, I'm talking to myself. This system stacks the odds in your favor, and it's the only system designed for long-term sustainable income. So it's not just about making a little bit about money, but it's about freedom. It's about putting that smile on your face and waking up doing the things that you love to do, and knowing that your income's not tied to the J-O-B, right? The J-O-B. Imagine having more time for your family, being present with your kids instead of being stuck 9 to 5. Look here, I have been able to travel the country. I've been able to travel the world, but I've been able to travel the country with my family. You know, my kids and I have been outside of the United States together, and I remember I said I had 9 kids, so that's a pretty big group. Also, we've been in all 48 states. I would get in my van and drive from Pennsylvania to Oregon every single summer. I would take over a month on vacation, visiting the country and then visiting my family, right? This is the type of freedom, having some fun, being present. I use the word there, being present, because a lot of kids, unfortunately, their parents aren't there for them. They're either working, but maybe sometimes they're just even engaged in their phones or whatever. Like, I can't talk to you because I'm playing Candy Crush, or I'm doom scrolling YouTube shorts and I don't have time for you. You know, one of the greatest gifts that you can give your kids or grandkids is just being present with them. You don't even need to be talking, but you need to be paying attention and listening and just having that influence. I can be 100% honest with you that my greatest influence was my grandparents. They would take me on hikes, and they spent time with me, and they were a blessing to my life, and that impact has never left me, and I am so thankful for them. So I know that a lot of times the groups in here are a little bit older, but even if you're not, this is an important lesson. The influence you have on your grandchildren is remarkable. The influence you have on your children is even more powerful, but there's just something special about it being a grandparent. And so I'm sharing that with you because I'm just telling you, find a way to invest in the lives of the people who are relying on you, okay? And you can have an impact that is greater than you'll ever know, okay? So make sure you guys do that. Imagine traveling whenever you want or without worrying about vacation days or asking for permission. Imagine the unlimited upside to growing your account from a small balance to possibly $1 million trading fund. I mean, that's what's possible. This is possible when you understand how to pull 1% from the markets. The best part is it's scalable. Once you master the system, you can go from making 500 a week to 5,000 to 50,000 per week. I mean, it's really growth focused, right? You can grow this. But again, to me, this is not what I'm targeting here. I'm not targeting this. Most of our people don't target this. Most of what people are targeting is just the freedom, right? Freedom or income replacement, right? What do you need, right? What number do you need? And not that we're not going to keep growing, because we do, but that's not the focus. The focus of this is not money, right? The focus is not money. The focus is being able to influence people in your lives. So that's the power of compounding and the power of having a system that works. And this is exactly why most traders fail, is because they don't have a system, right? Now, to be clear, it's not get rich quick. You already saw that, right? Now, come on, it's going to take some time, but think about it. If we could get you to replace your income in 5 years, that's kind of get rich quick, really. I mean, because you might have been trying to do this your whole life and never accomplished it. So to replace your income in just 5 years is great. And in a lot of cases, we can do it even faster. So I want you to be thinking about this, and I would love to be able to help you with it. So once you start to get compounding, you're going to see the power, right? You get excited. And that's why I built this, right? It's built on one simple truth. And this is a little formula that I go with in my life, and it's called small high probability trades executed consistently create sustainable income, right? It's like a little formula for success. Star this bad boy, right? That's it. It's the formula. Small high probability trades executed consistently create sustainable income. That's why my system's designed to target 1%, no more home runs, okay? So you guys already saw this chart, 1% growth. It begins to accelerate, right? And again, we're not necessarily targeting these numbers. We're just targeting freedom. We're targeting replacement. What is your replacement, okay? So you can compound those gains week after week. You go from 500 to 1 million, and that's what I'm going to teach you. Now, here's the fun part. I want to make it real for each person here. Each person needs a different amount to replace their paycheck. Every single person does, right? So let me know in the chat, what's your replacement number? What do you need to replace your income? And I'll just tell you, for me, it's 10,000. And I'm going a little bit aggressive here because I could do with less than 10,000. I'm not like super luxurious type of guy. I don't need a fancy car. I don't need all of these fancy things that people need. And see, so some people in here in the chat are putting monthly numbers, which is good. Monthly numbers is good. We just divide that. Mine's not 10,000 a month. It's 10,000 a week. Right, and so that's because I've got kids. I'm trying to help them get settled, help them do the things they need to do, vacation, spend, help somebody out, things like that. So mine's $10,000 a week, right? And so thank you for sharing your numbers in the chat. I really appreciate that. All right. All right, not sure what happened there. So anyways, yeah, let me know in the chat where you guys are at. But again, if you're thinking maybe I'll figure this out later, let me give you a reality check. Inflation's not getting better. I just had to pay for $8 eggs. Oh man, the 9-to-5 job market's less secure than ever. People are losing jobs. It's nuts. Big institutions are dominating the markets, and if you don't have a system, you're just giving them your money. And if you keep doing what you're doing, you're going to get the same results, right? And so again, knowing the income engine is really important, and I'm going to show you how the system works. It finds the right stocks. We enter trades that have a high win rate. We use great risk management. We target 1% per week. Here's a great trade that we did just recently. And this is a system, it's reliable and it works, right? So let's put it together, right? You get live trade examples, you get a proven system, and you have a choice. You can keep struggling or you can follow a proven system. The choice is yours. And if you're serious about replacing your paycheck, let me show you how to get started. Introducing the Freedom Income Engine. Right, this is the only program designed to help you consistently target 1% per week and replace your paycheck with options trading. Everything you need with confidence, right? So we have an income engine. The course is valued at $2,500. Then we get members only training and a community, which is valued at $1,000. The community is amazing. You get support. You also get step-by-step trade value, trade breakdowns. I mean, I'm a little intense on this. I say you work 15 minutes a week, but sometimes my trade breakdowns are a little over the top. I've done 3 of them this week because this week was so powerful. All I was doing was collecting credit on Apple, but we just kept having good opportunities. So I was just like, okay, here's how we do this. Here's how we do this. And here's how we do this, guys. And people are loving it. You get templates, checklists, and trade log. My spreadsheet is like gold. It's a golden spreadsheet if you're a nerd like me that likes spreadsheets. So you get all of this, and it's valued at $4,700. And the price is $1,000. And so it's a pretty good deal considering that you could get that money back pretty quick. However, before I drop the link, there is a bonus I want to tell you about, and it's called the Profit Stacking Blueprint, and it's a trade signal add-on that we do on Thursday. So today, after this, we're going to do the setup, and it has an 87% win rate. Here's the back test on it over the last 10 years from 10K up to 10 million. It's a little insane, but it is what it is. It's optimized to help a small account grow faster. So what I do with that is I trade it with my income strategy. It's a small piece for each account. So again, everything you get, including the bonus this time, is now $72.50 because that's a big bonus, a whole different system. And so the price for everything, including the bonus, is $1,000, but you're not going to pay that $1,000 today. And here's why: because I'm just starting out. I'm not starting out in business, but I'm starting out with this income vision of replacing 100,000 people, and I need referrals. I need people to say this actually works. So I'm asking a little favor, and that is, if I teach you to replace your income and you're successful, would you be willing to refer 3 friends and family members? So again, it's only if you're successful. I don't want you to do this if you're not, but I'm confident that you will be. But if I give you a massive discount, would you be willing to refer them? So let me know in the chat if you would be. Awesome. So of course, this is only if you're wildly successful, like I know you will be. But today we're having a limited time offer for just $200 today. And there's the link right there on where you can sign up. I think I can drop that in the chat. Let me see if I can do that. I don't know if I can. Chat. Wait. I have the link. Let me drop it in. copying thing's not working. But yeah, oh, let me do this for you guys. But yeah, I mean, I'd love for you guys to sign up and join and just be a part of what we're doing here. I'm really excited about it. Oh, wait, let me get you guys that slide here. There's the link slide. Okay, let me grab that. There we go. I think that's it. All right, so I dropped that in. How do I drop it to, oh, there we go, one more time. I'm not the greatest tech person. There we go. So yeah, if you guys want to try it out, let me know. Love to see you at a massive discount here. You get immediate access to everything, and the course is going to be released weekly to give you some time to take it in, but it will increase to $1,000, and this is only available until I complete the course. And it's also got a 30-day guarantee with one-on-one support. So click the link to enroll now and start trading with confidence, and you get live coaching, so you're never alone. How much experience do you need? It's for beginners and experts alike. Remember, I was an expert when I started doing this, a legit expert, but I had so many disasters. I needed to get something a little more simple in my life and stop doing all the crazy stuff. How long will you have access? You'll have it for life. And how much capital do I need? Well, you know, you can start with, like me, with just a little bit. Remember, if you watch the beginning, I only had $200 a week of actual paycheck. So you don't need a lot, but if you have over 5,000, that's good. But even if you have just as little as 50, you can get started. What if I don't see results? Well, you 30-day guarantee with one-on-one support. And how much time do you need? You need an hour a week. And 1% doesn't seem like much, but it begins to add up quickly. So again, it starts with action. Take control of your financial future today. There's the link you can use. And this is your chance to break free from financial stress. Click the link now to get started. This is an opportunity that won't be open forever. And thank you all so much. I really appreciate it. I want to thank the people from Traders Corner. You guys are amazing. Thank you for everything and giving me this opportunity to present. Thank you guys all for attending. I really appreciate everyone here today. And that's all I have for right now. If you guys want to ask me some questions, feel free to do so. I think my time is up here in just a minute, but yeah, thanks everyone. Really appreciate the opportunity to be here.
Thank you, Casey. And if there's any questions, feel free to answer them in the chat. Thanks for laying a clear step-by-step blueprint or replace your paycheck with options income. Incredible value. And once again, check the chat for Casey's exclusive offer. Up next, we welcome the always dynamic Marina Villatoro, also known as the Trader Chick. Her passion is simplifying the trading process and helping traders gain clarity and consistency. Today's session is titled 4 Steps to Simplify Your Day Trading. Whether you're a new trader or a seasoned veteran, Marina's approach to identifying trends, avoiding false setups, and mastering breakout strategies is worth your full attention. Marina, that's all yours.
Hi, thank you so much. Can you give me control?
Yeah, I'll give you control. Sorry.
Thanks.
Yeah.
No worries. Thank you so much. Hi, everybody. Can you guys hear me? Hello, hello, hello. Can you guys hear me?
I can hear
I think
you.
I lost you. Oh, okay. I guess the switch over totally made me lose the connection for a second there. How's everybody doing? Hang on, let me just get myself organized here. I just bought a new computer and it takes a lot to kind of catch up with understanding how everything goes. So give me a second here. Let me see here. What am I showing? Oh, hello. Okay, cool. Let me also share my screen. Let me know if you guys could see me and my screen. Are you able to see both? Yeah, there I am. All right, hang on. I need to open up. All right. Hi, everybody. All right. Awesome. So excited to be here. Thank you so much for having me. I love participating with Traders Corner. It's one of my favorite events that I participate in. So thank you again for having me and for inviting me back. I have some questions for you guys. Where are you from? I would love to know, where are you all from? And let me just see here. I have this new computer, and I have to say the camera with all this new AI stuff, it's just doing its own funky stuff. It's just kind of in and out. I don't even know how to control it yet. So maybe I should just turn it off. I think it's becoming a little bit more of a distraction. Oh, here we go. Let me see. Chicago. Larry is from Chicago. Omar, Belize. I lived in Guatemala for 14 years, Omar, and we used to go to Belize a lot. I love Belize. It's probably one of my favorite countries. Veronica is from Canada. Which part of Canada? Canada is a very big country. Bill is from Cream Ridge, New Jersey. My parents live in Northern Jersey. I don't know if, yeah, what's the name of it? North Bergen. So it's right next to Manhattan. You could, their apartment literally looks out onto Manhattan. Oh, Veronica, you're from Toronto. We used to go to Toronto all the time. My brother was a hardcore hockey player, so we went to Hockey Hall of Fame quite a lot. Kevin, which part of upstate New York are you from? And though you are from Virginia Beach. Virginia Beach is for lovers, right? Isn't that what their slogan is? We used to go there for like when I was in school, when I was young. Oh my God, so many years ago. All right, guys. Well, I want to begin. I think I'm going to turn this off because I think it's a little bit distracting. There we go. I got to fix the camera stuff. Some of those things that I'm still adjusting to. All right, and I wanted to say hello. I am the Trader Chick, and today I am going to be talking about 4 ways for you to simplify your day trading and be able to dominate the market under any condition. Because here's the thing, guys. Right now, as you all know, the market is doing wonky stuff. But the market is always doing something, right? There's always, if you listen to people, there's always something going on with the market. So if you know how to dominate it and know how to control it under any condition, it won't matter what it's doing, right? Because you'll be able to understand all of it, right? So this is me. I am Marina, the Trader Chick. And I am now living in Barcelona. We used to live in Central America for 20 years. I've been an expat now for over, oh my gosh, over 22 years, maybe even more at this point. So now we live in Barcelona. Absolutely love Barcelona. Absolutely love it here. We lived in Central America. I lived in Guatemala for 14 years. And a lot of people ask me about being an expat and life abroad, wherever that abroad may be. But I have to admit one thing, it's probably been the greatest thing that I have done for me and my family. And if you guys have any questions about becoming expats, I am super happy to tell you guys anything. Just email me. You could email me at thetraderchick@gmail.com or go to my website, The Trader Chick, and I'm happy to inspire you to do the same. Also, another cool thing is I want to talk about is before I became a day trader, I was a fitness instructor. Why am I telling you guys this? Because so many people have this misconception that you have to come from some sort of an engineering background, financial background, math background. None of those things are true. I come from a day trading background, and I mean day trading, a fitness instructor background. So anyone who really wants to day trade can and needs to. I'm also a travel writer, and the main reason I say that is because One thing about day trading that's really important for me and my family is that I could do it from anywhere, right? I could literally do it from anywhere. And me and my family, we travel 3 to 4 months out of the year. And so traveling for me is not a luxury, it's a necessity. And interestingly enough, I literally just finished buying my tickets and planning an entire month in Tokyo and Kyoto, Japan, coming up in August. So I'm very excited. I'm taking my mother and my youngest son with me. And so, even though I'm going to be traveling for a month, you know, I am going to want to hit the charts once in a while, right? Maybe not all the time. August is usually a pretty slow month. That's the beauty of day trading, is that you can do it from anywhere. And I'm trilingual. Why is that important? So I was born in the Soviet Union, so Russian is my mother tongue, but I moved to the United States when I was quite young. So I didn't actually learn English as much as I just learned how to speak, and English was obviously that language. However, I learned Spanish when I was in my late 20s. And when you learn a new language, and anybody here who has, who has learned a second or a third language in their later years, it's a process, right? You have to practice, you have to commit, you become super disciplined, and you just have to start to understand it in a certain way. And after a couple of years of struggling with trading, I started to look at it a different way. I started to shine the light at it from a different direction. And I realized that if I look at it by learning a new language, that things are going to start to make a lot more sense for me. So I want to give you guys this visual because it makes a lot more sense when you are thinking of it as learning a new language. Just imagine this visual. If you want to learn Spanish, right? Any language, it doesn't matter, but I'll go with Spanish since that's the language that I learned later on. Imagine walking into a room with 6 Spanish speaking people, and they're in the midst of a pretty intense conversation. Are you going to go in when you don't know a single word and start talking to them and thinking that you're going to be able to communicate with them, and on top of that, thinking that you're going to understand them? No, right? It sounds really ridiculous, right? Because you understand that you have to start with the basics. You have to understand, hola, mi nombre es, ¿cómo estás? You have to understand the super basics, right? Yet it's unbelievable to me the amount of people that jump into the market without understanding a single thing what is going on in the market and thinking that they are going to be making money. Just because you're sitting in a chat room where people are taking trades, and even though you have no idea if that trade is successful or not, by the way, 90% of the chat rooms are hired moderators that don't have a clue what they're doing, but that's aside the fact. But imagine walking into that room where everybody's speaking Spanish and you thinking that you're going to communicate with them. Imagine entering a chat room, which a lot of people think if they're just going to buy a chat room membership or an alert system, that they're going to start to make some serious money. Super untrue, right? It's super untrue. And I really, really, really want you guys to start to get that through your heads. You cannot cut corners when you want to learn how to day trade. It's impossible. You need to understand, and you can begin with understanding the basics. That is the beauty of it. When you understand the basics, you will be able to truly, truly trade, make real money, not listen to other people tell you how much money you think that they are making, which, by the way, a lot of times isn't even true. So I want to teach you guys how to do this, how to stop pretending that what other people are doing is what you should be doing, because that's not true. Even if they're saying that they're going to take some sort of a trade and you're looking at it and you have absolutely no idea what they're doing and why they are doing it, why are you going to take that trade? So today, that's what I really want us to learn. I want us to learn how to be able to do this. Okay, so let's just dive in. Before I do, I have the entire presentation for you guys, because again, if we're learning a new language, you want to be able to have those index cards in front of you. You want to be able to understand that language, right? Those words. I have this all for you right here on a free presentation completely, so you can follow along. And also when you get the rewind, not the rewind, the recording, the replay of this, you'll be able to go back and check it out at your own time. So please go here right now, makingofadaytrader.com. You'll get the entire worksheet of this presentation completely for free so you could follow along and then you could study it and truly start to learn it. Okay, so let's go. Makingofadaytrader.com. Go there and get the worksheet and let's begin. So what are the basics of trading? What are the basics of trading? So again, I'm going to go back to this analogy. Walking into that room with Spanish speakers, you not speaking a single word, you're probably going to be able to get something back from them if you even know how to say hola, right? And hola, mi nombre es, that opens you up. Same with day trading, right? Same with understanding financial markets. It does not matter which market, but if you understand the basics, you are going to truly be able to begin the process. So what are the basics? First and foremost, you cannot really be a trader, or actually not even really good at swing trading or day trading, if you don't have the proper vehicle, right? And what is that vehicle? That is the chart. Okay, the chart, that is your canvas. That is where everything happens. Think of it like this. Will you be able to join a Formula One race if you have a minivan? No, you'll be ludicrous. It'll be ridiculous, right? Yet so many people are hanging out on these like little rinky-dink apps thinking that they could become professional day traders. And, you know, some of these apps are delayed feed, or they just don't work, or they're wonky. You need a good platform. All right. And with those good platforms, the beauty of good platforms is they have universal indicators. So you don't need to be going and spending even more money on indicators. I personally use only 2 indicators. I use one chart because, like I said, we travel all the time. So for me, all I need is a laptop and one chart and 2 indicators. That's it. All right, the super basics. Again, you do need a chart though. You cannot do this by looking at, you know, something on like, or even StockPix or Reddit. I mean, I can't even imagine, I can't even begin to tell you what people do and think that they want, you know, they want to become traders. It's incredible. Anyhow, market movement and the trend. All right, guys, if you don't know what a trend is, or the 3 types of trends there are, chances are you're not going to be able to get this party going, right? So what are the 3 trends? Up, down, we know those, but the most important is the sideways one. And why is that the most important trend? Because this is where the majority of your money gets lost. Why? A lot of times we don't even realize it's happening because we're not monitoring it properly. The other thing is that we have these mixed ideas of what the sideways trend is, or otherwise, or the other thing is that we don't even know it's trend. So I want to really focus on this with you today, because I can guarantee you 100% that probably 80% of your money that you end up losing is usually in a sideways trend. What are the other words for sideways trend? Consolidating markets, transitioning markets, exhaustion patterns, the chop, indecision, you name it, whatever you want to call it, that is the trending market of the sideways market. And they happen all the time. Okay, happen all the time. Right here is another perfect example. You have a trending market down, sideways, and then it transitioned into an up. So let's just get really clear. What is an upward trend? It's each pivot is higher than the other. Pretty simple, right? Each pivot is higher than the other pivot, and it's just going up. This is what we call the bull market, the market trending up, the market going up. This is where you are entering a buy. You are going long. So I cannot even get more basic than these words. Buying, going long, that means you are entering low, exiting high, boom. That's it. You're taking that profit in between. You're going long. You are buying. You are entering low, exiting high. Downward trend, it is when each pivot is lower than the next. And usually day traders make a lot more money on the downward trend than the upward. Why? Because downward trends happen a lot faster and further. Unfortunately, that's the reality of it. But if you know your technical analysis, who cares? You're in it. You could completely profit off of this, right? And what do you do here? You are shorting the market. You're entering high, exiting low, taking that profit in between. This is shorting the market. It is so important. This is when the market is going down. This is when the market is trending down, whatever you want to call it, the bear market. All right, now let's focus on those consolidating areas, transitional areas, exhaustion patterns. I call them the trader's worst enemy. And once you learn how to spot them and avoid them, guess what? You are not only going to be keeping a lot of your money, but you're also going to be making the right decisions for the right trades to enter into. And that is the key. Look, I'm going to get really real with you guys, because there's a lot of people talking about you can make this amount of money, you can make that amount of money. You cannot if you do not understand what is happening in front of you. And when you know what is happening in front of you, trading boils down to this: making the right decisions. Making the right decisions. If you are consistently making the wrong decisions because you don't know what you are looking at, it doesn't matter what the others are making, right? It doesn't matter if they're making 10 grand a week or 50 grand a month. If you don't know what you're looking at, who cares what they're doing? I love it when people say to me, oh, so how much money are you making? It's kind of like saying, oh, so how much money do actors make? You know, meanwhile, Tom Hanks is making 20 million a picture because he's a pro. He's done the work, and you just want to start to be an actor. You can't possibly think you're going to be making that kind of money. You need to get realistic, right? You need to begin at the basics. So cut out that noise that people are making 10 grand a week and learn. Once you learn, the sky's the limit. So first and foremost, let's just understand these consolidating markets, because they are simple to understand. And once you understand them, you'll be saving so much money and then starting to make the right decisions, entering into the right trades. So what is a consolidating market? This just literally means that the market is bouncing in between two areas, and you need to draw those areas in because you need to understand what is happening. But the main reason why people lose money in consolidating markets, in the exhaustion patterns, the channels, whatever you want to call it, is because it's about the stories that they create in their head. Day trading is a very emotional activity, right? It's a very high emotion, high energy kind of an activity, right? So when you're looking at something like this, when the market is starting to go flat, kind of flat line, what happens is that the trader, who is the trend is your friend trader, is looking at this and they're saying to themselves, you know what, the market's been going up, I'm going to continue, I'm going to put in a buy because it's going to continue. Or you have the other kind of a trader, which is the contrarian trader, and they're looking at this market and they're saying to themselves, you know what, the market's been going down, it's got to correct, I'm going to short it. So here's the secret, guys. The market is doing nothing, and you need to know what to do. And the pro trader here, this is what they say. You know what? I'm staying out entirely because I don't know what the market is going to do, right? I don't know what the market is going to do. Simply because it was doing an upward trend before does not mean it's going to continue. And if it was going up, it does not mean it's going to correct and go down. But what it is telling me in this moment right now, and the most correct decision to make, is for me to sit out and not do anything until the market gives me confirmation, because it can go down really strong, then it could consolidate, and then it could turn into a transitional area, which changes the market. So I'm going to wait and see until it does, and then I'm going to enter. That's making the right decisions. That's when you make the real money. So it's not about that 10 grand that you might be making, when unbelievably enough, I get more people asking me or telling me, you know what, I was kind of successful today. I came out, I went break even. I'm like, what career normalizes this? Yet in trading, for some reason, losing and normalizing that you're just breaking even is okay. It's not. We are here to make money because we are here to learn how to make the right decision. I want to teach you that right decision. And once you know how to make those right decisions, the sky is then going to be the limit. So we have to understand, when are these consolidation areas happening? Because this is where the majority of our money gets lost. So we need to understand and avoid them. How do we do that? Areas. This is the most important thing, guys. Areas, support and resistance areas. So here's the thing. The market respects areas. And we, as a retail individual trader, have to respect those areas with the market, right? So we need to understand, where is the support? Where is this resistance? And then the most important part of all, we need to draw it in. So the other cool thing about having a chart platform is that they usually come with drawing tools. Even the most basic charting platforms give you a line that you could draw. And why is it important to draw these areas in and not just do it mentally? Because when you are in the live market and you just put your money, your hard-earned money into the live market, your adrenaline is pumping like a Formula One racer. And what are you going to do? You're going to start to doubt, you're going to start to sweat, and you're going to look to the left of the chart. And if you have nothing drawn on that chart, you're going to not realize why you made that decision in the first place. So when you start to draw these areas in, you understand, okay, I did this because here is that resistance area. Here is this movement right here. And you're going to understand that you made the right decision. So what is a resistance area? It's the ceiling of the market. And it's where the market has gone up, it's going up, and it starts to hit an area 3 or 4 more times, right? And boom, the market is respecting that area. And I don't want to be the one to decide, is it going to break through or is it going to turn around? I want to be the one to sit out and wait until the market tells me. And I do that because I have this drawn in. Resistance area, the ceiling of the market. Guys, this is so important. And the coolest thing of all, it's so simple. It's so simple. All you have to do is understand when it is hitting this area, okay? It is hitting this area. This is the ceiling. This is the ceiling of the market, the resistance area. All right, guys, you have to just draw it in. And what's a support area? It's the floor of the market. So the market could be heading down and boom, it starts to hit a floor. You need to start to draw in that area because that floor, that support area is quite important. And you need to respect it because the market is respecting it. And you need to be the pro and sit out. When you understand this, you could start to sit out a lot. So resistance and support areas, this also is what now completes that channel. So if you're seeing a channel and you don't put that in, it's a mental, when your money isn't on the line, yeah, it makes sense so you can remember it. But again, remember, when you enter that market with your live money, your adrenaline is pumping. It's pumping. You're not going to remember what is going on. So just draw it in. It's so simple, and you are going to be completely relieved to know that you made the right decision and that you are in the right place for that market. All right. And once again, when you draw this in, then you could start to actually evaluate the market. Look at this. Look at this bouncing back and forth. Does that look like a nice market to you? No way. It looks terrible, choppy, horrible. I would never put my money into this. There is absolutely no direction here. I don't want to be risking my hard-earned money on this. Look at that. It's just ugly behavior. Okay, so big question that people ask me is, all right, I understand that the channeling market happens and I've already lost, and I can understand that, but how can I avoid it before it becomes that area? And believe it or not, that's actually pretty simple as well. And again, this can be done on any charting platform, on any market. You do not need to go and spend money on algorithms and indicators. Please save your money. You don't need it. This is basic, and it's actually fun once you start to recognize it. And how do we recognize these areas before they happen? Reversal areas and divergences. This is my holy grail. I call it the trader's map to shift in direction. Reversal areas, double tops, triple tops, double bottoms, triple bottoms. This is gold stuff, guys. Gold. This is a triple top. It started as a double top and turned into a triple top, which is now the beginning of a resistance area, right? So that's when you start to draw it in. This is a beautiful double bottom, but what makes it even more for me to understand that I need to stay out is the divergence. If you look down below, you'll see my red dots. My red dots are the MACDs. I love the MACDs. They are the least lagging indicator out there. So as you can see here, my price action is a double bottom flat, and my MACDs are, the price action is heading up. Okay, so this is telling me that the market, it is not telling me it's going to reverse. What it is telling me is that it's fully slowing down. That is what it's telling me, that it is slowing down and it's weakening. And that is the most important part of all. So again, we want to recognize these areas, and that is where it all comes to life. Again, as I mentioned earlier, I know that we only have about 45 minutes together, and there's a lot of information. Everything I'm going over is in the free presentation that I have for you guys. It's literally the cheat sheet I use. makingofadaytrader.com. makingofadaytrader.com. Go there, guys, and you'll get the cheat sheet, and everything is there for you. And then you could also write me and ask me any questions you want. All right. So let's put this all together. Now that you understand about the areas, you understand about the divergences, the reversals, how are we going to be able to use this? So the breakout trade, which is literally one of the most successful trades out there, regardless of which market you are in, it highly uses those resistance or support areas. It does not matter if it's going up or down. It is the breakout. So what is a breakout in the first place? So imagine you are going in one direction, and all of a sudden the market just goes flatline, totally flat, completely uncertain where it's going to go, right? You don't want to get into that market, and then all of a sudden, boom, it breaks out in the same direction. That is what the breakout is. It is going in the same direction, flatlining, you're not sure what's happening, and then all of a sudden, boom, because you drew in the areas, you are able to recognize them. So this is how I enter these trades. As you see here, I have a massive resistance area. And if you look down into my MACDs, so the MACDs, you'll see there's this black dashed line. That is the zero line. So the zero line shows that the market has really, really weak, like almost nothing happening, right? It's really weak. It's not going anywhere. And then all of a sudden, boom, it breaks out. And as you can see with my MACDs, it just flies up, and this is where I enter. And by the way, I enter with a limit order. That means I put in an order waiting at a specific price point. I tell the market where I want it to go. I do not just go in market. Market lets the market know that you are an amateur. So you want to be able to put in, you want to understand, you need a strategy behind your entries. So another really important trade is the initial reaction trade setup. That's the name that I gave it. Basically, it's a new trend trade. Again, you have to have your areas drawn in. You need to understand when that transition happens. And why is a new trend trade so powerful? I wanted you guys to just kind of go into the layman's terms, into the regular mindset. Imagine you want to go jogging, right? And you are you're just ready to go jogging. You got your clothes ready and you are out the door. You are enthused and excited. So if I was going to put money on you running for 2 miles, that's probably when I would do it, right? Right when you are exiting that door, not when you're 2 miles in. Why? Because after 2 miles, you might be getting tired. You're not really sure. So I want to get in as early as possible. It goes the same for the trends, right? Trends, when they are new, man, they are so powerful. And if you could get in at the right moment, that is when your probability of higher profits is the biggest. Okay. So when you can recognize that and understand when, it's golden. And that is so important when you draw in the areas and understand what you're looking at. Again, Making of a Day Trader, go there, makingofadaytrader.com, get your free cheat sheet and follow along. Because here's the thing, guys, we have absolutely everything we need. We have everything we need to take action, right? We have these amazing presentations, different summits. We're listening to all these different gurus. We have amazing YouTubers. We have podcasts. But at the end of the day, how do you know you are doing it right? How do you know you're doing it right? Who is helping you understand about what you're seeing on the chart? Because that can make all of the difference, right? All the difference. And all of this is great, but then a lot of people are constantly asking me, but how do I truly get started? Like, how do I get started? And interestingly enough, this is not from beginners only. This is seasoned traders who have been trading for ages but are still losing. And all they want to know is, and they keep on asking, how can I turn this around to be profitable consistently? And usually, guys, it's lacking the understanding of the basics. Just as I was talking about before with speaking, when you're learning a new language, you always start from the basics. But I'm going to give you a really good visual for you guys to truly understand what I mean about the basics. Let's go back to your beginner driving days. I know the majority of us now just hop in the car and we don't even think about anything, right? We just turn on the car and we go because it is so ingrained in us. But when you first sat down, and I just had the luxury of this teaching my older son how to drive. When you sit down in your car, in the beginning, you did not know where the gear shift was. You didn't know where the accelerator was. You didn't know where the clutch was. You didn't know how to use the brake with the clutch, right? You learned all that because none of us are born with this information. And that's exactly the same for day trading. Once you learn the basics, everything can happen. It's magic, right? Now, I want to take you back even more. I want you guys to get super creative here. Imagine, just imagine for a second, somebody gets into your car who has never been in a car before, and you tell them, buckle up your seatbelt, it's going to save your life. And this person has never been in a car. They don't understand where is the seatbelt, where do I buckle up, because no one taught them. We have to remember that we are not born with this information. But once you tell them, boom, their lives are saved. That's huge, right? From something that simple. And this was my own sad truth. I spent over $20,000 on my trainings and I still struggled. Why? Because nobody was teaching me the basics. I remember specifically asking, can you please explain to me what is a divergence? Can you explain to me what exactly, how do I recognize sideways trends? How do I understand this? And I was either ignored or treated as if though I was born with this information. And I ended up struggling and losing almost $4,000 within 5 minutes. No joke. And this completely broke me because at this point, I was 2 years. I was 2 years of struggling and really trying to become a day trader, and I was still losing money. And it just completely freaked me out. And you know what I ended up doing after that last loss? I ended up quitting. I ended up quitting because it was just devastating. But here's the thing, guys. Here's the thing, and I know that everybody in this room feels the same, that we are all bit by the trading bug, right? We're all bit by it and it never stops itching. And do you know why? I'll tell you why. Because deep down inside, we know that we could do this. So I ended up quitting for about 4 months. I walked away, literally walked away, but I knew deep down that I could do this. I'm like, if other people could do this, I can too. So I decided to come back. And what I ended up doing was I decided to just strictly focus on the basics because I realized that that is what I was not able to understand, was the basics, that I was never taught the basics. And another thing that I actually did, I had 3 charts. I had 3 monitors, 3 charts. So I donated, I just gave the garbage men 2 high definition charts because it was killing me. I had over 10 indicators. I was in constant analysis paralysis. It was awful, awful. I was constantly in analysis paralysis. I gave them away. I went to my naked bare charts, just price action, and slowly I started to study the basics. I eliminated all my indicators and slowly started to put in the indicators one by one. And I realized that I actually only needed 2. So it was amazing. It was only 2 indicators, and I decided to go back to the basics. And several years ago, one of my students, as he was going through my course, he said to me, you know, Marina, your philosophy is very similar to Coach John Wooden. And I was like, who's Coach John Wooden? I never heard of Coach John Wooden before. So of course I had to go and look him up. And if you guys don't know who he is, he was this legendary coach, legendary. I mean, he was one of the greatest coaches of basketball and then became a legendary life coach. But his entire philosophy and training and teaching was, when in doubt, get back to the basics. And I mean, this guy has 88 national championships, had 88 national championships under his belt, 10 NCAAs. He trained A-list basketball players. And you know what? He started with the basics. Why? Because it does not matter what you know. Every season, he would begin with how to tie your shoe, how to roll up your sock, how to dribble the ball. Why? Because it doesn't matter how many accolades you have, if your ego is going to get the best of you and you are not prepared with the basics, the foundation, those rock, that solidness, you could sprain your ankle. You could fall simply because you forgot to tie your shoelace properly. It makes that much of a difference. And today I have a very special offer for you guys only for the participants that are here today, right now. My introductory course to Bootcamp for Day Trading. Bootcamp for Day Trading. You can do it on any apparatus, on laptops, desktops, iPhones, smartphones, whichever tablet. You could do it on any of them. And this entire course, one-time price, $97. Okay, I want you guys to stop everything right now. I want you guys to go to bootcampfordaytrading.com. Go to bootcampfordaytrading.com. I want you guys to follow along to see exactly what you're going to be getting for $97, because I want you also to understand what $97 brings you as far as investment today versus what this course is going to offer you. Do you guys like to play golf? Me and my husband used to play golf in Guatemala. When we first arrived to Guatemala about 15 years ago, it was about $29 per person. Today, before we left 2 years ago, it was $119 per person. You like to take your family or friends out to lunch? Going out, just me and my husband today, for lunch with a glass of wine could be around 90 bucks, right? So imagine all that you're going to be getting in this course, that you're going to be able to 10x it. So let me break this down. Again, I want you to stop everything. Just give me 3 more minutes, literally a few more minutes. We're going to be able to get all of this in front of you, but it just makes it easier. Bootcampfordaytrading.com. Go there into your navigator, put that in, bootcampfordaytrading.com. So this is what you guys are going to be getting. You're going to get the simplified day trading package. Now, what's really important that a lot of people really struggle with is setting up their platform. And I think that's also a massive resistance area. So I actually go over that with you, 30-minute tutorial. We are up and running so that you can get to the fun stuff, the trading. You don't have to worry about the platform. And most platforms, they are all very similar. So I help you guys set that up, boom, and you are off to the races. Then we get really, really deep into the market anatomy, understanding those trends up, down, but most importantly, those sideways trends, and how to be able to spot them and avoid them and understand what's happening. And that we do through those telltale signs, reversals, divergences, because I mentioned earlier, once you understand how to do this, and it's so simple, on any charting platform for any market, you will be able to recognize them and have massive aha moments. Then we will talk about the support and resistance areas, how to understand them, how to draw them in, so that when you are in the live market, you understand why you made the decision you did, and that's, you're going to be able to stick to that strategy. And divergences. Divergences to me are my holy grails, and when you understand them, they are just beautiful, absolutely magnificent. And we're going to master the breakout, understanding the power of the breakout trade, because it is the most potentially highest trade out there. But interestingly enough, there's a lot of fake out breakouts. So we will also be learning how to avoid those, because you can't completely avoid those. So we'll understand where these breakouts happen, how to go into them and truly benefit from them. And you will get unlimited access to this curriculum. All of this is valued at $1,600, and you guys get it for $97 one-time fee. So here's what some of my students have to say. And like I said earlier, You could trade from anywhere in the world. Okay, so I have students from all over the world. Michelle just finished the boot camp, best money ever spent. Derek, you are the only mentor that truly checks the work. It's so amazing. Adrian, I am learning every day and I just love the boot camp, so enjoying it. But I want to go to one very important part that I asked you a little bit before. Do you guys remember the question I asked you? How do you know you are doing it right? Because this is the most important thing in the world, right? It doesn't matter what you're hearing here or what indicators are there and what's going on, because if you're not understanding what is going on in front of you, if you're not understanding what is happening on your charts, you could miss it all, right? So what I have included in that one-time $97 is one entire month, 1 month with me, unlimited feedback, mentorship, one-on-one. We could chat live, ask me all your questions. We look at your charts. We go over your charts together. Okay, because having a mentor could be the thing that will take you to that next level, and that is for sure. And I am giving you guys one entire month, unlimited. All of this valued is $2,600, and you get it for $97. Go here right now, bootcampfordaytrading.com. What do you guys get? Everything in the course, 30 days, one-on-one mentorship. And I also have a live chat room where it's me, sitting with me, that we go over everything that we just learned together and implement it together. So here's the funny part, that this course is worth less than one trade. I don't know about you guys, but my trades usually are between $200 to $400, right? The average trade. This is $97. So you get 10x your return on your investment just through the education you're going to get, and go to 100 of these dinners. But here's one really important thing. Because of my mentorship, I'm only able to give it out to 25 people. And it is a full house right now. And I have to admit that I get sold out pretty quickly. So I just wanted to let you guys know that I do get sold out. And the first 25 people is the only ones that will get that mentorship. So just letting you know, this is the time to go. Nobody gets this price. It's only during my live presentations. This is right here, the order form. So I just want to show you here. We could go here, bootcampfordaytrading.com. So the actual, it will direct you to here. I'm going to put this here. Let me see if I can get this here for you guys. How do I do that? I think I just made it, put it in here, and then, yeah, let me put it in here as well. Okay, so you could go here, you could follow along with me on the order form. Go to bootcampfordaytrading.com, bootcampfordaytrading.com, and it'll take you to this order form. And right here, one-time payment. If you guys do need a payment plan, I do have 2 payments of $59, but you automatically get all access to all the materials, and you can start working with me immediately. Okay, so this is the bootcamp right here. Everything that we just talked about right here for you guys. So let me know if you guys have any questions at all, and let's go here, bootcampfordaytrading.com, and I'm super excited to be working with you and helping you guys, and I'm here for any questions you have. Thank you all so much for spending this time with me, and I hope you have a beautiful rest of your day. Thank you so much.
Thank you, Marina, for showing us how simplicity leads to clarity and ultimately profitability. Your energy and insight are always appreciated. Details on Marina's special offer are in the chat box for those who are ready to simplify their trading approach.
Thank you, everybody, and thanks again for having me.
Thanks, Marina. Our next presenter is a name that needs no introduction. Price Headley is the founder of Big Trends and has been featured everywhere from CNBC to Bloomberg. He's a true pioneer in technical options trading. Today, he's sharing how to trade triple Qs options with the %R and average true range indicators. These are tools that offer powerful signals in short-term options setups. Let's welcome Price Headley.
Hey, thank you, Anthony. Great to be with you all today. always a pleasure to join in, share what's been working for me across all kinds of market conditions. You know, it's interesting with the market volatility we've had, you know, how many people are getting kind of worked up about, you know, the recent little pullback in the markets. My view is you've got to know how to trade both the upside and the downside. So my objective today is to share with you what's working for us trading the QQQ options. Of course, the QQQ, the NASDAQ 100 vehicle, one of the most popular ones out there, trading the big names like Apple, like NVIDIA, like Microsoft, and so many more, Tesla, you name it. They're all part of that NASDAQ big 100 names. And so it's a really ideal vehicle from my standpoint to get fairly quick entries and, more importantly, quick exits using these couple of tools, as Anthony mentioned, the percent R and the average true range ATR indicators. I'll walk you through that as we go. Let me just remind you, of course, that everything we share with you in today's presentation is based on our proprietary research. It's intended for illustrative purposes only. Well, what I talk about here should not be considered specific advisory recommendations. You know that stock and options trading have large potential rewards, but let's face it, they also have large potential risks. We're going to talk about both sides of the coin today, how you manage both winners and losers and build your trading system over time. Of course, the past performance of any trading system or method is not necessarily indicative of its future results. So see our terms of use on our bigtrends.com homepage for more information here. So our goals with these short-term QQQ options are looking for doubles. Our experience is that a double in a day or two is achievable, and is also a good time to go ahead and say ring the register when you get doubles. The stops will be set typically at half that, so that way we can make twice what we're risking on a typical win versus loss scenario. So I'm going to walk you through both trades that worked and trades that didn't, show you success stories and chart examples of, hey, here's what you do when it's working, here's what you do when it's not working, and here's how much time you should give yourself in a trade before you absolutely say, no more, I am done. We have a time window that when it closes, you've got to be out of the trade. So we call the system our QQQ options playbook system, and so it basically teaches you how to trade the Qs with weekly coaching, with all kinds of follow-up instruction, and of course giving you our settings and rules when you become a subscriber. So it's not a black box. You can get trades at the end of any given trading day with about a half hour or so to go before the QQQ options close on a given day, so we can kind of see how the day-to-day charts are setting up. Now, if you don't know me, I've been trading stocks and options for over 35 years. I caught the trading bug when I was a student down at Duke University, and then basically realized that's what I wanted to do as a career. My family's been in the thoroughbred horse business for generations, but I told my dad, I said, I like this stock and options trading idea. It's a lot more manageable risk. He thought I was nuts, but here we are 35 years later, and I love the ability to get in and, more importantly, get out on a moment's notice, right? That kind of liquidity can't be found in many other opportunities. When you're talking about real estate, when you're talking about any other business that you might open and or need to close, it's like, well, you know what? You need to have the ability to get in and out quickly. You need to put that speed to work for you. I see way too many traders who are sitting there buying and holding. Buying and hoping is not a strategy, right? So our whole approach at Big Trends, having launched the company just over 25 years ago, back in November '99 was when I put it out there to the world and said, look, just don't day trade alone. Focus on bigger picture swing trades where you get moves that are lasting. But these are quick driven 1 or 2 day trades without any day trades. And what I'm going to teach you about today, getting in one afternoon, getting out at the earliest the next morning with this trading system called QQQ Options Playbook. It's about having clarity, having a pattern, or in this case, several patterns that we can use to take advantage of when to get in, when to get out. Let's look at a recent winning trade example. We'll go in more depth on how this QQQ Options Playbook system works. So here's one that we had just going back here to March 18th. And so you got the QQQ daily chart, right? We've just zeroed in on your kind of classic candles, right? You know that if you have a white body here, it means that we opened lower, we closed higher, right? That's a positive, momentum for the day. But that doesn't scare us out of maybe buying a dip if we have the right pattern and setup here. So in this case, we got a dip, but you can see that dip in the Qs came back into support. But more importantly, we've got our percent R indicator in the bottom panel here. Percent R is developed by my friend Larry Williams, a great trading educator and innovator. Percent R stands for percent range. Larry uses a negative scale. I like to use the grade school scale from 0 to 100%. So we had a pullback there under the bottom 20% of readings there in a kind of a classic oversold scenario, and we were holding relative to we were a couple days before. We've got a variety of things happening here, but we closed down in here, and you can see that our system says, okay, in that particular setup, we want to be able to take advantage of what we think is a decent and more than decent, a better than average chance of snapping back up. Solid chance. And so the idea is that you can't just trade decent setups. You got to have a solid, an edge in everything you trade, right? If you don't have an edge, you shouldn't be trading. If you can't define your edge, you should not be trading, right? So when you get in as a subscriber, which you got a great interest special at the end of my presentation, great way to try it out and let it prove it to yourself. Don't just take my word for it. The idea is we're buying that dip on that particular bar, betting we're going to get a snap back up. Our rules are with the QQQs, we can hold them 1 to 2 following trading days. And so what we're going to do is we're going to buy an option that has 3 days to go until its expiration. We never want to hold these options on the last day of their options life. People will call that the 0 DTE, 0 days expiration. That's become a very hot and popular area for the speculative crowd, right? And you say, well, hey, we're trading 3 days expiration. That's not exactly for widows and orphans. I agree. It's still aggressive, but I believe it's still sensible leverage to say we still have a plan to get out and still have some time value to salvage, even if it doesn't fire the way we want it to. Okay, but so notice what we paid. We bought the March 21st expiration back on March 18th in the afternoon. 3 days to go till expiration, essentially. We're buying these, we send these alerts out by about 3:40 p.m. Eastern time, about 20 minutes before the cash market closes. But the interesting thing about QQQ options is they have daily expirations and that they also have an expiration end time each day of 4:15, stopping trading at 4:15 on all the different QQQ options out there. So we've got time to get in this trade 30 or 35 minutes before the close. We don't want to get in too early because our setup might not be validated if we get in earlier in the day and then it flips on us, right? So the idea is that, look, we're buying these options. We're about the 476 strike calls when the Qs are trading around 474.5. So they're about a 1.5 out of the money, meaning that if nothing happened and it stayed under 476 by 3 days from this entry, at the end of the day, March 21st, if you just sat and held and did nothing and it never moved, it was just a flat line, you could lose everything you put into that trade. You're buying an option. That's your risk, the amount you pay. In this case, we paid $487 to control each 100 shares worth of one contract controlling 100 shares worth of QQQ, right to buy at 476. So the point of this is that why would you do that? Because you're betting that it's going to flip up well above 476. And you can see we retrace back to the prior day's highs the next day. We get up here that next day up to around 485. Now 485, what's a 476 call worth? Intrinsically, it's got to at least be worth the $9 that it is in the money, right? You've got a right to buy at 476. It's trading up here at 485, right? So that's worth theoretically $9 or $900 a contract. We actually got out a little bit better than that, 974 during that afternoon rally up that following day, because there were still 2 more days to go. So there's still some decent time value in that as well, right? So if it's worth 9, but you get out at 974, that would mean that 74 cents of that 974 would be the time value, right? That's the idea, is that there's going to be some time left in these options too. And so that time value will shrink as you get closer and closer to the expiration. So we'd like them to hit relatively quickly, but our rule of thumb is that if it hadn't moved by the end of the day on March 20th, we would be getting out at our time stop 48 hours later, right near the close, 2 trading days later. You can see we paid $487 a contract. We got out at double that, $974 the next day. That's a quick doubler there. You can see just about 10 or 8 days ago now. But the idea is that what we're looking for are those quick snapback opportunities, or the quick follow-through opportunities for a really bullish trend we can get into as well for call trades. We've got one set up for put trades we'll talk about too, but you can see the trade generated on each contract you could have bought. If you bought $1,000 worth, that would get you 2 contracts in for $974. Then when that doubled, it would be worth $1,948, and you'd make $974 in profit before commissions. You say, commissions, yeah, well, guess what? These days commissions are as low as they've been in my 35 years as an options trader, that now you're talking about a situation where you don't pay more than $1 a contract in, a bucket contract out with no minimum ticket charges. That was a big breakthrough as well. Just paying by the contract with no ticket charges means you'd be on 2 contracts in, 2 contracts out, maximum cost of $4, and that cost can drop as you get more active. So you'd net 970 for a 24-hour hold, right, from one afternoon to the next. So that's the beauty of this. Never a day trade, because we're getting in near the end of one day, hoping to get out early that next day, or certainly by the end of the following day. Okay, so we're going to talk about some of the strategy guidelines here. Our holding period will be no more than 2 days, could be less, but the beauty is we'll never have a day trade. So that's something that is important. If you're a smaller account, if you do too many day trades, you can get locked up and basically need to put in a bunch more money. We don't want to do that, right? We want even small accounts to test this out, have the ability to do so without any restriction. Okay, so that's why it's important that we don't have to worry ever about day trades with this strategy. As I said, we've got several different %R setups, what we would call kind of signal configurations, that are analyzed on that day-to-day chart of the queues. And then we're using 3 days out to expiration, knowing we can't hold it more than 2 days. So we'll always have that final day of expiration life left when we're exiting even a trade that didn't get to its profit target or to its price stop. So we start with a daily chart. You would think if you're trading short-term options, you'd want to use an intraday chart. But the reality is, the shorter, how many of you have had this experience? The shorter and shorter you go, the more the noise level increases. I love to get your feedback, by the way. Let me know, how long have you traded options? Type a number in the chat box. You've never traded an option in your life, type a 0 in the chat box. You're brand new. That's okay. You're in the right place. Trading for 30 years, type a 30. I love to know what kind of general experience level we've got with us today. The goal, regardless of your experience level, though, is to have clarity, with clarity of knowing exactly what you need to do to get in, exactly what you need to do to get out. Then you're going to be able to say, now I know I must go ahead and be following my rules. If you don't have a plan and follow your rules, you're lost. You've got, it's like having a map, and you're driving and you don't know the area. You got to have a map, whether it's navigation, whether it's old school paper map. You got to have something that guides you to where you want to go. If you don't have it, you're just going to be going around in circles and retracing your steps and getting lost. You got a 2-year options trader, a 19-year options trader. Congratulations on 40 years of options trading. I don't name names for privacy. 10-year trader as well. So generally, some folks have some experience here. But even if you're new, don't worry. We guide you every step of the way on these trades, when to get out, and even more importantly, always when to get in, when to get out, never left hanging. That's so important to me. I see so many surfacers even to this day. They'll put out a bunch of different ideas, but then you don't know what to do with them. You don't know. They talk about the ones that worked, but then they don't tell you anything about the ones that didn't. Let's face it, we know this is reality trading, not fantasy trading. We're in it to trade and follow through on every single signal, win, lose, or draw, that our system gives to our subscribers. Get plenty of frequency here, but the action point for us is around 3:40 p.m. Eastern. And again, remember, you'll say, oh, it's only 20 minutes till the close at 4, but remember, the options trade on the queues until 4:15. So you got about 35 minutes to work with there, and plenty of time to get in as needed or out as needed. And we'll have, of course, our profit target and our stop defined for subscribers as well once we get our average fill price. Now, it's about getting a lot of bang for your buck. You know, the queues right now are trading about 482, right? That means you buy 100 shares of the queues, it costs you just over $48,000. We want to control that for a whole lot less. Control that $48,000 worth of queues. Notice our average contract price since the beginning of 2023 has been exactly $300 a contract. So if we're paying 300 now, controlling 48,000, of course, that's massive leverage opportunity. You know, that'd be like 150 to 1 theoretical leverage, right? We're not always going to get that because it may take a little bit longer. So there is some time erosion happening when you buy an option, especially even 3 days till expiration. You know, each day that goes by, the time erosion gets a little greater. It's why we don't want to hold them on that final day. So our maximum length of hold is the 2-day rule, 2 trading days later at 3:40 p.m. Eastern. Remember, this doesn't count weekends or holidays. So if we got in on a Friday with no holidays coming up, of course, markets can't trade Saturday or Sunday. So we'd be going out Monday, Tuesday, Wednesday, following week would be our expiration choice. So that's really clean, really simple, and you're never going to hold it into the expiration day. So even if you're down, you're saying, look, I'm not going to hope. I'm not going to, hope is not a strategy. I'm going to clean it up, move it on, and wait for the next opportunity and say, let the trades fall over time and let the odds stack in your favor over a longer series of trades, knowing that we can't guarantee the results of any one trade or even any series of trades. We're following a system that's given us an edge over time. There's going to be times where that works better, times where it has a little give back. And so you got to realize there's no perfection in trading, right? Perfection stands in the way of good or excellent trading. Is just don't get in that perfection mindset. It gets you in a lot of trouble. And so the idea is that let's just consistently execute. That will make our life a lot easier. So why should you care over all the trades that we called out for our subscribers in the QQQ Options Playbook system going back to the beginning of 2023 on the system would have shown you the $25,000 starter portfolio if you said, I'm going to put in $5,000 per trade. You don't have to do that much, or you could do more. But the idea is that, just we'll show you a smaller size next as well. But the idea is like $5,000 a trade on $25,000 starter account, knowing I'm not going to be in these trades for very long. And so I'm looking for that quick turnover. You would have generated 104,000 and change in gross profit. That's gross before commissions, before subscription investment. That would be a 418% gross return over that period. The beauty is we didn't compound that result. It was just kept at $5,000 a trade. So even now over $100,000 portfolio value, you'd be putting in just that same lower percentage into each new trade than what you started with. Of course, remember in all these examples, past performance never guarantees future results. Future results are going to vary. They'll vary up better than expected. Sometimes they'll vary down worse than expected, right? The idea is that your job is to not get too high or too low. Your job is one simple word: execute. Execute, and you can execute with confidence. Now, a smaller allocation, let's say you start with a $5,000 portfolio, allocate $1,000 a trade. Again, same fixed 1,000, no compounding here. And so grew 5,000 to over 23,000 gross value for a gross profit of over 18 grand going back to the beginning of 2023. So we've got 2.25 years under our belt and saying, okay, a healthy 363% gross return here. Why are the gross returns a little bit different? Because if you're trading less, you're not going to probably get as close to your full allocation as a percentage of your total cash you're putting in each trade. By the way, important rule, don't try to just say, I'm going to buy 2 contracts on every trade, or 3 contracts, or 5 contracts, or 10 contracts. Don't use set contracts. Use the closest to the maximum dollar risk you want to take. We want to get you about the same dollars in every trade. Sometimes if one option is recommended at 3, another's recommended at 6, they're buying the same number of contracts. The $6 option will have twice the dollar risk and exposure as the one that's half that, right? So the idea is that keep your dollars relatively consistent, not your number of contracts. The dollars is what's going to give you that smoothed out overall exposure per trade across time. So past performance never guaranteeing future results. We see a pretty strong return in the face of a market that has had its share of volatility, including recently, right? So we know because of our setup patterns, we're using that %R, the Williams percent range indicator, combined with the price action patterns. So when you take those two things together and you get up and down, you get also %R at different levels within its range, that we get some different patterns. And we think there's potentially 8 key patterns that we look at, categories, and 3 of those are tradable patterns, 3 of the 8. That still gives us plenty of trading opportunities. So we combine that price action in the candlesticks with that %R configuration, and then we're going back over a long period of time, usually at least a decade or more in our historical profit tracking to say, did this particular configuration make good money, lose money, chop around, not do much? We obviously want to have a meaningful edge in anything we trade. So the goal when we look back at that kind of history is saying, we know the past can never guarantee the future, but we do know that we're looking for patterns. We're looking for patterns where it said we had a meaningful edge, and with that meaningful edge says we're going to trade that again and bet that we can get a continuing edge in that direction. And so that's our play. And then our goal is to say, let's look for the best patterns, look for patterns that we think are repeatable and that have had enough history to say that it's not just some random one-off, a lucky example, but it's actually a consistent, repeatable pattern recognition. You can see with the more recent action here earlier in March, with the market coming down on the Qs, you'd say, well, the market was coming down, we didn't call the top. I don't claim to be in the game of picking tops and bottoms. I think that's a very difficult game to try to pick exact tops and bottoms. A lot of people tell you how great they are at it. The problem is you'll get a lot of bruises or worse along the way with trying to call tops and the market keeps ripping, trying to call bottoms and the market keeps plunging. With our system, we're saying, look, we're in the bottom 20% of the readings here. We get that bounce back here. This was actually back on March 7th when we bounced back. You see, we're still basically in about the 20th percentile or so on percent R. That means you're in the bottom 20% of the recent look back range, right? You had this high up here at 540. You've had a low down here before that day's low around 485. So if you were just looking at that window of range, you'd say 540 down to 485. That'd be a 55-point range. So when we close here at about, call it 492, well, if you're at 492, you're about 7 points off the low, but it's a 55-point range. So you basically be saying you're about the 15th percentile. If that was just your window of look back, we're looking back even a little further than that. But the idea is that you get the idea that we're seeing why that percent R is coming up into the high teens here on this calculation. At that point in that bounce, we're saying, look, everything still kind of checks the box here, that this is a bounce that's not something that's likely to sustain. So we're actually betting on the downside there into the close on that bar when we're about 492. You see, of course, volatility's risen, so we have to pay a little bit more and we have to go a touch more out of the money. We're going out down below to the 488 strike puts. Remember our 3 trading day rule. That was a Friday, March 7th. So we came out Monday the 10th, Tuesday the 11th, Wednesday the 12th, and there's our 3rd day out. March 12th was our expiration choice. So we're going out 3 days. Remember, we would never hold it more than 2 days, so we wouldn't hold it into that past that Tuesday's close. But the idea is that we're getting in. We paid $509, touch more than what our average, about $3 a contract. Well, we paid $509 a contract. So if you're putting $1,000 in, you can't get 2 contracts. That would be over 1,000, right? That'd be 1,018. So our rule would say you only take the 1 contract at the 509 if you're putting $1,000 in. That's okay. Some people might round up and say, I'm close enough, I'll go with the 2. But based on pure systematic rules, anything over $5 means you would only get 1 contract. And we'll never pay more than $10 a contract, of course. But the idea is that, okay, to get you at least 1 contract here, you see the next day it snaps down, right? We had the 488 puts. You see it trades down here to about 474. That's worth almost 14 intrinsically by the end of the day. Say, oh, you could have made more money. I never played the woulda, coulda, shoulda game. I take my double and I say, thank you very much, Mr. Market. The next day, market drops, we make our double, we take the money and run back to the safety of the sidelines. There's no place like cash when you're locking down your profit and going back to the safety of cash and back to then waiting for your next fresh signal. So the idea of this is that, you know, whether you get close to your full 1,000 invested or you're coming in closer to a little over 500, is saying, I'm just following my system. Following your system, when you make that your mantra, and let's contrast that with, I know a lot of you have had, and a lot of you have had the experience of saying, you know, I want to be right. I want to be proven right in what I do in the markets. We have a 3-letter word for that, and it's EGO, ego. And I got to admit, those 3 letters in my own early stages of my trading career, ego, has cost me the most money of any 3-letter word I know. Worse than any 4-letter word, right? The idea is that those 3 letters, ego, are very deadly in trading. You know, our egos, think about this, our egos are so trained. When we come into trading, oftentimes we're coming out of success in a work career. We're coming oftentimes before that, success in an academic career. Or think about it, in academics, you want to get 100 on your test. You want to be right on all your answers to get 100, right? You were constantly being droned into that, be right, be right, be right. Don't be wrong, be right. Don't be wrong, be right. Same thing in a work career, right? You say, okay, if I'm right a lot, I'm going to get promoted. If I'm wrong a lot, I may get fired, right? And so it's not just showing up, but it's actually coming up with ideas that work that are effectively right and are deemed winners by management or whatever that help you to advance in your organization. You know, all that training, all that reinforcement, and now you come into trading and it's saying, I want to be right, which means that I can't take a loss, and it means that I'm probably going to grab my winners really quick to say I took a win. You can't go broke taking a profit, but you can go broke if you take small profits and really large losses. That is not the secret to trading success. And so it kind of goes counter to all this training that we've been literally decades reinforced in most all of our cases of decades worth of training to be right, be right, be right. And our ego is thus vested in saying, gee, I'm really good at being right. Well, I can't take a loss. I would acknowledge that I'm not right. I would acknowledge that I'm wrong. And yet that's exactly what you need to do, is be willing to take losses more quickly, be willing to get more out of your winners, right? Flip the script from what most people are doing, taking small gains and big losses. You want to do the opposite, right? So of course, past performance never guarantees future results. This one's just another setup example on the downside of how you can trade part of that down move. You don't have to catch all of it. You are just looking for setups that give you an edge. Talk about a bullish setup that's coming out of more of a rally phase. You can see now on this bottom percent R chart, here we are at the end of that particular day, and percent R is hanging around the 80th percentile. I say, what? I thought you were just buying oversold. No. We also are saying, look, there's times where you get a rally and you'll notice then you get a little pause, but basically our system sets up that, yeah, we get a nice little reversal here after trading lower, finishing back up. As my late friend Steve Bigelow would call that a J hook. I always love that term. And basically the idea that you had that morning flush, then you have that reversal back up. You got a nice positive reversal happening. And it's actually staying in the top 20% of its readings. A lot of times the 80-20 rule says, hey, the top 20% of your readings may generate 80% of your profits. The top 20% of your trades will generate a bulk of your profits. So these are patterns, right? And so that pattern is actually a good one historically. It says you're likely to see continuation, follow through, a further momentum. You know, basically that's what we're picking up here. It's a momentum in our side. Is it worth following that momentum? Or in the other example, some of which we showed you, where like the bear trades where the quick pop up was amid a downwards longer momentum, and thus more likely to succumb to the bigger downward pressure on the other chart. But here's what we're saying: we're betting on follow through. The Qs have closed that day around 528, maybe 528 and a half. Buying the slightly out of the money 530 strike calls, and we're going out there to the February 18th expiration. Might have been a holiday in there. Certainly there was a holiday right there from the 14th to the 18th. So the idea is that, okay, you're saying, look, we're going out betting that hopefully we won't need that much time. In fact, we don't. It gaps up and keeps going that next day. So we open about at our strike price of 530 and then go up by the end of the day to 533. But intraday we're up above 534. You say, hold on, 534, that's only worth like $4 on a 530 call, right? But the key is you still have 2 more days of time left. So that time premium is still pretty juiced in there as well. So that even though it's $4 intrinsic, we get out for just under 6 at our double target because we still have 2 days. There's a lot of people that are willing to pay for that extra time, right? And so that time value, what some people call extrinsic value, I've always called it time value, is something that's really valuable to have. So you get the idea that, okay, that gave us how many contracts on $1,000? If you're paying $299 a piece to get in, you can get 3 contracts in for $897, right? So at 100 left over, but you can't buy that 4th contract. That puts you up to almost $1,200, right? So 3 contracts in at $897, trying to double that, we do the next day at $598, and we're done. Sometimes we'll get more than that on a gap in our favor. And there's of course risk that you get a gap against you, right? So let's talk about one that didn't get to its ultimate target, but hit our 2 days later time stop. This is a QQQ trade. You can see back in October where we were actually still in that, you see that really strong, gap up and kind of holding the gap by the end of the day here, 495, got a percent R around the 80 percentile level. Say, oh, isn't that overbought? But you can see at 495, we're buying the 497 calls, paid 350. That gets you 2 contracts in at $700. Next day, it rallies right off the open, but then gives it all back. By the end of that first full day in the trade, you're probably at a slight loss, because if it's flat and you've lost a day of time, you're going to lose a little bit of time value. But then the second day, you see we get the nice little kind of fake out intraday and the nice reversal by the end of the day, and we're saying thanks very much. And our 2-day rule, our time stop rule says end of day 2, end of the close, you must get out near 500. Now, if you say, well, 500, we're only worth $3 intrinsically, right? But you still have a whole nother day left, and that whole day is still worth, you can see another couple bucks worth of time premium stacked onto that. So 350 turned into 519, made 48%. Your $700 would turn into $1,038. You make $338 minus a $4 round trip commission, right? So the idea is that we want to find these opportunities on a regular basis. We tend to expect that we'll find about 2 of these ideas per week, or about an average of about 8 trades a month. Let's look at some more case studies. Here's a great example of market's been down. You get what looks like a big reversal up, but our data says, look, it reverses up. But look, the percentile is just at or just over the 20 percentile level. It's still in the bottom 20% or so of its readings, bottom 25% of its readings. So bottom quartile. So we're saying we think that's not going to last. We're trading back here, and it's a prior year here at 270-ish, and we're 268-ish actually, and we're betting on the 268 puts. 353 is our entry price. And you see initially we're wrong the next morning. It opens about a point to a point and a half higher, up around 271 or so. And you say, okay, maybe 270, 271. And then you're saying, okay, and then it has the hard flip down towards 260. So that's a pretty big move coming off of a prior day's big move, right? So we're watching, we mentioned average true range. We're watching the average true range for that kind of volatility, because as you get more volatility in the market, the average true range will expand. What's average true range? Is basically just looking at not only the high-low range of the day averaged out over the last, whether you look at the last 10, 20, 50 days worth of action, but the idea is that we're also factoring in gaps, right? So when you have a gap, that will also potentially factor and make the range even bigger when you add in the effect of the gap. So we caught that 48%. Oh no, go back there. No, that was the 100% gain there. 353 turned into 706 on that one. Now, right before the election, back in early November, both before the election and after, we managed to catch a couple of different opportunities here. You can see that before the election, our kind of oversold system was saying, yeah, it's a worthy opportunity to bet. It's holding that support area here near 486. Of course, we had a lot of volatility priced in for the election coming up the next evening, but we said, look, we got the chance to be in and out. Paid $401 a contract, so on $1,000 invested, you get 2 contracts in for $802. You cash them out for $1,610 and make over $800 in profit, 100.75% gain when it snaps up the next day. This is the day right before that evening's election here on this rally day here. You notice it ran to as high as about 493. We had been at 486, right? So that's like 1.5% move in your favor. And that's the nice thing about the Qs, say, compared to the S&P 500 or the Dow or other vehicles, is the Qs are going to tend to move a bit more. They have what's called a higher beta, a little higher volatility up and down, right? And so it's important, obviously, to get that right, to be on the correct side of it. But it's also important to then take advantage of that, right, and know when to strike. And we did not have a signal coming into the election night. We said, look, we've cashed out, we've taken our double. But then after the election, we got the big gap up and then the rally after that. And so our system said, breakout here, said, gee, we're trading out near the highest, because of course it's not the top of the range anymore, it's breaking out, right? We're trading here closer to 505. We're buying the at the money 505 strike calls for 409. So $1,000 invested gets you 2 contracts in for $818. When we ring the register the next day, when it rallies from 505, gets all the way up to 514, right? So that would be worth like $9 intrinsically, plus the time value that's left. We cashed it out intraday at 820, took the 100.49% gain, and went back to the safety of cash with now a couple doubles under our belt for that week's worth of trading, right? So that's a good position to be in. And not all weeks are not going to be like that. There's going to be times where it wins, times where it loses. But the goal is to catch those sweet spots, right? To catch those opportunities. Let's talk about a losing trade. Not every trade is going to win. What does a loser look like? Well, here's one that we thought kind of checked our boxes of looking like it was moving back into a top 20% of readings kind of strength mode, and feeling good about buying the calls there into that 509 area. About the 508 calls here back, you can see end of November, about the December 2nd options for 333. So that means, of course, you could get 3 contracts in for $1,000. 3 contracts times $333 a piece, $999 invested. And then, of course, you see what happens. It doesn't keep going. It goes the wrong direction. And intraday that next day, as it's going down from 509, it opens about 508, trades. As it trades down to about 505, we're getting knocked out for a 50% give back, 53% officially, out at 156. So sometimes your stop will get triggered a touch worse than the 50% level. We call that slippage. It happens, but the beauty of the Qs is they're one of the most active vehicles out there. So the slippage should be minimal over time compared to a lot of other trading vehicles. And in addition to that, notice that there will be trades that can go even past your 100% gain on the next day's open. Next day has a big gap in your favor. Here's one we were, again, picking up that prior breakout, nice little kind of flag pattern, right? You see the flagpole breakout here, then the sideways chop to a slightly higher chop, finishing about 485, and we're buying the 484 strike calls. We're just under $4, 391. 2 contracts in for $782. We're betting it's going to go to 782. And look what happens the next morning. It finished there just around or just over 485. It opens the next day about 493, up about $8, more than 1.5%, like 1.75%. And that's good for more than a double. We cashed in right off the open, 144% gain out at 955, right? So on those 2 contracts, instead of making $391 a piece, you can see we made something closer to about $560 a piece, right? So that's what leads to that bigger than expected gain. Take the double, or in this case, 144% gain, and run. Don't walk, run to the safety of cash, having locked in that windfall gain. You see it reverses and goes the other direction. We're glad to have booked it right off the open. Now, for a lot of people, trading these 3 DTE options would seem pretty aggressive, right? They'd say, well, gee, why not buy a month out? Well, that will reduce your leverage, and it will reduce, it will make you have to get a bigger move if you're targeting a double, or reduce your targets to correspond to that excess time you'd be paying for. We want to take advantage of this and still have some time left to salvage. Like I said, when we showed you earlier, that if you took a model $25,000 portfolio, took $5,000 into each trade, of course, with this system, you're never going to hold more than 1 trade open at a time, right? If we got a trade open, we'll wait until we close that one before we get a new signal. So you can keep rolling that over and still have the vast majority of your portfolio in cash at all times. But of course, when we get an entry, we take it, we get the exit, put that back into the cash pod. You can see it grew a $25,000 portfolio to over $129,000 for a gross profit of $104,500, right? Since the beginning of 23. So we got 2.25 years under the belt. Added up in terms of months, that's what, about 27 months. So you're averaging here almost 4K a month in theory. But of course, the point of this is that we're not compounding it. So we want you to keep it in mind. We also want you to say, if that's beyond your comfort level, you don't have that much to start with, start small. A $5,000 model portfolio grew to over $23,000 for an $18,000 plus gross profit since the beginning of 23. Remember, in all these past histories, past performance never guarantees future results. Future results are going to vary, but what never varies for us is the commitment to following the system on every trade. We get an entry signal, we give you exactly when to get in, and we tell you exactly where the system says to get out, win, lose, or draw. So this is using that same fixed allocation of $1,000 a trade. No compounding in these numbers. You would think with how big those historical gains were that you would think we're compounding something there. We're not. We're just saying be consistent in using the same fixed dollar amount per trade. And that's what you can see we generated over the past 2.25 years. 5,000 grew to over 23,000, $1,000 a trade with no compounding. So past performance never guaranteed future results. So what we've set up for you with a special get started trial offer, I made it such an attractive offer that I can only keep it out there till midnight tonight, because the reality is a lot of subscribers in this program of Big Trends here have paid quite a bit more. You're getting the opportunity to try it and see for yourself what the system does, not just taking my word for it. So follow it. And I always encourage people coming in that are new, you can follow it small to even, you can paper trade. Of course, when you do get into the reality of real world trading, even trading 1 contract at a time to get some sea legs under you and get some comfort with it will help you to kind of see how that system can work for you win, lose, or draw in all kinds of different market conditions. So what I did is I said, you know what, trying it for a month is just not enough time to be fair to you or me. It's like, try it for 3 months. I'm going to give you some exceptional value to make it worth your extra bonus time you're getting here, because the beauty of this is you're going to get all the resources that even a longer term buyer would get when you act today. For those that take advantage of today's Traders Corner special, you get access to my QQ Options playbook, settings, and rules sheet. So that gives you all the inside look at what the system is, exactly what you're trading. So you learn while you earn. I also give you weekly video coaching and updates, so that way I can kind of guide you through. Here's what the system did. Here's what we're thinking it'll do for the week ahead. Here's what we're set up for, bullish or bearish. Also, you get access to me and my analyst team via a separate dedicated email address we give you once you get signed up. Hey, anytime I got a question I need to ask, we'll be able to reach out to me and my team. Notice, if you're just buying it off of our website at bigtrends.com, you would pay $297 per month, or over 3 months, that would cost you $891, 297 times 3, right? I'm giving it to you today for the awesome trial starter package, 3 months access, only $177. So cross out the 891, slash it down. You can see here by more than 2/3 to just 177, right? You're talking about more like 80% off almost, and saying, look, think about it this way. You're going to get 90 days worth of access for less than $2 a day. You're also getting all the bonus resources that normally would be given to only longer term subscribers. I want you to learn it. I want you to understand it. And we talk about, I'll show you that page here in just a couple of minutes, but let me quickly just answer the common questions we get. And I'm going to definitely want you to take advantage of it here. It's members.bigtrends.com / I'm going to type it in real quick. Thanks, Anthony, for your help. Members.bigtrends.com / corner for Traders Corner. So let me see if we can share that with everybody here. So the idea is that, okay, look, what we're looking at, I didn't do the / corner. So basically, try one more time. But the idea is that, hey, we're just going to buy calls or puts. We're not going to do anything complicated. We're going to keep it really simple, really focused, and really allow you the ability, there it is, the ability to know when to get in, when to get out on every trade. We're going to tell you at 3:40 p.m. So I could have my newest trade coming out just here in a couple of hours at 3:40 p.m. Eastern. But we don't guarantee a trade every day, right? We only want to pick our spots. We can hold it up to 2 trading days later at that same 3:40 p.m. exit. Obviously, we get our double or get our 50% stop in between. That's the end point of that trade. We'll average 8 trades a month. So we're talking about over the next 3 months trial, you get about 24 trades. A couple dozen trades should give you plenty of feedback. Hey, how's this taking advantage of a variety of trades to come and environments to come, right? We want to stay flexible. There will be no day trades, right? So you know that it's all about just allowing the ability to really focus on the best of the best. We mentioned $3 since the beginning of 23, actually 327 since 24, right? It's gone up a hair. That would still get you about 3 contracts on $1,000 invested. And you get the other bonus resources, the weekly video coaching from me. I don't farm that out, I do it myself. So you get to learn from me that way. You also get the settings and rule sheet, so you know exactly how that works, and a dedicated email address to me and my team. And remember, just one trade can easily pay for this multiple times over, right? We showed you how, hey, you could have gotten 2 contracts in on the Qs trade that we had just over a week ago on the 18th, and you got in for $974, you got out for over $1,900, $974 in profits, easily pay for that 177. Like we showed you, the growth over the last 2.25 years really has guided folks through all kinds of market conditions and taken advantage of allowing you to hang on to more of your profits, not give them back so easily. Like really continue to follow the system. Don't ever let your ego get involved and let that damage your results, right? You've got to get past that desire to be proven right and say, just look, be willing to take a loss when we need to take a loss, be willing to take that bird in the hand of that double. Don't try to shoot for triples or more. Take the doubles and run. So like we said, 3 months access with settings and rules, with weekly video training, with dedicated email access to me and my research team. $891 value. It's worth more than that with all the ongoing support and access, frankly, but that's the price that people pay off my bigtrends.com website. But you're getting it today for only $177 for the next 90 days, less than $2 a day effectively. And you just go to that link there. It's members.bigtrends.com. It's not a www link, mind you. Members.bigtrends.com is actually going to be your login information too when you get signed up. Members.bigtrends.com/corner on this super special. I should show you the page real quick so you can see what that looks like. That you get signed up on that and you say, okay, look, I'm going to be able to take advantage of this. Let's see why it's not popping up for me here. Let me see if I can, might be covering it up here. Let me see if I can go back over to it here. get that page. Bear with me 1 second. I'm not sure where that page went. Oh, it's hiding right behind my chat box. There it is. Here we go. So basically, look, it's real simple. No hype, just really clean, clear, secure information. Like on our 26th year serving our Big Trends community, you go there and there's no other codes to put in or anything. You basically say, look, it's all right there. We've taken all the discounts down. There are no promo code for the savings because we took $891 down by more than $700. It's just $177 for a 3-month access. I believe once you see how good it is for you over the next 3 months, you'll want to continue, but there's no rebill set up on this. It's just try it for the next 90 days. Review our terms and conditions, which are hyperlinked there and down below. You can then click on that box, and you can either complete your purchase by putting your payment info in there on that page, or you can also click through to PayPal and pay through PayPal. I do a lot of my online transactions through PayPal, but whatever works for you, you've got options there. Make sure over here on the left that you, of all the fields, you got to get right. Obviously, you got to have your street address match your credit card information, but the bottom line is that get that email right. Fill out that field correctly. We don't make you fill it out twice. Just make sure you get your email in. That's the first way you can get set up. Once you get set up with the email, and you'll get your welcome information over email, we'll also send you information how you can also get them. The alerts, entry and exit alerts sent to you via a text message or WhatsApp as another approach to your mobile phone as well. Notice, how can you reach us if you've got any questions? Call us toll free. That's 800 Big Trends is the number to remember, but it's 800-244-8736 or 1-800 Big Trends. You can also email my customer service crew, clientcare@bigtrends.com, with any question you've got. I'm out of time. I need to hand it back over to Anthony so he can allow our next great trader and speaker to share more insights with you. Thanks for being with us. Check that page out as soon as you get a chance there at that members.bigtrends.com/corner. Back to you, Anthony.
Thank you, Price, for that laser-focused guidance on leveraging short-term options with technical precision. That was loaded with value. Check out the chat box for details on how to get started with Price's latest trading solutions. Joining us next is Chris Vermeulen from the Technical Traders. Chris is known for his deep cycle analysis and market timing expertise skills that are critical right now as global markets continue to evolve. His presentation, How to Invest the Current Trends and Cycles for Stocks, Bonds, Commodities, Real Estate, and the Economy, will give you a true macro perspective and how to profit from it. Chris, we are all ears. Oh, I think you're on mute, Chris.
There we go. Can you hear me now? All right. Thanks, Anthony. Hopefully you guys can hear me. Just let me know if you can. You should be able to see my presentation here. Are you there, Anthony?
Yes. Yeah.
Perfect.
I was waiting
Okay.
for the audience, but yeah, you're good. Thank you.
All right. All right. Well, thanks, guys. Appreciate everybody sticking around. It's been a long day. Lots of great presentations. Price Headley always got amazing stuff. Educational as option stuff, second to none. Anyways, today I want to switch gears a little bit, go from more so from day trading and options trading, being really active, to kind of the other side, the kind of extreme other way to play the markets. Instead of more so managing smaller accounts or smaller trades, a lot of them, and try to swing for the fences for 100% return, I'm going to talk about and show you how to take advantage of the current market trends and cycles and bonds and commodities and the real estate, the economy, with your entire portfolio, where you really just have to put on 1 or 2 positions at a time, and you can grow your entire account in a very consistent way and take advantage of the markets with a lot less work, a lot less effort, stress, and risk. So that's what I want to jump in today. Before we get into it, obviously this is webinar is for educational and informational purposes only. It's meant to provide insights and ways to view the markets, but I am not a financial advisor, so make sure you consider speaking to one before you do anything. So, all right, let's jump into what most people are used to. As traders, and investors, we all want bigger returns. And when we take a look at these returns over the last 5 years, these are just sample returns. Obviously, we want the bigger returns. That's kind of a no-brainer. We want to generate bigger money so that we can retire sooner and do the things we want to do. Now, this type of trading, though, does require you to swing for the fences. You have to be much more aggressive, requires a lot more time. And you can get higher returns with that. On the flip side, if we were to take a look on just focusing on the 8% return, the crazy part is getting 8% return a year if you have a strategy, a technically proven strategy, isn't all that complex. You don't have to do a lot of trades. You don't have to swing for the fences. You don't have to take big risks. And you can end up just, earning a nice steady return. And the crazy part is, it may not seem too exciting, but it ends up making the exact same amount of money as an aggressive trader who's doing a lot of trades. And because they're aggressive trades and highly leveraged, you have to do smaller position sizes to counter that risk. So it requires a ton of work to do active trading. And there's a way that you can take advantage of this market where it's much more passive, much more feasible in terms of time and commitment and risk. So that's what I'm going to show you today, is how you can actually generate much more than 8% year after year on average, crush most active traders, because the reality is most active traders end up losing money. There's lots of surveys out there across the United States and Brazil and Taiwan and all these places that have done different studies on traders, that if you are an active trader for 300 days or more, on average, 97% of people lose money. And that is even during bull market phases. And that's because of lack of understanding of the markets, emotions, risk management. Most people don't really have any, and they don't have strategies. So we're going to cover some pretty interesting stuff here today. So again, I'm totally switching the script here in terms of who I'm kind of catering for right now. People that I can't help are those of you who absolutely believe you have to constantly trade. The more trades, the better. Give me trade alerts. Give me trade alerts. I have been doing this since 2001 with my newsletter, and subscribers have helped over 30,000 people. And I can tell you, if you have the mindset that you think you have to always trade, you have to have multiple positions on, and you believe in diversification, you got to own gold, you got to own miners, you have to own options and bonds and stocks and hold them all and do all these things, and you're going to hold them no matter what because you think you're diversified. It is a great way to lose a ton of money when there's a financial reset. And the problem is financial resets don't happen that often, and people get complacent, and you forget sometimes the pain and the losses that come with it. So if you're under thinking these things, maybe this will be a wake-up call for you to see a totally fresh way to attack the markets in a way that frees up your time and can make you a lot more money on your overall portfolio versus actively trading a lot of small positions. So those of you who can really get a lot out of this, if you are worried the markets are topping, you're worried about your lifestyle and your capital, and you really value consistent growth and above average growth and more so capital preservation, you want to protect your capital, you want to protect your lifestyle, then this is critical, because I believe we are entering into the next major financial reset and recession. It's a matter of time before it happens, and it doesn't matter when it happens because we follow price, as you're going to see here. But this strategy I'm going to show you will free you from the stress of having to worry about losing your shirt and having to downgrade your lifestyle. And if you feel you don't know how to gauge the markets and understand this, or your advisor isn't going to be able to protect your money, which the reality is almost 99% of financial advisors will lose money in a bear market. Their strategies are buy and hold, diversification, and when there is a bloodbath in the markets, almost everything goes down. So the strategy I'm going to show you will allow you to retire sooner with a lot more money and a lot more free time. And time, as you all know, as we get older, becomes the most valuable thing we have. So if we were to look back to the 2000 tech bubble burst, the 2008 financial crisis, one of these big resets are coming. We're going to see another 35 to 55 or more % correction in these markets. And while that does suck, losing money actually isn't all that bad. It's not the worst thing that could happen. The worst thing that we can't make back, because as I'm going to show you, we can make a lot of money and we can make it fairly consistently. The one thing we can't get back is time. There was 13 years here of not making any money, and the NASDAQ took even longer. It was more like 16 years. That is a long time. If you were close to retired or retired already, not making any money and losing half of your wealth, potentially a couple of times before you start making more money again, is a recipe for disaster. And I want to show you how not only can we avoid these big market corrections, but how to profit from them and how to not waste time so that our account is consistently growing and growing month after month, no matter if the market is going up, sideways, or down. And that is the real value here, is security and consistent growth and not wasting time. So a little bit about myself real quick. I'm located just north of Toronto up in Canada. I'm married, 2 kids. I'm an entrepreneur. I have multiple businesses. I invent things. I've been a technical analyst since 2001, which is when I started my first financial newsletter, because I realized when I started in 1997 and blew up my accounts and learned that fundamental analysis doesn't work and everything goes down, even good companies during a more or less a bear market. That was when I realized technical analysis is the way to go. Follow price. Don't get me wrong. I do not predict. I'm not about predicting pricing and market tops and bottoms. I am all about following the markets and the trends. And that's what I'm going to show you today. And when you follow things, you don't really care where it goes. You don't care about the news because it has zero input. And we just follow. And it becomes pretty simple and straightforward if you can throw out all the old thinking of listening to news and all of that stuff and trying to outsmart the market, which we can't really. Long story short, I was able to more or less retire at the age of 27 from the financial markets. Live a beautiful house on the water with a pool, cabana, boat. My daughter Mirabelle, my wife Kristen, my son Ben, and my daughter competes for horseback riding. My son's into dirt biking and all kinds of other sports now. But life is really good, and it all because of managing our finances. I have been through the roller coaster. I blew up 3 trading accounts when I was younger. I've lived through a bankruptcy as a teenager with my family, and I'm a pilot. And the pilot side of me and my INTJ Myers-Briggs personality type, where I'm considered an architect or a scientist, risk and data is my thing. I understand it, I grasp it, and I apply it to the markets. And learning to fly, I got my license at the age of 16. I've carried over checklists and all of that stuff into the markets to allow me to really autopilot a lot of the things that I do and generate consistent returns from the markets and various other businesses, simply because of having systems in place and following the systems. So let's get into how to consistently generate higher returns. And I'm going to show you that through understanding the market cycles. You need to know the stages. You need to understand the emotions that are going to go through the markets. And then, of course, you have to manage your positions, your risk. And I do that with an asset hierarchy, which is the exact opposite of pretty much what generally options traders want, which is more volatility. And most people naturally gravitate to a fast moving market or fast moving stock. And you're going to see if you do the complete opposite, you can actually outperform and crush the markets and make a lot of money with a lot less effort and risk. So let's start off with the stock market cycles. So there's 2 cycles here. The first one we'll cover here is this blue cycle. This is the stock market cycle. And the key thing I want to touch on is typically when we're getting close to a major market top, and we tend to see gold specifically outperform and come to life. And we also see energy stocks outperform and come to life. And one of them is precious metals is more so protect your money. And people start, the savvy investors start to raise capital. We're seeing Warren Buffett, crazy amounts of cash. And we start to see investors sell stocks. They start to sell real estate. They raise cash, and then they move it into physical gold, and they get it out of the financial system, including the banking system. You could save all your money and avoid the stock market crash and keep it in the bank, but you are not very safe. In fact, the US banking system is brutal, and they could go bankrupt and you could lose all your money being what you think is the safest position, just sitting in a bank, cash. So that's why physical metals come to life, especially gold around the world when things get ugly. And when things start to get ugly and wars and all kinds of uncertainty kick in, people expect energy stocks to do well because if there's war, there's going to be high energy pricing and all of that. So let's take a look at these charts. So this is a chart of gold. This goes back to early 2000s. We started a super cycle. Gold had a beautiful run up, and then it went dormant for a couple of years. And while it went dormant, this is when the stock market was on a blitz. It just took off. Housing market took off. There's bubbles everywhere. And then suddenly, as we inched closer to 2008 kind of market top, gold popped out of this range and took off and started to lead the way higher. And that is because savvy investors are seeing the music coming to an end. They want to get out of the financial system, protect their capital, and then eventually gold will get hit with a bear market, but it is the early warning sign that there is global chaos and major tides and shifts happening around the world. Fast forward to 2019, we started another super cycle in gold. It then went dormant for several years while the stock market and real estate market have screamed higher. And then really in the past year, we have seen gold explode and take higher. And of course, we have lots of chaos in the markets. We have all the signs showing that the market is losing momentum, and we are getting closer and closer to not only a major bear market in stocks, but an economic top, which we'll touch on. So, I mean, we can look at the charts. We'll go over to energy stocks here in one sec. So let's just take a look at energy stocks. In 2008, energy stocks took off and outperformed. But when the bear market hits, you do not want to be holding these things. They tank and crash. And we are back up, seeing energy stocks trading near a high. And in fact, if we look at the live charts of XLE, this is just going back to 2001, we have seen energy stocks move up and to the right. Right now, they're finally looks like they're starting to top. They're more so trading sideways. But energy stocks have been going up while crude oil has been going down in that same time frame. We've been seeing oil just go down and down, and there is a critical support level on the oil chart around $65 that when this breaks, we are going to see a precipitous fall in oil. And these energy stocks that have complete, bearish divergence, they're going up even though they're making less profits and all of that stuff. We're going to see a huge reset, a massive 50-60% reset in the energy space, energy stocks. So right now, we're just in that kind of late stage of that market. The other play that's going to be interesting will be the bond market. The bond market has been trying to carve out a bottom. If we look at the charts of where TLT is today, the long-term treasury bonds, we have been selling off since the COVID spike, and it is in a bear market. It's more so in a stage one, which I'm going to show you what a stage one is. Stage one, in short, is dead money. Just wait, let it bottom and start to turn up and start a stage two, which is when the easy money and the tide is in your favor. So let's jump into the economic side. So right now, that was the technical side. There's all kinds of warning signs. I mean, this is very high level. There's a lot more behind the scenes unfolding, but these are the major things to be very aware of. If we look at this yellow cycle, which is the economic cycle, some of you might relate more to this as on your side of things if you're more into the news, but full-time unemployment year over year is starting to drop. It's going negative, which means fewer people have security, job security. There's more short-term work. What's happening is we're starting to see, if we look at the unemployment rate, we have started to see the unemployment rate start to rise. And while it is still low in the United States, if we zoom into this last little section and look at the zoom in, it is a series of bull flags. We have a rally up, a pause, a second rally, another pause. These are bull flag patterns. And usually a bull flag pattern is a halfway point. So if you run up and you make a flag, whatever this first run is going to be what the second run is. And this is a larger flag, meaning this becomes the entire first run higher. And then we're going to see it shoot up and go even higher on the next move. So we are very close. Very similar to 2007. We saw it bottom out. It had a little bit of a pause just before everything fell apart, and then unemployment spiked higher. And this is just this little hiccup. And so we are very close to that. As unemployment goes up, more people start to run out of money. And we can see here depleted excess savings. So when COVID hit, people really couldn't spend money for a little while. They preserved it, they saved it, and then suddenly they realized it's not the end of the world, and now everybody's been spending stuff and spending their money, and now we're way down lower than, they have less money than they had pre-COVID. The people who aren't well off have burnt through all their money. Anybody who has assets, stocks, real estate are still doing well because there's these bubbles and they're holding value, but the majority of individuals are struggling. And of course, we can see that here with credit card balances. We have a huge surge in people maxing out their credit cards and then saying, I'm not paying. They're delinquent. That is not a good sign. This is one of the highest levels we've seen. where they actually are maxing out their credit card and then not paying it. In the past, we've seen people say, well, I got a couple grand on there, I'm just not going to pay it. But now people are like running short on money, using everything they have on their card and then saying they're not going to pay it. But it's going to bleed over. After credit cards starts to come, rents stop getting paid. And then the real estate stuff starts to kick in, the holders of the real estate. So, you know, if we actually take a look at real estate, especially Southern United States, new single family homes, we have broken the 2006, 2007 high in terms of amount of homes for sale. And I think this is actually going to continue to pick up. What's going on right now with Canada, United States, there's a lot of Canadians very upset with Trump, with the threat of, you know, becoming a state, and Canadians are boycotting the United States right now. And there are tens of millions or millions of Canadians that go to Florida and have homes and condos there that say after this winter, they're done. They're selling and they're going somewhere else. They do not want any part of the United States. And so it is going to create another surge on top of these new home sales. There's going to be a huge wave of even more selling. And the good thing for Canadians is the exchange rate is really good. So even if this housing price starts to fall, Canadians are still making like 40+% on their property and just the conversion. So the Canadians can get out of it without taking a big haircut, but American pricing is going to drop, and obviously they don't have the currency conversion to help subsidize the drop in pricing. So we got a record amount of homes for sale. This is how many sales of homes. Sales are way down. If you're a real estate agent, you probably know sales are in most places are drying up. There's lots listed now, but they're not actually selling. And this stat here tells us pending home sales. People don't have contracts in place. There are very few pending. We're at all-time lows. People do not want to buy a house. They're not under contract. They're just not moving and budging. And that's not a good sign, because if we take a look at the average price of homes, they have been fading down and they're just holding on to a thread. And I believe we're going to see about a 16 to 25% drop in real estate pricing this year, or over the next year and a half. It's going to have a very precipitous fall when that happens. And this is when the real estate market starts to drop. This is when investors actually start to get even more scared with their stocks, because they're like, whoa, my stocks are falling, but now my real estate is falling. And real estate is usually the largest portion of somebody's wealth. So once the real estate bottom starts to fall, which we're probably going to see this spring, people are going to realize they have to lower their house quite a bit in order to get it sold. That is going to cause more panic in stock investors. So those are kind of the things that are unfolding, both from the technical big picture cycles and the kind of economic cycles that the economy is slowly turning around to the downside. All right, so let's talk about market structure real quick. We need to understand there's 4 stages to the market. Stage 1 is a basing formation. It's a sideways. I have it shaded red and orange because it's dangerous. It's a waste of time. It's choppy. It's unpredictable. The stage 2 we all love. That's a bull market phase. It can last very, very long. That is when you want to invest in stocks and hold stocks. But really, the stock market in general has been in a stage 3 since pretty much March of 2021. Now, if you look at small caps or equal weighted stocks or micro cap stocks, they have this chart pattern. It is not a very healthy sign. But the NASDAQ, the SP 500, with the large mega caps in there, have dragged those indexes up, camouflaging this pattern. People think this pullback is a buying opportunity. We're just seeing hedge funds. A bunch of hedge funds just talked about this morning about how they're getting positioned. They're expecting the next major run to take place higher in the markets, and they're getting positioned. And I find that shocking, how a lot of hedge funds, they just go on fundamental and they buy anything that pulls back, and they have a very different mentality from a technical side. If we take a look at stage 4, stage 4 is a massive decline. That is what comes after we go into stage 3. This is a financial reset. This is where things get ugly. This is where lifestyles get downgraded, businesses go bankrupt, layoffs spike, and unfortunately, the stage 4, which is 2008, the tech bubble, this is when there was about 8,100 suicides in 2008 to 2009, directly related to falling stock prices. And this is how dangerous, and this is the whole reason why I'm trying to share this whole strategy here, is because This is going to be the most painful thing for the majority of investors. Most investors are pretty much like 50 plus and they're retired, and to lose half of your portfolio right when you want it the most, you finally made it to the end of, financial freedom and time, and then this happens. And the market is great at applying the maximum pain to the largest group of market participants. And that brings us to overall risk in the market. We are literally, I think, at peak risk. Or I think we were like a couple months ago. I think the stock market may have actually finally put in the major top based on a bunch of things that have happened, even with the Magnificent Seven and momentum and things that has stalled. But it doesn't matter what you buy. If you buy real estate or stocks here, there's not much upside. I don't think there's a whole lot of upside. There's a whole lot of downside. And if you can avoid the downside or profit from the downside, then you're going to have all your capital or more capital to invest in whatever it is you're interested in buying during the next recession, and you'll be able to pick it up for pennies on the dollar. So that's what we need to focus on. Let's take a look at how the market moves. So I like to look at the stock market like the ocean. I love the ocean. I love fishing, surfing, kiteboarding, all that stuff. And as we all know, a rising tide lifts all boats. Well, the stock market is the same. When the stock market is in a bull market, in a rising tide, you can pretty much throw a dart at the stock market. That's when you want to trade strategies that own stocks, that can hold stocks. It's when you want to play breakouts, and you can be more aggressive with sectors and individual stocks. But when the tide is going down, like in 2022, the market fell 25%, you don't want to be holding stocks. You want to move somewhere else. And the most recent bull signal we had was back in 2023. And of course, it's up about 45, 50% now. You want to know when to hold these and have a no-brainer. You just want to make sure you're always trading on the side of the overall market trend. And that's the key here. So if we were to zoom in a little bit more, now this is the daily chart. That previous chart was going back many years. That was the weekly chart. If this is the daily chart of the SP 500, and think of a surfer. If you're walking down the beach and you look out and you see surfers floating out past where the waves break, what are they doing? They're out there waiting for a fresh set of waves to roll in. Every 5 minutes or so, there's a new set of waves that come in from the ocean. You can see them coming. You pick the wave that fits your position, that picks your skill set, picks your risk level, which for us, we have these waves that roll through the stock market every year. There's about 5 to 12 waves through different assets every year. We can see them coming. We can identify them with technical analysis. And the nice thing about hopping on and catching a strong wave is we know when they start to weaken. We can then simply carve off that wave, get off it, move on and wait for something else. And that allows us to ride these nice waves to the upside and then wait for a reset and hop on and continue to ride it higher after that. And in an uptrend, the markets kind of gets skewed to the upside. I talk about it in my book, Cycle Skew, but they're naturally kind of dragged out up and to the right. But in a falling market, it is much more wave-like and it's much more violent. You can see the green uptrends are very short-lived. In fact, some of them don't really produce anything. All the money really is made on knowing that the market is going to go down more often than it's going to go up because the tide is going down. So you can buy an inverse ETF as the stock market goes down. You could move to a different asset class. For example, the stock market fell about 25%. Well, you could move into the US dollar index ETF, UUP is the symbol, and it went up 17% while the stock market fell. We played UUP during this time frame. So there's all kinds of ways to take advantage of these. You just need to be able to identify when to get out of the markets and buy something that goes up when the market goes down. And that is what I'm going to focus on and how we rotate through various assets by knowing if we're in a bullish phase, bearish phase, is there a fresh wave or is there a no wave? And if we do all this, we end up with this very kind of strong, consistent growth to the upside versus the SP 500 and the buy and hold strategy. We dramatically outperform it, and we have that consistent upside. We don't have bear markets where we lose 50+% or 35% like COVID or 25% in 2022. We just kind of consistently are rotating from one asset to the other and watching our entire portfolio grow with 1 or 2 ETF positions at a time. That is it. And no leverage, nothing like that. In fact, we use compounding as our leverage, which allows us, which I'll show you later, allows us for more growth and it can be tax sheltered if it's in your retirement account, which makes it for a very powerful strategy. So how do we go about managing risk from a really high level? When we have a new buy signal, everybody should implement this. The second you get into a trade, you should already know where your stop is, and you should probably place that order. You never know when something's going to hit, a news, an event, and price could drop. You always have to protect your downside. And then once you've done that, you want to make sure you put your targets in. If price hits a target, you want to peel off some profits at that first target. You want to move your stop up. When you hit your second target, you'll move your stop up, or a trend will change and you get out when the analysis just says, hey, this market has reversed. Let's just step aside, let the market figure itself out, and then we'll get back in and we'll play these upside moves and play the trends and our targets all the way up. So it's pretty straightforward when you look at the market through the lens of technical analysis and managing positions and not swinging for the fences, but just realizing, hey, we're just going for the safe chunk of every trend, and we're not trying to have a whole bunch of fast moving stocks and trying to balance 15, 20, 30. I was talking to somebody the other day, they have over 50 stocks in their portfolio, and he says it's a full-time job. And I know exactly what that's like because I have done that years ago in the past. But this is what our signal looks like. A trend changes direction. The market gives us a purple bar saying, hey, get in the next day at the open. We get in, the market momentum will run up. It can hit our targets. These were last year. You can see we hit these targets on both the SPY, the QQQ, and then we let those triggers continue to mature to hit other targets going forward, or if there's a trend change, we then get out. So the question comes, how do we buy the correct asset? And this is where you're going to see how we really deviate from volatility. So naturally, we want to be in the most volatile asset, which is like the stock indexes. US equities are the play. They have the most volatility in general. As you go down this list, we look at bonds, we look at the US dollar index, and then we look at a cash position, which just pays us daily interest and dividend. And so as you can see here, the volatility drops as we move down this list. And what happens is when the stock market goes out of favor and starts to fall, volatility goes up, everything starts to move faster. And so we want to move to a different asset that's moving slower to counter that. We don't want to be in the market when it's volatile because it brings up risk. It brings up potential larger losses. And so depending on which asset falls in favor, we move down this list. And sometimes nothing actually meets the criteria in certain situations. And we actually just will sit in a cash position for a few weeks or a month or so as the markets shake things up, pick a new direction, and then we'll reposition ourselves in one of these assets. But we do not want to be involved when the markets are extremely wild, because all it's doing is risking our potential retirement, our lifestyle, and there's no need to take a loss very quickly and repeatedly in a volatile market, which is what it is easy to do if you're poking around in those. So what this asset reinvesting strategy is that I show you, where we reinvest into a different asset that's favorable. This was back the COVID crash. The stock market started to sell off. I didn't even know COVID was a thing at this point because I don't follow the news that closely at all. But our strategy said, hey, the trend has changed. The money flows have turned negative. It's time to get out. And we got out of the stock index, and TLT at that time was still in a strong uptrend. We got in and it rallied 19% in 9 days. We had a 15% upside target. It actually gapped directly above our stop, huge, to 19%, and we got filled at the peak. And then from there, it fell about 20%, and then of course it fell another 40%, 40% from the highs after that. But we moved out of stocks into bonds, and then we sat in cash for about a month, just earning dividend and interest. And then the stock market finally gave us a new buy signal, and we were able to buy back into the stock market at a 13% discount and ride it up for a near 20% gain. And this whole time where the market was starting to fall and our account was moving higher, when there's total chaos and the market fell 35%, we were sitting in cash and just taking care of ourselves, our family, not stressing. In fact, we were richer than we'd ever been because we just caught a 20% move to the upside in our bond trade while the stock market fell 35%. And that is the power of understanding when a trend ends and rotating to something else that is moving up. And also to understand that cash is a position. In fact, cash is one of the most powerful positions you can have in your portfolio when it's needed. When it is needed, it is like the only play that can be done there. Sometimes stocks and bonds will fall 20, 30, 40% together, as we have seen, and it has devastated a lot of portfolios over the past few years watching that happen. So sometimes you have to, actually do nothing in a way than try to crank out returns. So in a nutshell, the buy and hold strategy, if you're into the buy and hold, you've got all kinds of sectors and individual stocks and commodities and bonds, and you think you're diversified. Well, you may be diversified. Well, you are diversified, but the reality is when the tide goes down, almost everything goes down with it. And so a good example are this run of 10 years with the buy and hold strategy, the 60-40 portfolio. Start with $1 million. Every year you withdraw 50,000 to subsidize some of your retirement and extra fun time. Over that 10 years, the market only averaged about 5.78%, which is not very good. And after those 10 years, you still have about $1 million left. So, you withdrew 500,000 and you still have your base capital left. Problem is now things are about 30% more. So because of inflation, that's how everything moved up. So yeah, you have the same amount of money, but it doesn't even buy as much anymore versus a strategy where we rotate from one asset to another and we're constantly in something moving higher, taking advantage of both rising and falling markets. And we have a much higher average return. And you can see we have 3 times the amount of capital, and we don't have to go through any 19% losses or even bigger in the middle of those phases like most investors do. So this is a very passive strategy. And of course, it only involves 5 to 12 ETF trades a year. We just rotate our capital into one ETF or two, and we just ride that wave. And as soon as the technicals say, hey, this wave is coming to an end, it's stalled, just move back to cash or move to a different asset. And that is the power of actually managing positions and following the markets. Let the market tell us what it's doing, and then we just reposition ourselves to follow and ride its coattails. And here's an example of kind of the stats. So this top strategy here, which is the one I'm showing you, since 2008 is up 865%. The SP 500 up 276%. The buy and hold portfolio is only up 135%. And to me, yes, returns are great, but the most important thing to me, and hopefully to most of you, is actually the drawdown. How much can you lose if things go bad? And we're less than 6% with this strategy. That is like less than the stock market fluctuates on a weekly basis. And that is with your entire portfolio versus losing 50 or 40% with these other strategies and having no control and having the anxiety of you never know what's around the corner. You better pinch your pennies now because in 3 years from now, you might lose it all in retirement. So it leaves for these strategies, if you don't have a strategy that manages risk, you're always going to be stressed and worried and not spending your money and having fun and feeling free. You're always going to feel trapped and worried and scared and in capital preservation mode, which is not spending money, but probably you're still going to carry the same risk. So to kind of tie things together about where we are right now, I honestly believe this year could be an absolute nightmare by the time the year comes around to an end for housing, for real estate, investors, for the stock markets. We're going to see, I think, a huge move. Inflation is still sticky. It is a major problem. We've got rising inflation in Canada. In fact, in Ontario, where I'm at, the province I'm in, our unemployment rate is already 7.5%. It is bad. We're kind of leading the way this time. I think the US and the rest of the world is going to follow. Typically, whatever the US does is kind of how the whole world kind of fluctuates. I use it as the overall barometer, but Canada is ahead of the curve, and we're already in a recession, but nobody wants to talk about it because it's just the way the governments are. The US is continuing to kick the can down the road. We've got economic data is tough to read now. They're constantly changing the formulas and what's in these economic data to fudge the numbers. So you can't really even trust economic data anymore. You just really have to kind of go by feel and some basic numbers. We've got AI taking place of a lot of jobs, and soon we're going to have humanoid robots that are going to replace a lot of workers and add, make life potentially a whole lot easier in the homes with all these things. And we're coming into a big recession. So to kind of just tie it up of what I provide here, if you're interested in this asset reinvesting strategy where it gives you the time and freedom to do stuff and to not have to worry about a market recession, you don't have to chase trades, you're not looking for a ton of big returns. We're just looking to grow our entire portfolio in a really simple way, trading the most liquid ETFs there are, which is the US stock indexes, TLT treasury bonds, the US dollar, and a cash position. It is really just 4 different asset classes that we rotate through. And we understand the bull market, bear market phases. We understand the stages. We understand the waves that roll through, and we navigate those. And this whole strategy is what I do with my own capital. So every trade position in the portfolio is exactly what I do with my portfolio. That's why I run this service, is because I have to do it anyway. I love it. And why not help everyone else navigate these markets and really enjoy the markets from a totally different perspective. Don't chase and hunt trades. Just let the trades roll in through. We'll hop on, we'll ride them, and we'll let them go off into the sunset when they fizzle out, and we'll move on to the next one. And this whole strategy here, if you want to be an active trader, which most of you are based on all the presentations today, it's all very active strategies. You can follow this. I have a daily pre-market video that goes out. I cover all the major markets and assets and stocks every morning with a lot of short-term trade analysis. I know a lot of people day trade off the morning gaps and the overbought, oversold conditions that take place. So you can actively trade this on your own. You can have it auto traded for you if you want. There's actually financial advisors that execute this strategy for people. If you don't want to use an auto trading broker, you can look it up and look up a financial advisor that is doing the asset reinvesting strategy. You can learn the technical analysis of how we view indicators and patterns and how we interpret them and trade them. Every month we have live mentoring sessions. Tomorrow, actually Friday, we have our next mentoring session at noon. So if you join today, you'll be in tomorrow and get to talk markets and ask all the questions you want and look at the charts you want. And it's pretty fun. It's a great, usually about an hour and a half, great group of people and lots of cool insights and stuff there. Plus, on top of it, we have the band trader. You get this bundle here. This is the hottest sectors. And this is really amazing when we are in a stage 2 bull market. And let me just jump over to the band trader. So the band trader, when we enter a new bull market, which hopefully will be in 2026, we're going to have this hot list. We have it now, but it'll be very powerful in a bull market phase. And how this works is it tells you where it says new here. It says new trigger and it says 0. That means there's a new trigger today for this particular asset or ETF, this sector. And how it works is up here it says 15 for a trigger. So it's saying 15 days ago we had a buy signal. It's up 33%. 20 days ago it gave a buy signal. It's up 30% and so on. It goes down the list like that. And to give you a visual of what these look like, because if you're an options trader, this will knock your socks off. This is when you can really just knock it out of the park time and time again. These little squares, green squares in the bottom of the charts, these are the band triggers. And when we are in a bull market, we get a trigger, you can see we have these 2-week moves, 17%, 1-week move, 8%, 2-week move, 21%, 11%, 11, 20, 23. If you're an options trader and you're trading options and stuff is moving 10 to 20% in 1 to 2 weeks, you know the kind of potential you have there. When you know just to get in, just as it's starting the next like rocket higher, that is when you can really knock the socks off. The thing is, you have to be patient. There's a time and place to trade every strategy, and there's 4 stages to the markets. And the problem is everybody trades almost one strategy and they think it's going to work all the time. But you have to realize there's different strategies for different times. And this here shows us the different stages. Stage 1, stage 2, stage 3, stage 4, and then the strategies that we offer at the Technical Traders that work in these various stages. And the 2 really standout services that work in all market conditions is the CGS or the ACS strategy, which we call the adaptive compounding strategy. It works through all market conditions because we evolve the strategy and adapt it for each stage. So you don't have to do it. You just follow my portfolio, and I have already done all this. The flip side is we also have an options trading signal service, which allows you to take advantage of doing all the different options play. And of course, Brian, who runs that, he evolves the strategy to work in high volatility, low volatility, trendless markets, all that stuff. He does all those strategies. So there's 2 strategies that work all the time, but a stage 2, this is where the band strategy really comes into play. It is a shorter window. It's just really works in the bullish phase. And that's when we can have these massive explosive trades to really amplify returns during a bull market phase. And the band strategy also has an inverse trade. During a stage 4 decline, there is a small window. We trade inverse ETFs, and it can be very powerful as well. And you get all this bundled in. You get the CGS, the TTI, which is the long-term investing, the bull bear market cycles trades, and the band in this package that we offer right here. So more or less, that is kind of what I offer from a very high level. I know I scratched the surface. There's not enough time to get into really the nitty gritty details, but that is what I do. It's all about how can I make the most money with my entire portfolio with the fewest trades every year and with the lowest risk. And I used to be a day trader. I used to run my own futures day trading room. I used to run small cap trading. I used to do a lot of options trading. I have done it all. I've worked with thousands of traders. And the reality is, unless you're going to dedicate your whole life to this and keep trying to learn, active trading is a job. It is difficult. You're better to find cycles and waves than try to play the noise in the charts and be really active. The more you trade, generally, the more you're going to lose, and you're going to spend a lot more time on it. And this really is just designed, this strategy is like, you just want to grow your wealth and not stress about what is happening in the economy and the world and the markets. This is it. You can set it and forget it and do your thing. So I think that's about it. If anybody has questions, they can go to my website, which if you go to my website, the Technical Traders, you can go to the contact page, and you can give us a shout or send us an email. And if you go to our website, thetechnicaltraders.com/exclusive, then you'll get this offer here, $24.99. You'll get this package and you can take advantage of everything we talked about today. So that's it. I'll pass it back to you, Anthony.
Hey, thank you, Chris, for your in-depth look at how traders and investors can align their portfolios with today's bigger trends and cycles. Your timing insights are always spot on. You can find Chris's special offer in the chat box. I put it there. So feel free to click on that. There was some really great information there, really great information. Thanks, Chris.
Thanks, Anthony. Take care, guys. Bye-bye.
You too. We're honored to welcome a legend in options trading, Lawrence McMillan, author of Options as a Strategic Investment, often referred to as the Bible for options traders. Today, he's presenting McMillan's market outlook, what option indicators are saying now. This is a rare chance to hear from one of the most trusted minds in the industry. Larry, we're grateful to have you here.
Okay, thanks.
You're welcome.
Very kind words. So we're going to take the next 45 minutes or so, just take a look at some of the indicators that we have, which have good track records, and most are option-based, not all of them. Just a little background on our company. I started as a derivatives research company about 35 years ago, and we were selling research and publishing newsletters, etc. But because we had a pretty good success with our recommendations in the financial crisis, we moved into money management. So we're both a CTA and an RIA. And then we also do a certain amount of option education, things like this. And we also have a mentoring department. So I'll come back to this later, but at this website, we will have a special offer, and we will be sending you the PDFs of today's webinar. They're not posted at that website address, but we'll be emailing them to you. So let's get started. There's 4 basic indicators that I look at, although you'll see there's some derivatives and nuances with these. But the main one is always the chart of the market itself. We want to make sure that we're in tune with the market. If the indicators are saying buy and the market's in a big downturn, well, the market is right by definition, so our indicators are wrong. We'll also look at equity-only put-call ratios, both on the broad market and on some individual stocks and futures. Market breadth, we have an option-oriented way of looking at that, and that's an important indicator too. And then the volatility indices have things to do with VIX. VIX is VIX is pretty important. People misinterpret it a lot, I think, but right now it did spike up and it came back down. So VIX is something we want to pay attention to most of the time. There's the two main rules I have. The first was oversold does not mean buy. So we got oversold, I'd say maybe a couple of weeks ago when market kept going down. In some ways, we're still oversold in a few indicators. So our rule of thumb is that we don't buy an oversold market. We wait for it to confirm a buy signal, because oversold markets can't continue to fall for a long time. The corollary is that overbought does not mean sell. That's not really apropos right now. We don't have any overbought conditions here with the market having just sold off about 10% in a month. But we will eventually someday. So here's a long-term chart of the S&P, and I've got something on my screen. I'll try to get rid of it. There we go. We went into a bull market really in the fall of 22, right around October of 22, and we've been in that bull market ever since. We had a 10% correction back there in October of 23, and then we had a 9% correction last summer. Maybe not remember that, although because it was quick, we smashed down in August and popped right back up again. But now we just have had another 10% correction. So I guess the question is this going to continue to be something worse, or have we just about seen the worst of it? As we work our way through these indicators, we'll try to answer that question. The main 2 points that we're looking at right now is resistance at the all-time highs. Obviously, if we got back to there, people would be feeling pretty good. And there is a support level here from last September's lows, right around 5,400. But it also had a few other data points along the way indicating that that should present some support if we get down there. I think if we break below that, things could get a lot worse. This is just a zoomed in a 1-year chart. It's one thing you can see on the chart is there's a gap right here down to about 56.60. Today we traded into that gap. We traded down to 56.70. We didn't quite fill the gap, but sometimes a gap will present some support right in there as well. Obviously, this is a support level where we had several daily lows about 2 weeks ago and bounce from there. So that's the 5,500 to 5,550 range. That should be some support as well. But typically an oversold rally will rally back about to the declining 20-day moving average, which is this line right here. And you can see we did that and we just popped a little bit above it. That's fairly typical. This time, coincidentally, we also ran into the 200-day moving average, which is this line. That doesn't always happen, but longer-term institutional traders like to be on the right side of the 200-day moving average. So if the market is below there, they're probably lightening up, and if it's above there, they're buying. So right now, we're still below the 200-day, and now we're back below the 20-day. So this is definitely a resistance area in here. There was a 5,800 or so, 5,850 kind of resistance level as well. So this whole area right in here is important. If we break through 5,850 on the upside, this rally might have a little more staying power. But just to sort of summarize those things, we're in a bearish trend, obviously, since we're off 9-10%. And we'll have to see where this rally peaks out and then falls back. That would establish a trend line, which could be important going forward. As I said, there's that longer term support from last September, 5,400, and then the shorter term support, more near term support around 5,500, and that resistance around 5,800. So we're watching this. I mean, we trade as we go through these. You'll see individual signals. We trade them as they happen. But a move below 5,500, and especially below 5,400, is going to be pretty bearish if that happens. So another thing we do with the S&P chart is we draw what's called modified Bollinger Bands. When John Bollinger invented Bollinger Bands, he needed a definition of realized volatility, so he called that the standard deviation of closing prices. And that's reasonable, except that's not what the math guys use, like a Black-Scholes model, for example, which is what we're linked to with the implied volatilities of our options. So our implied volatilities have to agree with their definition of realized volatility, which is similar but just slightly different. And that's the standard deviation of daily percentage price changes. So we draw those bands and we look at where the plus or minus 4 standard deviation bands are. If we move outside of those bands, that sets up a potential signal when we move back inside. Now, for years, we just used that as a straight signal, but there were a lot of, false signals before we got the, let's say, the real one. So we created a variation of that. We call it the McMillan volatility band, and that's what we use now. So right here, this is a current chart, and you can see up top the 4 standard deviation band is this band right here. That's plus 4 standard deviations, and then just inside that is plus 3 standard deviations. So, for example, back here we moved outside the 4, then inside the 3. That was a sell signal. When we get a sell signal, we hopefully will see it retreat to the bottom area. In this case, it hit the minus 4 standard deviation band, moved back inside, and gave us a buy signal. That was last August. We haven't had the market go outside plus or minus 4 standard deviations since then until just recently. So this last market decline got well below the minus 4 standard deviation band. That's this one, and then moved back inside last week. And this is the day right here, March 14th. I'm sorry, the March 24th, where we got a buy signal. So this indicator, which is a intermediate term indicator, has generated a buy signal. On the chart here, the red letters are successful signals. The blue one is unsuccessful. We would stop ourselves out if in this case, move back below the minus 4 standard deviation band, which is all the way down at 5,400. So for it to fall back to there would be pretty devastating. Now we trade these with options, so there's a fixed risk in our position. But the target here is the upper 4 standard deviation band, which is right here, is right now just below 60.50. Those bands move obviously as the market moves. So as time passes, they become a different. The targets become a different price. In any case, just to summarize that, we got this buy signal on March 24th. It's an intermediate term signal. We bought bull spreads and we'd be holding them until we hit either the plus or minus 4 standard deviation band. Now, this same concept, moving outside the bands, can be applied to any stock, any futures, any index. And so we have a subscription service, a fairly inexpensive service that works through TradingView that you can subscribe to, and then you can look at the bands on anything you want. So that would look like this. This is the S&P 500 again. In the upper left, you can see the symbol S&P 500 up here. And you can see this is that most recent buy signal. So when you actually get the buy signal, a green arrow appears on the chart. The green circle I put there, but the software puts the arrow there. So this was a sell signal, and that was the buy signal last August, etc. So it's the same. This one is the same chart I just showed you, but if you're interested in these on other types of stocks and indices, we publish them daily, and we publish a list of when new signals are occurring, so you don't have to dig through 3,000 stocks looking for a buy signal. Let's move on to the second subject that we look at, a second area that we look at, and that's put-call ratios. So put-call ratios were invented as a contrary indicator for the market by Marty Zweig back in the 1950s. He was getting the option volume every week in Barron's, because the put and call dealers of those days would publish an ad in Barron's to tell how many puts and calls they traded. He started adding them up, and he realized that when there were a lot of calls trading, pretty soon the market went down. And then when there were a lot of puts trading, pretty soon the market went up. So it's a contrary indicator. For our purposes, we look at it two ways. For the broad market, for the broad stock market, we use the equity-only put-call ratio. That's all stock options that trade. So there's millions of those nowadays. Back 50 years ago when they started option trading, there weren't that many, but now there's a lot. This is Marty's theory, of course, but defining what means too much put buying or too much call buying is something that's harder to do, especially with all the volume we have today. But we're pretty confident we have a decent handle on it. And here's how we would calculate. Let's say it's IBM. We sum up at the end of the day. We sum up the volume of all the puts that were traded that day on IBM separately. We sum up all the calls and divide the two, and that's the put-call ratio. Now, since puts are in the numerator of the fraction, an increase in put volume is going to make the fraction go higher. But when are you likely to have an increase in put volume? Well, that's when the stock is going lower. So the put-call ratio moves opposite to the stock price. Same thing with calls. If the call buying increases, then that's the denominator is increasing. If the denominator of a fraction increases, the fraction becomes lower. But when you're likely to have heavy call buying, well, that's when the stock is moving higher. So again, moves opposite. We keep our moving average. I use 21 days just in case Fibonacci means something. And we got these ratios. Now, before I actually show you today's chart, I just want to point out that typically the stock price and the option price move opposite to each other. So we publish on our website in an area called the strategy zone over 1,600 put-call ratio charts every day. So stocks, futures, indices, what have you. That's based on volume. So if volume gets heavy, there'll be more. And in those, we show you the stock price and the put-call ratio chart because I think it's important to see both. One is insufficient. You need to see them both. So let's take a theoretical situation here where stock is declining in price. As the stock is declining, people are buying puts, forcing the put-call ratio higher. Eventually, the put-call ratio makes a local maximum, and that local maximum is a buy signal for the stock. All right, so now the stock starts to move higher. Move over to the left, stock is still moving higher. As the stock is moving higher, people are buying call options. And so remember, the ratio will decline when the call option buying increases. Eventually, you get to a local minimum in the ratio, and that is a sell signal for the stock. So that's the theory. When you look at these charts, you'll see the stock price and the put-call ratio have a general inverse symmetry, not perfect like that, like they're shown on this chart. Now, this is a chart of the S&P versus all stock options that trade, put-call ratio of all stock options that trade on the bottom. You can see the inverse symmetry that exists here most of the time, which is why we use the equity-only put-call ratio to predict the broad market. So here's the current chart. So this is the standard equity-only put-call ratio. The most recent signal we had was down here in the lower right. That was a local minimum. Here is a sell signal. That was in mid-February. And of course, the market decline has responded well to that one. Here was a local maximum, for example, back in August. That was a buy signal. The market did pretty well with that. So again, here the red letters are successful signals. The small B's are that those buy signals came at such low levels on the chart. You could hardly say that, the market was pessimistic at that point. But up in this area, the market is, people are getting pessimistic. They've been buying so many puts that force the ratio higher. So this ratio right now is kind of wobbling sideways. And we use a computer analysis program to try to help us decide if that little peak right there is going to be a real peak or if it isn't. And so The computer analysis program looks at what's coming off the moving average, what's coming on the moving average, where the put call ratios have been in recent days, etc. And right now, the computer analysis programs are saying that is not going to be the peak. It expects this to move higher. That it may be doing that today because the market's kind of been ugly today. So right now, we did not have a buy signal from this indicator. And I wouldn't really even say it's oversold. It hasn't gotten up to those heights from before. Now, an absolute height really doesn't mean anything. It has to roll over and form a local maximum in order to give a buy signal. You'll see that on the next chart. So as computers came along, we were able to calculate a better, I think, put call ratio, which we call the weighted put call ratio, or the dollar weighted put call ratio. And here we take into account the options price. So every day, again, let's say at the end of the day with IBM, we take the options closing price, we multiply it by the volume that traded that day, and that gives us the dollar volume for that option. You could do that on a tick by tick basis, but that's expensive, and we found this was just worked just as well. So at the end of the day, we sum those up. Let's say again, IBM, we sum them up for all the puts. And separately, we sum up those dollar volumes for all the calls, divide the two, and that's the dollar weighted put call ratio. So now what we're doing is we're measuring the dollars being spent on bullish opinion versus the dollars being spent on bearish opinion. Previously, we were just looking at the volume of bearish opinion versus bullish opinion. But, you know, if somebody's buying 100 out of the money options for a nickel, and somebody else is buying 100 in the money options for $10 a piece, the guy buying the in the money options is a lot more confident, I think, than the guy buying the ones for a nickel. So that might just appear as 10 on the other ratio, but here it appears as a big difference in dollars. So here's the current ratio. You can see the extremes are a little higher, and in fact, this one has gotten so extreme, it got up to the ratio most recently is higher than it has been all year. In fact, it's the highest it's been since late 2023 when we had that one of those 10% market corrections I talked about on the very first slide today. And this one has rolled over, and this one is getting the buy signal designation from our computer analysis program. So according to this, there's a new buy signal here. Now that would of course be negated if the ratio were to move back to a new height. But right now, the computer analysis is expecting a decline here, and that would be a new buy signal for this ratio. So these are pretty powerful. I like to wait until they're both in agreement. So the standard ratio, as we saw a couple of charts ago, is not yet on a buy signal. So we're modestly positive on this, but you know, I'd like to see that one roll over and give a buy signal as well. So this just pretty much summarizes the same thing. This has been a very strong indicator over the years. And in our newsletter to the option strategist, we trade these signals, well, in all of our newsletters, really. But this one has, this is what you would say oversold. That one's so high on the chart, it reached oversold territory, and now is giving a new buy signal. So just for a little perspective, remember we saw the standard ratio. On this chart, we're showing three different moving averages, but the yellow moving average is the one that corresponds to the 21-day. And so this is where we are right now on the chart I just showed you. Only goes back about a year, say to here. And remember, these two peaks were there and we're not quite to those peaks. So this is the standard ratio. You know, when we were here a month ago or 2 months ago, this area I would say is optimism. In other words, people are optimistic, perhaps too optimistic, but the ratio did turn and go higher from there. But you can see where real pessimism is. Here's the pandemic. You know, here's the financial crisis back here. Oh no, I'm sorry, that's the next chart. But you can see that after we came out of the pandemic, we went to extreme optimism after that. It was just like a complete change of people's opinion. And we were down in this area, which is lower than we most recently got for almost a year and a half before we finally got sell signals in early 22. It led to that bear market. So, you know, optimism is one thing, extreme optimism is a completely different one. But in any case, this gives you a little perspective that even though this ratio has risen a lot off its lows, in the past it's been much, much higher than this. So, you know, we're seeing some pessimism, but I wouldn't say we're seeing any kind of large degree of pessimism. Now, if we look at the weighted ratio, this one goes all the way back here in 1998. And we're not sure, you know, this was the ratio was kind of, we didn't have as many stocks options back then, so I'm not sure why it was so high here, but that was pretty much the end of that high-tech bull market. But we did get a, you know, here in the financial crisis we got, that was certainly a sign of you know, pessimism. And then we had here at the end of 2023, the market was really pretty pessimistic. And so I said, now we've risen. I'm sorry, that's the end of the 2022 bear market in October. Here's the 2023 correction, 10% correction. And here's where we are now. I just showed you we surpassed the ones from earlier this year, but we're still below that. So again, yes, there's some pessimism appearing here. We're moving away from optimism, but I wouldn't say, looking at the history of this, that we're really in a completely pessimistic state in the market. And so cautiously, this new buy signal has occurred, but you know, other buy signals have occurred from far deeper levels of pessimism. So what do we buy when we buy these? So in any case, when I'm trying to predict where the underlying is going, I'm going to buy an option with a fairly high delta. I want the option to perform similar to the stock. Obviously, the benefit of using an option is we know what we're risking. We risk a fixed dollar amount. If you're trading a speculative trading account, you might want to put just say 2% of your account in any one trade. So that's easy to do with an option. You just spend the 2% and that's it. So the higher the delta of a call, the more it behaves like the underlying. So I usually typically try to buy an option with a 70 delta or higher. So in these where we're getting signals for the S&P 500, whether it's a modified Bollinger Band signal or a weighted equity only put call ratio buy signal, and if we're trading the you know, the large market, then this would be like a SPY option where I would buy a couple strikes in the money. And if we're going on a little longer term, that would typically be like a 2 or 3 week trade, let's say. If we're going on a little longer term, I might just buy an at the money, but even that has a decently high delta, so that if the market goes up, if I'm right, then I'm going to make money. What I really don't want to happen is to buy an option that's so far out of the money with such a small delta that I don't make anything, even if the market goes up, unless it goes up, you know, a ton. So on TV, pretty much every trade they make is a spread, which is really not the right thing to be doing, but they claim their risk is lower. We'll talk about that in a minute. But in speculative situations, I normally would just prefer to go ahead and just buy the call, unless the options are expensive. Then you might do a spread. What do I mean by a spread? Well, so let's say you're bullish on this stock, so you buy a call at this strike. To spread it, you would sell a call at a higher strike. And what that does is it allows you to make money until you get to that higher striking price. Then you cut your profit potential off. So cutting your profit potential off is a pretty devastatingly negative thing to do to yourself. And you don't really want to do that unless the options are expensive. They always say, these guys, proponents of the spread, say, well, your risk is less. Your risk is not less, it's 100%. Whether you buy a bull spread or buy a call, you're risking 100% of what your broker asks you to put up for the trade. So the risk is the same. Dollar-wise, yes, a little bit different. So instead of buying, let's say, 5 bull spreads, you buy 4 calls. But if you buy the call, then you get this benefit right here. If the thing goes past the higher strike, you're still making money. And that's really important when you get these huge moves. I mean, they more happen probably in commodities, but you know, some of the bigger moves in stocks too happen very quickly, especially in these Bitcoin related or the Magnificent Seven stocks or whatever. And so spreading those things can just bring you grief. So there are ways that you can mitigate the negative aspects of a spread. So let's say the options are expensive and you put a spread on. How do you do the best spread? So first of all, you widen the difference in the strikes. So we're talking about spider options right now. I'm not spreading anything that expires on April 4th or earlier. But after April 4th, I would do a call spread 15 to 20 points wide in SPY. But if it was a put spread, if I was doing a bearish spread, I would do it 40 points wide or more. That's because out of the money puts are more expensive on SPY than out of the money calls are. So the number one thing you can do is keep your strikes wide. Don't buy a 5-point spread on SPY. That's just a killer. You need that thing, to be wide so that when it hits that place where you cut off your profit potential, at least you're still making some decent money. And secondly, you want to roll if the short strike is hit. So what do I want to mean by that? So let's say that your SPY right now is trading right around 570. And let's say you're bullish, so you put on the April 17th spread. You buy an April 570 call, and you sell an April 590 call, 20 points higher. All right, there's your spread. Now, if you trade up to 590, at this point, you've just about maxed your spread out. Here's the original, profit graph. Here's 590. So by the time you're up here, your profit on your trade is starting to look like this. There's not a lot left in, maybe a little, but not a lot. So what you do is you sell that spread you owned, take the profit on it, and buy a new spread, again, 20 points wide. And so now you get set up so you can go higher and make more money on the upside. Not as much as if you had just bought a call in the first place, but still making more money. And you also take some money off the table when you do this, which is nice. You take a profit on that first trade. It works similarly for puts. If you were bearish today, you bought a 570 put. It says March, it should say April, and you sell the 530 put 40 points lower. Then if it trades down to 530, you roll down at 530. Now, obviously, if you're in this situation and the market drops a quick 20 points, you might want to roll down then anyways. But that's the kind of thing we address in our newsletters when we use these positions. We give you advice on when to roll them as well as not just initially take the spread. Let's look at some individual put call ratio charts too, because these are useful. Now, when I'm looking at individual charts, I usually just look for the extremes. So here's ARK Innovation, the ARK stock, and you can see how much pessimism there's been in that stock. The put call ratio has ballooned in the last month or so, all the way up to the point here where now we got this local maximum, and the computers are calling it a buy signal, and you can see the stock is beginning to respond. So, we just bought calls in that. These intermediate term ones in here, like here's a local max and here's the local, those are not of interest to us for stocks because they're too much in the middle of the chart. We're looking for the edges of the chart. There's another one, Google just gave a buy signal, well, Alphabet just gave a buy signal. You can see that these were also extremes back here, which were good buy signals. This first one there was, right out, very well timed. This one was a little bit late, but still pretty well timed. And now we just got a third one here. And I don't know, you may want to wait for, let's say, a little breakage of a downtrend or something, or at least getting over this stuff right there. But in any case, the history of these put call ratio charts on Google is very good. So we bought calls on Google last Friday. Here's another one. Now this one we're waiting on because there was been some resistance here, and the stock is having trouble getting through there. So we got the put call ratio buy signal, but we're not going to actually buy calls unless it can break through here on the upside, because that's proven to be resistant. So sometimes we'll get a buy signal and not act on it for that reason. But in this case, we're still waiting. We can trade futures. This is a new signal, just came up, a sell signal. So these are the 10-year note futures. And the 10-year note futures trade on the Chicago Board of Trade, and the options trade on the Chicago Board of Trade. So that put call ratio there is drawn using the volume and the price of the put call of the options on the 10-year note futures that trade on the Chicago Board of Trade. However, you don't have to have a futures account to take advantage of what has just generated a new sell signal here. You can see the local minimum on the chart right in here it just occurred, so that's a sell signal. There is an ETF. There's actually several ETFs that trade the 10-year note or trade short-term note as their underlying, but one of the more popular ones in liquid is IEF. And IEF has listed options, so if you have a regular stock option trading account, you can buy options on IEF. You don't have to have a futures account in this particular case. Now here's another chart though. This one is coffee, and coffee came down and gave a sell signal here, but there are no ETFs on the stock side of the ledger that trade coffee futures. So if you want to trade this signal, you would have to actually have a futures account and trade the coffee options that trade on the ICE in New York. All right, so another area that we look at is market breadth. Breadth just advances minus declines. You can keep a cumulative total, which we do, or you can calculate an oscillator, which we also do. So here's the oscillator values. The green, this is going back now. I've changed this chart a little bit. This goes back just 7 years. And you can see in the early parts there, 2018, 19, we were pretty much in a bull market most of the time. I mean, we did have a nasty, oops, what is that? Let me just, okay, I'm sorry. I don't know what that was exactly. I think I lost my pointer. Hold on. Okay. We saw a pretty nasty sell-off in December of 2018, and of course then during the pandemic. So that was extreme oversold conditions. Then in the bear market of 2022, we had a lot of oversold conditions, and now we're back to, since we've been in a bull market for a while, just occasional oversold condition. In any case, this last market decline pushed us down into oversold territory, this green level. And again, remember, oversold does not mean buy. We actually buy when it stops being oversold, which in this case was March 14th. So we moved, the oscillator moved back up into sort of a neutral territory here where it's in blue. If it moves back into the red area, territory, that would be overbought. It hasn't gotten there yet. A little bit disappointing, I would say, because the market did rally somewhat strongly. Breadth was not all that great on the rally. And so if it falls back into oversold territory, we'd be exiting this. But over the course of time, there's a lot of signals here. This is a very short-term indicator, quickly moving in and out. But it currently is still on that buy signal, which is weakening as we speak, I guess we could say. But this has caught some pretty good extremes in the market. So it's one of the short-term indicators that we do trade. Now, cumulative breadth is another thing. We look at cumulative volume breadth. In other words, the volume of advancing issues minus the volume of declining issues every day, and then you accumulate that. That at bear market tops has often shown a divergence. This time there was no divergence. This was making new highs right along with SPX. Now, not every bear market starts with a divergence, but the one in 2022 did. So this is a bit of anecdotal evidence that perhaps we're just in a correction here and not in a bear market. Another thing we watch is new highs versus new lows on the New York Stock Exchange, but we also look at them in terms of stocks only, which is all optionable stocks, or then also on NASDAQ as well. So in this particular case, we got a sell signal back here in February when there were more than 100 declines. This is decline, or I'm sorry, new lows, and they outnumbered the new highs. So that was a sell signal, but it was stopped out here on March 18th when for 2 days in a row there were more new highs than new lows. So this indicator right now is in a neutral state. It hasn't moved to new highs, moved to a buy signal or a sell signal. It was going to require either new highs numbering 100 or more for 2 days in a row, or new lows numbering 100 or more for 2 days in a row. That hasn't happened yet. But this is, I would say this is sort of an intermediate term indicator. On the right, you can see the number of trades that there's been in the last year or so, not all that many. And it has, again, a good track record. For a long time, it was, on the bullish side, pretty much all the way up through that whole bull market after the bottom in October of 22. So finally, let's look at VIX. The trend of VIX is important. It should be trending opposite to the market, and spike peaks are buy signals on the VIX chart. So a low VIX is overbought. We don't have low VIX right now, but I'm just saying when we had the low VIX, it was overbought. But again, overbought does not mean sell. So sometimes you'll see people say, oh, well, VIX is 14, it's danger, danger. VIX has in the past stayed below 14 for huge long periods of time while the market went way up. So having gotten out of your stocks or anything like that would have been a mistake. In any case, here's the current VIX chart. We had that huge spike last August, but we've had other spikes. So all of these Bs are spike peak buy signals. The red ones are positive trades. The blue ones are losing trades, and we have a system we trade with here. So you can see most recently we had the buy signal that came up at the top there. We've had a spike peak up to 29 and change, and now we've fallen back from that. The spreads that we put on at that time have been rolled up because they advanced, S&P advanced 20 points from that low and hit the top strike of the spread, so we rolled up. Once that happens, we're in pretty good shape. And these signals last for a maximum of 22 trading days. Now, the second thing is in those purple areas down there on the bottom. The first one right here, this was a sell signal because both VIX and its 20-day moving average crossed above the 200-day. So that tells us that VIX is trending higher, and it was trending higher for a while. Technically, it still is, though, because VIX has not come back and closed below the 200-day. Now, it was on the verge of doing so 2 days ago, but it didn't stay there. It moved away, so moved higher, and today VIX is higher again. So not much, but a little. So that moving average is just above 17. So if VIX closes below 17 for 2 days in a row, that would stop out that sell signal. But right now we have a buy signal and a sell signal working here. They have different parameters, different time frames, but it's a little bit frustrating to see that happen. But we don't pick and choose which signals to take because they all have decent track records. So we use them as they occur. The last thing I want to look at is you can't trade VIX, but you can trade the VIX futures and the options, which are options on the futures. So if you look at the pricing of the futures, typically it slopes upwards like this, and that's bullish for the stock market. That's the term structure, sloping upwards. Occasionally this happens though, and that's bearish. So we did have that happen 2 weeks ago for a brief period of time. It happened to a great extent back in the pandemic in March of 2020. And there are things you can do to make a lot of money when that happens. This time, it was so quick that you really couldn't make money on that kind of a trade. But here's the current term structure. So I took these prices just at noon today. And you can see that the VIX is trading at 1845 at that time. And the April, which is the front month future, is trading at 19. So if we take 19 and subtract off VIX, 1845, that gives us plus 55. So those futures are trading at a 55-cent premium to VIX. Now you can see that each successive futures contract is slightly higher than the previous one. So the term structure is sloping slightly upwards. In a real bull market, it's much steeper than that. But they're all at premiums to VIX. So this is slightly positive. I wouldn't say it's wildly positive, but it's better than sloping downwards, which would be negative. We can also look at the CBOE volatility indices. They publish 6 of them. The 1 day is not useful in this regard. Well, the 1 day is for trading 0-day expiration options, but you can see the others. So the first one, 9-day is above VIX. But then after that, we'll go out in time. The term structure slopes upwards. So what's going on here with the 9-day? Well, 9 days from now encompasses next week's unemployment report. Option traders are nervous about that, and they're paying up for volatility around that report. So that's inflated the value of the 9-day. But again, this mostly upward sloping, therefore somewhat bullish. What we really want to watch, and which is very easy to watch, is the price of the front month, in this case April, trading at 19, versus the price of the second month, which is May, and trading at 1923. So May is 23 cents higher than April. That's a positive upward slope. That's okay. I say not worrisome, is yeah, a little bit worrisome, I guess. But sometimes that's much steeper. There was, as I said, an inversion of this in early March of this year, and we did fall quickly after that, but then it went right back into a positive slope, so you had to be nimble to capitalize on that. So sum it all up, here's where the indicators are, and the true buy signals that we have in place are the MVB, the new buy signal, VIX spike peak, that's kind of been there for a while. The breadth oscillators that's sort of an old buy signal, and so I moved it off the edge a little bit, and the construct is not as bullish as I'd like to see. New highs versus new lows, that's just plain old neutral. It's not an indicator right now. Put call ratios have been on sell signals. They're moving towards buy signals, but they're not there. The trend of VIX has been on a sell signal. It's moving towards a buy signal. And then the S&P chart itself is, I think, bearish. I mean, you can't, it's hard to claim that's a bullish chart after it's fallen like that through support. But you can see these are all over the place. And so as a result, the indicators are mixed. And so when that happens, we trade them as they come. We trade the signals as they come. We're not holding a core position. But we do roll our in the money puts and calls when they SPY options when they get to that state. So as I mentioned, if you visit this website, optionstrategist.com, Traders Corner, you can take advantage of this special we're having right now, $99 for our top 3 newsletters. That's the daily volume alerts, the daily strategist, and the option strategist. There's track records for all of these on our website. If you hunt around under the products area, you can find those. And as I said there, the one thing we've been concentrating a lot on now is buying straddles for earnings, and that's been working out pretty well. There's a big one coming up tonight in Lulu. Anyway, my time is up, so I'm just going to get to the last slide here, and we will be emailing you the PDFs of this presentation. And if you're interested in our money management, the URL for that is at the bottom here. Our minimum account size is $100,000. So let me shoot it back to you, Anthony. I think my time is up.
Thank you, Larry. Really appreciate it.
Okay.
Yeah, thanks. So very important. I've been following the VIX a ton. Thank you. Thank you for sharing your valuable outlook and for the generous offer available exclusively to our summit attendees. As always, the link is in the chat. Thanks, Larry.
All right, you're welcome.
Buckle up, because our next speaker is a former Navy fighter pilot turned elite investor. Matthew Whiz Buckley of Top Gun Options is here to talk about a high-impact investing trend with purpose. His presentation, From Supersonic to Psychedelic, Investing to Save and Change Lives, explore why Whiz is going all in on this life-changing sector. Whiz, let's hear it.
Hey, brother, can you give me
I'll do that for
control?
you.
Awesome.
Yeah.
And I will get us airborne. All right.
That's right.
All right, folks. Everybody got my screen? We good to go? Awesome. All right, folks. Good afternoon, good evening, good morning. Depends on where you are. Checking in around this big blue marble circling a flaming ball in the sky as we circle around the Milky Way. Very excited for this presentation. There is absolutely no way you have any idea what you're in for, because this is probably going to blow many of you out of the water. Today, this afternoon, we're going to talk about saving lives. We're going to be talking about changing lives and profiting. Now, making money is great, folks, and I'm not one to quote scripture too often, but it'll be easier for a camel to pass through the eye of a needle than a rich man to enter the kingdom of heaven. So making money is one thing, but how about making money and helping your fellow woman and helping your fellow man? So let's go ahead and get airborne. How many of you woke up today? Well, clearly all of you. How many of you woke up today and practiced some form of gratitude for waking up, man? Waking up with a roof over your head. Clearly you have internet access. You're listening to me. Maybe you are next to a loved one, or you have family or friends or a pet or something to be grateful for. Okay, what the hell's this guy talking about? I'm here to talk about making money and what? Absolutely, Mike. Good job. I woke up today and wrote 3 things I was grateful for. Good for you, my brother. Well, I woke up today. I took my microdose and I went and meditated for 20 minutes. Got my mind right. Got nice and centered. Then I went to Yoga Joint down here in God's Waiting Room, Boca Raton, Florida. And I knocked out a 60-minute hot fusion flow, which kicked my ass. Got home, showered up, ready to trade, and I am ready for the day. Ladies and gentlemen, if you're freaking the hell out about what's going on, I can't believe this guy's talking about gratitude, yoga, meditation. Does he not know what's going on in the market? The market is melting down. That's the meltdown you're worried about? Really? If you are freaking out right now, folks, you haven't been investing for too long. I started trading, I started investing right there in 1991 as a young ensign in the United States Navy at Naval Air Station Key West. I've seen my share of meltdowns. Right here, I was an instructor pilot in Miramar, day trading, the internet stocks, and oh my God, we're all gonna die. The dot-com boom. No, we're not. Everything's great. Then I was in the Chicago Board of Trade and the Chicago Board Options Exchange at ground zero in the financial crisis. Oh my God, we're all gonna die. No, we're not. And then a rip your face off rally. Oh my God, COVID, we're all gonna die. No, we're not. And then on and on and on. So folks, if you are freaking out about a market meltdown right now, you need to get centered, because there ain't no market meltdown right now. Remember, folks, I've been doing this for, what's that, 34 years, close to 35 years, whatever. Over 3 decades, how about that? Ladies and gentlemen, 90% of trading is emotional, period. I'm gonna teach you today as a fighter, former fighter pilot and options trader, man, having a checklist, taking the emotion out of your trading can do wonders for what you're doing. My mission objective in this brief: why this sector is about to explode, and it might just save the world, and how you can profit while also helping to save and change the lives of others, maybe yourself. Okay, real quick, as you heard from Anthony, my name is Matthew Buckley. You can call me Whiz. I earned that call sign flying the F-18 Hornet for the United States Navy for about 15 years. I graduated from the Navy Fighter Weapons School. It's a lot of words for what you call Top Gun. And I was an adversary pilot. I was a bad guy. I flew enemy aircraft, painted like the enemy, and flew bad guy tactics against our good guys so they were ready to go overseas and deliver serious justice. I deployed on board Abraham Lincoln and Kitty Hawk for Operation Southern Watch. I was immobilized for Noble Eagle and enduring freedom. What's this have to do with trading and investing? Everything. You don't join the Navy to get rich, folks. Clearly, you join the Navy to see the world, to get to do cool things. But I was always interested in finance in the background. In between flights or whatever, my face is buried in the Wall Street Journal, options books. I taught myself how to trade stocks and options. You know what's really cool is I started applying everything I was learning as a fighter pilot to my trading. You ready for this? Having a strategy, implementing tactics that support the strategy, contingency planning. Before getting airborne or placing a trade, knowing what I'm going to do if things go good or go bad. Managing risk. All right, this guy is going to give me a brief about managing risk. He's inverted over Fallon, Nevada. Yeah, I am. Fighter pilots, options traders want to minimize all known risks so we can succeed, right? So everybody should know that building. That is the Chicago Board of Trade, right? You watch Batman or whatever it is. See those big, beautiful vertical windows? That was my trading firm in the CBOT, the Chicago Board of Trade. This was our trading firm, man. There's the traders. There's a hedge fund I helped build over there. There's the research desk. Over here is the techies. And upstairs were the executives, the admin, the finance, everything like that. Beautiful trading firm. I was the managing director of strategy for this multi-billion-dollar vol arb firm, and I was the founder and CEO of the Options News Network, ONN.TV. I would shoot on the floor of the CBO and the CBOT, giving folks like you a behind-the-scenes look at what was going on in the options market. And I jokingly tell people, you know, I felt like Valentine, Eddie Murphy in Trading Places, some lowly retail trader that went to the big leagues. Well, guess what, folks? You know what I found out? There ain't any such thing as the smart money. And I proved it in the COVID crash. Does anybody remember what happened during the market crash during COVID? Do you remember seeing all the smart money investors on CNBC or legendary investors? Kyle Bass, Bill Ackman, all these people, Jeffrey Gundlach, some of them were literally crying. Remember? We need to close the exchanges, shut markets down. No. No, I'm on the other side of your long-term or your bullish positions there, Kyle. I remember making Donald Trump. He deleted it. I have a copy or a screenshot of his tweet. Stocks are looking good here. I'd be a buyer of stocks. I think it's the bottom. The next day, the Dow went down 3,000 points. I made $75,000 buying some puts at the open in about 10 minutes. So don't listen to the folks who think they're the smart money. You, me, we are the smart money. From panic to profit. In 2.5 weeks, I made $2.5 million. Why am I bringing this up? Because I did something with that money. I also wrote another book, Going from the Cockpit to the Trading Put. It's from sea level to sea level. But so I decided a couple years ago that I have to give back, right? I also check out the Max Afterburner podcast. My podcast, it's ranked in the top 2.5% of podcasts on this big blue marble. What do I talk about? This, and this is what we're going to talk about now. The No Fallen Heroes Foundation, okay? We give healing grants to veterans, first responders, and their families because they serve too, right? Gold Star moms, Gold Star spouses. To go heal their trauma, you ready for this? With psychedelic assisted therapy. Why? How did this start? My God, Whiz, I came to a brief on trading and investing, and you're going to be talking about going from supersonic to psychedelic? Yeah, I am. Why did I start the No Fallen Heroes Foundation? Tragedy. I'm one of 6 kids, Irish Catholic, stereotypical Irish Catholic family from South Philadelphia, South Jersey. I think our family made the Pope look Jewish. I was an altar boy, Catholic schools. You just, you know, we were that family. Unfortunately, I was sexually abused as a child. And then short time after that, my middle sister, Monica. So my older brother and my 2 sisters, Monica and Marilyn, were going to Villanova University, and Monica was a freshman. They were at a fraternity party together, and my brother and my sister Marilyn said, "Hey, Monica, we're heading back to campus. Do you want to ride?" She said, "No, I'm going to go with these guys." She got in a car with a drunk driver. She was hit, and she was thrown from the car, and she broke her neck. She was killed. It was devastating. She was the middle of our family. She was the glue. It was an absolute horror. I was going into freshman year in high school, which is a tough time for a young man anyway. But it was a horror. My parents were done. My dad, I used to play sports in high school, St. Augustine Prep, all boys Catholic high school. Thanks, Mom and Dad. But I'd play sports, and my dad would pick me up because I'd missed the bus. And in between St. Augustine Prep and where we lived in South Jersey was the cemetery. And my father stopped every day. And he got out of his car every day and he cried at her. I remember years later when I had kids, I remember sitting on the couch with my dad and watching my two boys playing, and he knew what I was talking about because when I looked at him, I just kind of shook my head and I said, "Dad, how did you do it?" And he looked at me and he said, "Matthew, I had you. When they lowered Monica into the ground, I wanted to jump in with her, but I couldn't." So with that trauma from my childhood, what's a good idea to do? Go be a Navy fighter pilot, right? So, when you enter the military, you don't get rid of your childhood trauma. And in many cases in the military, we actually add to it. In 15 years of flying fighters for the United States Navy, I lost 16 brothers and sisters. Not a single combat loss. Bad weather, stupidity, mechanical issues, you name it. Just because they weren't combat doesn't mean it was an absolute nightmare. 15 years, 16 aviators. Then along the way, a little bit more trauma with my best friend. That's Captain Eric Swenson, call sign Swede. He was a Marine F-18 pilot, groomsman in my wedding. Beautiful bride and 5 kids, put a bullet in his head and decided to check out. I've lost 4 F-18 brothers to suicide. Okay. So after getting off active duty, I decided to go try and be a rich airline pilot. And my first and last day at work for American Airlines was the morning of 9/11. That's a whole separate conversation we could talk about some other time. Instead, I got a job flying fighters in the reserves for a Navy reserve squadron out of Naval Air Station Fort Worth. And that's when I got hired by that Chicago trading firm. They said, "Dude, what do you do? Why are your trading results so good?" I said, "This is what I do." And they said, "Come up, do it." Why do I bring this up? Because, ladies and gentlemen, I went from an organization, a fighter squadron, where you trust the women and men in that organization with your life, or they're not there for long, they're gone, to a Wall Street firm where I couldn't trust somebody to watch my wallet if I went to the bathroom for 5 minutes. I'm not joking when I say there was people who would have pushed their own mother in front of a bus for a buck. It was an awful experience. I had many dark nights of the soul. Sadly, hit the bottle way too hard. Sadly, a lot of Wall Street traders, drugs. Hit the booze, hit the drugs, and I could not have been more disconnected from my God, my family, myself. And it was pretty bad. I was spiraling the drain. So, COVID crash, market crashes, $2.5 million in a couple weeks. I look at my bride, and Swede had just killed himself. And I said, "You know what, Susie, why don't we start a foundation to try and end veteran suicide?" Back then, the government number was 17. 17 veterans on average were taking their lives every day. Well, in the years since, the estimates have moved up to 22 to 44 veterans per day. In the hour-ish that you and I will be talking, a veteran's going to take their own life. I hate putting this out there to the universe, but I'm going to say it like this. Could you imagine, God forbid, if 22 children, not once a year, I'm talking every day, were killed in schools? This country would freak the hell out. But since it's veterans, thank you for your service. And oh, wow, that's a sad issue, Whiz. Wrong. That's not the answer. So, has anybody ever seen the movie Lone Survivor or read the book? So, 4 years ago, I started a foundation to end veteran suicide, and I was clueless. How do you keep a veteran from killing themselves? Help them pay the rent, write a resume, buy them a nice suit? I was clueless. And then a buddy of mine came to me and said, hey, there's a group of Navy SEAL vets, special forces guys that go down to Mexico and they do psychedelic assisted therapy. And there's a really cool group going in a couple weeks. Would you want to go? And I said, man, go to Mexico and do drugs with Navy SEALs? That sounds like a great weekend. Sign me up. Ladies and gentlemen, I had absolutely no idea what I was in for. So, flew into San Diego and I met these 4 incredible human beings. Why San Diego, Whiz? Because if you do what I'm going to tell you in San Diego, you're a felon. If you get in a car and convoy down to a clinic right across the border in northern Mexico on the Pacific, it'll save and change your life. More on that later. So, ladies and gentlemen, I'm going to spare you all the details. You can listen to episode 7 of my Max Afterburner podcast for my full medicine debrief. But ladies and gentlemen, it was I've done some challenging things in my life, man. Landing a Hornet in the middle of the Pacific at night in bad weather, low on fuel, and a pitching deck. That was a walk in the park compared to this. This was a 12 to 14 hour, incredibly challenging experience. However, it was without a doubt the most spiritual and transformative experience of my 52 years on this planet. I was reconnected with my sister and my father, who had died of a heart. All of us believe he died of a broken heart. My sister Monica and my father were perfect. I reconnected with God. I choose to use the word God. You can use something else, but man, this massive energy of light, love, and healing, call it the universe, source, divine, creator, truth. I choose to use the word God. Again, I'm going to spare you all the details. I was a drinker, as I just told you, up to a year. A year after this treatment, I couldn't even look at, or if I smelled alcohol, it made me dry heave. I got physically ill. But ladies and gentlemen, so there's Marcus Luttrell, Navy Cross recipient, lone survivor. If you drink Black Rifle coffee, that is Jared Taylor, JT, former Air Force combat controller. That's JJ. He was a Navy SEAL and a teammate with Marcus. And this guy right here, if you're a college football fan, he was an All-American at Iowa. And then he went to the Raiders. His name is Robert Gallery. This guy, you don't know, they don't know, we don't know if you have CTE until you die. And they cut open your grape and look. He absolutely had CTE. This guy was in the medicine for about a day and a half, and he is a completely healed and different human being with clear brain scans, doesn't drink, and he doesn't even look like that anymore. He has started his own foundation to get NFL players access to ibogaine, which is the name of the medicine that we sat with. So, ladies and gentlemen, the most transformative experience of my existence. I got home, I looked at my bride, who I looked at completely different. It was like the first time I had met her. She was perfect, she was angelic. By the way, a couple months later, she went down, she did a different medicine with a bunch of wives, military wives, Gold Star wife, and we've never been a better couple, parents, or human beings. So I said, you know what? This is the way. This is how we're going to help end veteran suicide. To date, I think in the past 2-3 years, we've helped close to 75, I think the number is, veterans, first responders, and family members. Knock on wood, not a single person has come home from a retreat and said, I'm worse, absolute waste of time. You know, what was that? That was dumb. Not a single person. I've seen Navy SEALs with brain scans from the VA. It's dark and black and gray. 3 months after the medicine, it's completely white. So ladies and gentlemen, there is something here. As I said, we give healing grants to those folks. Now let's segue to investing. If you haven't heard about any of this, I think you live on the other side of Mars. From microdosing to Elon Musk to the Wall Street Journal, venture capitalist Wall Street is starting to wake up to this. Brian, ayahuasca is a type of medicine. This ayahuasca is maybe a 2-3 hour experience. Like I said, my ibogaine experience was 12 to 14 hours. And the next day we call a gray day because you're still kind of in the medicine. And like I said, Robert was in the medicine for a day and a half. So ayahuasca is people, hey, I'm going to sit with ayahuasca for the 20th time. Ibogaine is not something you want to do again, right? It can be a one and done. So if you want a crash course on this, I don't get paid by Netflix, but there's a great book. Michael Pollan, he was just on Oprah 3 weeks ago talking about this. He wrote a book called How to Change Your Mind. Why do I bring this up? Because they made it into a Netflix series. It's 4 episodes, an hour each. You could binge watch it tonight and get up to speed on this sector. It's called How to Change Your Mind on Netflix. I strongly recommend you read the book. Even if you watch the Netflix series, the book is insanely good. How about the Showtime Billions, right? Bobby Axelrod. Well, that Bobby Axelrod was fake, but he was based on who? Steve Cohen from SAC Capital. He is throwing a ton of money into the psychedelic space. Blake Mycoskie from Tom's Shoes, $100 million into psychedelics. I'm going to show you the psychedelic investing wheel in a second here. But ladies and gentlemen, I'm telling you, this sector is not only starting to explode, it has exploded, and it is going to get even more insane. During the, 8 months ago or something like that, J.D. Vance, senator at the time, now our current vice president, was on Joe Rogan. Joe Rogan gave J.D. Vance a 10-15-minute lecture on healing veterans with psychedelics. To his credit, J.D. Vance is like, wow, I didn't even know about this or never heard of it. Some people were like, oh, that's ridiculous. I'm like, what do you mean that's ridiculous? He's former Marine, never heard of this stuff. And when Joe Rogan briefed him on it, he ended with, why aren't we using this to help our veterans? Yeah, exactly. Pete Hegseth, obviously, taking a little bit of flack right now, but he was on the Sean Ryan podcast 6-7 months ago. Sean Ryan went to the same place I did the same medicine I did, healed. He told Pete Hegseth about all this medicine, and Pete's like, well, I've never done it personally, but I've heard a bunch of my brothers and sisters who have done it and they're healed. Why aren't we using this for veterans? So there's the vice president, there's the secretary of defense, and now Robert Kennedy. Ladies and gentlemen, if you haven't seen, let me go get it for you. If you haven't seen this clip of Robert, he was running for president at the time as a Democrat, and somebody asked him, hey, well, what's your stance on psychedelics? I'm just going to give you the video. We can't watch it on this type of thing right here. You need to watch it on your own because you need to see his emotion. But I'm going to copy this and give it to you. And I'm going to give you the cliff notes to it right now. So the guy says, so what, how do you feel about psychedelics? So let me give that to you right now, and then we'll go back to this. And he said, well, as a recovering heroin addict, I could not disagree more, right? He said, I'm an alcoholic, I'm a heroin addict, and, you know, I think it's awful. Then my wife killed herself in 2012, and I lost my son too. I think he was next. He went to Peru with a best friend, sat with this medicine, came home, and as soon as he got off the plane and I saw him, I knew I had my son back. So ladies and gentlemen, Michael, this is the wrong topic for this venue. Hey, Mike, if this doesn't resonate with you, man, I think I'm the last speaker. You can go ahead and head on out. But to everybody else, I'm getting to the investing part. If making money is that important to you, maybe go buy what the last speaker was selling. So I'm going to talk about investing in the publicly traded psychedelic companies, okay? And I'm going to talk about the infrastructure. So Michael might not agree with what I have to say, but Wall Street does. I'm going to show you a psychedelic stock I recommended 4 months ago that made 82% in 4 weeks. This sector is exploding. Don't like it? Don't do it. Don't like it, but you like making money? Then do it. Good, but wrong venue. Mike, well, so, but this is the internet 1999. Technically, these names are biotech stocks, folks, right? These have very high risk, but very high reward. If you don't like the psychedelic names because they might be a little too risky, I'm going to tell you about the infrastructure names you can buy. Really, real estate investment trusts, folks. When you go to do one of these medicines, when it's approved in the United States for therapeutic use, you're not going to your doctor's office, right? Your general practitioner sitting on an examining table with wax paper and a National Geographic from 1988 on the table. It needs to be a clinic with beautiful rooms and a bed and a separate bathroom and 2 chairs for the people that will help you, and it's got to be videoed. The infrastructure is huge. Now, I'm going to tell you about I stopped going to DC to advocate for this. Why? Because my last trip to DC, a Republican congressman behind closed doors, who shall remain nameless, said, "Whiz, I love what you're doing. Keep doing it." I'm like, yeah. He said, but you're going to have a problem with big pharma and the alcohol and tobacco folks. I'm like, what do you mean I'm going to have a problem with them? Isn't that your job? So ladies and gentlemen, I don't want to talk like this, but I'm going to talk like this. I guarantee you in the next 3 to 5 years, Pfizer, Eli Lilly, Moderna, Johnson & Johnson will swoop in and buy all of these names. So Mike might not like it, but I guarantee the names I'm going to cover, Mike, you're going to be sitting here in 3 years. Breaking news, Pfizer just acquired Atai and the stock is up 800%. And you're going to have missed out because they are not going. So Marcus Luttrell was on 15 medications, ladies and gentlemen. Whiz, I took 5 meds to wake up, 5 for lunch, 5 to go to bed. He hasn't taken a single medication in 4 years. He's not the only one. Just about everybody we've helped heal doesn't drink anymore, doesn't smoke anymore, and doesn't take any of the big pharma crap, period. So let's go ahead and get airborne, and I'm going to show you some of these names. I'm going to show you how you can potentially print money and help save and change lives. Before I forget, I'm going to give you this incredible resource. This website is called Psychedelic Alpha. You see this big pie chart? These are the different medicines, and these are the companies that are working on them. You can click on it and zoom in a little bit. Like the medicine I sat with is called Ibogaine. It's up there on the top left. The closer the name, we're going to talk about Atai in a second, to the bullseye is closer to approval. So these are all the different slices of the pie, and these are all the companies that are investing in them, doing phase 1, phase 2, phase 3 trials. Okay, so before I forget, let me give you this. This is a great resource for what we're going to talk about. Okay. All right. Now, oops, I didn't press send on the first thing there. That's the clip of RFK Jr. talking about psychedelics. And then there is the link to this Psychedelic Alpha with all the names in here. All right, so here we go. This is going to be fast and furious because I want to keep these guys on their schedule today. These are the names that I would buy today with both hands. I just mentioned one of them, Atai, A-T-A-I. It's up 6% today. Before RFK got when he got nominated by the president and got approved, I loaded the boat with a tie right here in a live trade brief, and we bailed right there. That was an 80% profit in 2.5 weeks. Now, these names do this. Here's the election of President Trump, love him or hate him. We bought it and got out. That was a 62% return. These names are going to do this. Up, down, super down, and then they're going to get bought. And it's, oh wait, you guys aren't seeing this. The first one's called a tie here, folks. This is what I was talking about. Sorry, screen wasn't sharing. So let me go grab my cursor real quick. This is what right before the confirmation hearing, bought it, sold it, 80%. Right after Trump got elected, bought it, sold it, 62%. These names are going to do this. They're going to move up and down until ultimately one of their drugs is approved for therapeutic use. Okay, so a tie is the first name I would buy with both hands. Cybin, this is the one that Stevie Cohen's investing in. $7 stock. It was as high as a couple months ago, up here at 14. Atai Compass MindMed, MNMD. I really like this name. Same thing, folks. Trump got elected. This was a 65% profit. And then there's the RFK hearing. As soon as he got approved, we sold it. So hold on, let's see what that gain was. This was right when the hearing started. That's the last day or when he got confirmed. 57% return, folks, in these names. I'm going to remind you, these are going to go up, they're going to go down, they're going to go up, they're going to go down. But guess what? You can get in and out of these names, or when I tell you how you can join Top Gun Options here in a little bit, you can do the options for dirt cheap. Now, my SOP at Top Gun Options is I don't trade options on stocks under 10 bucks. Why? Because that's the option. $6, I'll just buy the shares instead of doing the options. But if you want to go super cheap, you can buy the options on these names. Okay. Now let's move over to the infrastructure names. Like I just said, you're not going to be able to do these medicines, sitting in your doctor's office. Full disclosure, I'm an investor in a massive company called Healing Realty Trust. We are private right now, and we are buying up. Whoops. Let me page up. Buying up hospital. Remember in the old days, what's a dialysis center or an urgent care? Those things didn't exist until about 20 years, folks. Hospitals have started pushing all this stuff out to the campus around them. I live near the Boca Raton Hospital, and it's massive, 1-2 mile square radius of all of these types of buildings. We have been acquiring these buildings. They are already cash flow positive, and when, not if, psychedelic assisted therapy is approved for therapeutic use, we will redevelop these things into so you can sit there and do the medicine. Well, why are you bringing this up, Whiz, if we can't invest to it since you're private? Because there's 2 companies right now that have decided to copy us. The first one is called AHR, American Healthcare REIT. This name went public last February. Well, let me just show you the open the chart. See, it starts in February of last year. It has made a 123% return since its IPO. 125%, I'm sorry. In 1 year, AHR, American Healthcare REIT, is up 125. We're thinking about going public in a couple years. I'd prefer to stay private. I don't like shareholders. I'd rather us get rich on our own, but I don't have all the votes. So what do I also like about AHR? This, you get not only do they print money and the stock goes up and to the right, there's a 3% dividend, man. Let me do you one better. The other name that I would buy in the infrastructure of these healing medicines is Sabra. SBRA. Nice stable name that moves up and to the right. Check this out. Look down here. 7% dividend. Somebody name another stock that's got an awesome dividend, 7%. This name is exploding and you get a nice return owning the shares, right? It's called Sabra, SBRA, Sabra Healthcare REIT. Okay. So those are the two infrastructure names I would buy with both hands. But if I was going too fast for you, like Whiz, I can't pick and choose psychedelic names. Well, guess what? You don't have to. The Advisor Shares has a psychedelic ETF, ladies and gentlemen. It's an exchange traded fund. It's at $12, man. Let me go ahead and show you that you don't have to go and pick the winners, right? Still Holdings. Let's go look. If you don't know what an ETF is what? A basket of stocks. So you don't have to pick. And look at what is in them. This is the Advisor Shares ETF. Look what's in it. MindMed, Atai, Compass is another name that I like, and a bunch of other publicly traded psychedelic names. You might not like this topic. It doesn't matter. Money flows, capital flows, and I am telling you, I go to the conferences, folks, down here in Miami. I go to the conferences in Denver. The funds that are flowing into this sector is obscene. Now, I alluded to big pharma before, and I guarantee, I'm going to say it again, I guarantee you, let's pretend you are the CEO of Pfizer, and you read on the Wall Street Journal that MindMed is in phase 2 trials for MM120, right? MM120 is a medicine they're trying to develop for generalized anxiety disorder. And you read that MindMed, with just one dose, effectively cured just about everybody in the study of their generalized anxiety disorder. Did you hear me? There ain't no money in healing, folks. Pfizer, big pharma, wants customers. They don't want healing. Don't take my word for it. This is Oppenheimer. Price to, when they put this report out, the stock was at $5. They're in 12 months or to 18 months, they're saying it's a $25 stock. That's Oppenheimer, not me. I think they're wrong. I think that's a $50 to probably $100 stock, because Pfizer or whoever is going to jump in and buy them with a size 12 checkbook. Don't listen to me, folks. Read all of this stuff on your own. Treatment-resistant depression. I'm a political science major from South Jersey, folks. What does treatment-resistant depression mean to you? Well, to me, it means you can't treat it. It's resistant. Wrong. MM120's psychedelic compound shows absolute massive effectiveness in treating all of these things. So again, don't like the subject? I really don't care, folks. I am printing money in this space. It is a fact that the big names are getting into this space. You ever sit there and look at your computer and go, oh man, I wish I had heard about that next hottest thing. This isn't the next hottest thing, folks. This is the hottest thing. This is how we can potentially save and change lives. Don't believe me? New York Times, folks. I've been on the front page of the New York Times talking about this. They did a big expose. Top Gun Navy pilot, and I need to renew my subscription. Anyway, if you have there's me. That's my video of me dogfighting. They did a massive story on the front page of the New York Times about psychedelics and veterans healing. This ain't me making stuff up, folks. I guarantee you this sector not only is exploding, but will explode. I have the 100-day point of the Trump administration on my calendar. Why? Because if I haven't heard a word out of the president, the vice president, or the VA secretary about psychedelics for veterans, I'm going to take a flamethrower virtually to all of them. Okay? They talked big in the campaign. I'm an equal opportunity flamethrower, man. I don't care. I am about the mission. So real quick, because I want to keep these guys on timeline. I think they said I had 45 minutes. AR. I trade our psychedelic names in our longer dated retirement portfolio, right? These are, some of these trades are potential lotto tickets that could be your retirement, folks, and some of them could go to zero. But this is the portfolio where I trade these names. It's called AR, Accelerated Retirement. We do a live trade brief every Wednesday morning at 10 a.m. Eastern. Whiz, I work during that time. I can't make it. Well, guess what? You get access to an app. You get access to our website. You get alerts delivered immediately to your cell phone. Whenever I place a new trade in the accelerated retirement portfolio, we go ahead and blast that out. It's $96 a month, folks, or it's $99.60 for a year. I think I throw in 2 months. Make sure you get the options weapon school training. Whiz, I have no idea what an option is. I'm barely hanging on with stocks. It's only $297, folks. I give you 6 sessions of options weapon school. This is a call. This is a put. You know, just the basics of options. Okay, so $96 a month. It's called Accelerated Retirement. You get some manuals, you get some training, you get access to a live trade brief. The link there is in the chat box. So, folks, if this didn't resonate with you all, great. If it did resonate with you, great. It really doesn't matter to me. I'm going to keep pressing ahead with my mission and helping to save and change the lives of our veterans. Traditional therapy has failed. 22 to 44 veterans killing themselves every day is obscene. I try and make it on almost every retreat that we do. I've missed a couple. The 2 retreats I've missed, both retreats, I got text messages from various vets or first responders that said, Whiz, I don't want to kill myself anymore. Can't put a dollar sign on that, can't put a price tag. It makes my heart smile. So if it doesn't resonate with you, great. If it does, great. I'm going to press forward with my mission. If you'd like to know more about trading these psychedelic names or trying to help heal these folks, I would love to. I'd love to chat. Okay. Thank you, Mike. I appreciate it, man. All right, Anthony, I'm going to keep you on time and on target because that's my job. Even though this mission wasn't leaked on Signal, I am on time and I am on target. And I hope everybody has a great rest of your day.
Thank you, Whiz. For a powerful and eye-opening presentation, Profit with Purpose is more relevant than ever. Be sure to check the chat box for Whiz's offer and resources. We appreciate you, Whiz. And to close out today's incredible summit, we will welcome back one of our most in-demand speakers, David Wyse of Right Line Trading. David is a leading figure in the Reddit trading community, a professional trader and creator of the SPY Super System. Today's presentation, How to Trade Heiken-Ashi Bars for Maximum Precision, will show you how to eliminate noise, improve timing, and trade with greater confidence. David, the floor is yours.
Thank you very much, Anthony. Appreciate the opportunity to come here this afternoon. I just left my trading room, which I operate every day, every Monday through Friday from about 9:15 to 4 o'clock. Today was to 3:30 because I had to get ready for the webinar. So bear with me. I'm still my mind's still in the market, but thanks very much. I appreciate that. Again, my name is Dave, and I've been a professional trader for about 15 years, about 15 and a half years. And I have a trading room called the SPY Super System Trading Room and Alert Service, where we look for the highest probability trade setups that are out there every day in the market, and we trade them. And we trade them in the room, and we send out alerts when we find those high probability trade setups. So we're going to be going over that and the service, how it's performed over the last couple of years, as well as the tech service. But I'm also going to do some a segment pretty early in the webinar on Heiken-Ashi candles. I think you'll find this if you haven't used Heiken-Ashi candles. I think you might want to listen to this. It's very interesting, and I think you'll find that this is an excellent way to improve your trading. So we'll spend quite a bit of time on that. Okay, let's get started. First thing I have to do is a disclaimer. All signals and trading opportunities we provide here are for educational demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors. All right, and if you have any questions during this, I'll keep the question box open in case anyone has any questions related to what I'm talking about, and I'll try to answer them in line if I can. If not, just put your name and phone number in the chat box or your Skype username, and Rory from Right Line will follow up as soon as he can, and to answer any of those questions that you've got that I can't answer. Hopefully I'll be able to answer most of these questions that you bring up today. All right. Okay. Now, this is just a quick graphic. This just shows the SPY Super System, what it looks like. I run this SPY Super System software on the Thinkorswim platform. I don't trade on the Thinkorswim platform. You do not have to have, you don't have to trade on the Thinkorswim platform, but this is where I get my indicators from that I'm going to show you how I identify when institutions are in the trades and when they're not. And this is just basically a graphic display of that. Tracking institutional money flow, knowing when the institutions are in trades and when they're not, is critical to becoming a profitable trader. And also, this is this kind of graphic of the text alert service. Comes out their SMS alerts. They come out on your phone, and I'll go over that service here in just a bit. All right, first thing I want to do, and I do this in every webinar. A lot of people get sick of hearing about it, I think, but a lot of people are fairly new or they don't understand what drives the market. And there's two categories of traders. There's retail traders such as myself and most likely everybody here. We're retail traders. We're these little bitty marbles here. And it's important to understand that when we're trading by ourselves or without any significant institutional involvement in the market, we are just causing chaos and chop. You're getting, the markets are chopping up and down. You're getting chopped to bits. You can't get any kind of a trend. So therefore, when we're in the trades and the institution is not, we don't want to be trading. We want to be able to bypass those kind of trades. This is the institutions, this big marble. This is what drives the market. Institutions are obviously made up of investment banks like Goldman Sachs, JP Morgan Chase, Morgan Stanley, all those big banks that are part of the big part of the institutional money. I know it's also important to understand that institutions have a couple of different, they trade several different ways. They trade and they invest. They have a trading desk where they actually have people who trade, but that isn't where most of the trades come from. About 80% to 85% of the trades that come through the institutions are what's called algo trades, so computerized trades. They have programs written to look for specific conditions in the market, technical setups, news. They scan the news and look for those kind of situations to occur, and they trade electronically off of those things with algos. Very quick, of course. We'll talk about that in just one second here. Again, the institutions also include the hedge funds. Hundreds and hundreds of hedge funds make up institutions, are part of the institutions, as are pension funds, police pension funds, fire pension funds, state worker pension funds, billions of dollars in these funds. And all of these funds have money to invest and to trade. And lastly would be the mutual funds such as T. Rowe Price, Vanguard, these big mutual funds, billions of dollars. So that's very important that it's to understand that when the market is, when they're putting money into the market in any concerted way, groups of them are doing it. A lot of people, a lot of the money is coming in from groups of those. That's what moves the markets, and that's what we need to identify. And it's important to understand about these algo trades as well. And to give you an example, if you watch the market, for example, on when the FOMC comes up, when the Fed does their Wednesday at 2 o'clock once a month, they do a release of what they're going to do for interest rates. They meet Tuesday and Wednesday. They release the information that Wednesday afternoon at 2 o'clock. Now, when that comes out, that's going to impact the market, and especially what they have to say in the statement is going to impact the market. And what you see is at 2 o'clock, in less than a second, 2 o'clock and in maybe 100 milliseconds, you'll see the SPY will be shooting up or shooting down. Big moves in the market. There is no way humans can put trades in that fast. Those are the algos trading, and that shows you that where that volume is coming from. And you'll look and you'll see big volume bars, and you'll see these big moves. That's all algos, and that's what we're trading against, which is why we want to be trading with them and not against them. Okay, so I have a couple of rules to trade by in the room and on the alert service. Fairly simple. We trade the best and skip the rest. We're just looking for the very highest probability trade setup we can find. That's what we're trying to do. And skip the rest. And it's interestingly, skip the rest is probably makes you more money than trading the best is concerned. Because what we're doing here is skipping a lot of trades that would normally be losers. And you know, if you go back and look over your trading and find out if you could eliminate 20, 30, 40% of your losing trades that you take, I think you'll find that your profitability will go from either negative to being more profitable, or from more profitable to even more profitable. That's very, very important element right here. And the last one is, and I express this in the trading room every day. Our objective is not to make trades. Our objective is to make money. And the whole point of this is to try to keep traders patient. In other words, if you have a winning trade or two winning trades in the morning, and then about 1 o'clock you're sitting there and you're looking at your machine and you feel like, I got to be in something. I got to be in a trade. And what you're doing there is your objective then is to make trades. It's not to make money. So we may sit there all day or most of the day and not make any trades at all. And we get out and we don't take any trades. We don't lose any money. We're even. We're probably a lot better off than a lot of traders that were taking trades all day long. So our objective is not to make trades. Our objective is to make money. We took one trade today on PNW. We took a short on PNW this afternoon and took nice profits in that. And that's the only trade we actually did today. We also did a straddle, but the only straight puts and straight calls we did was on PNW. One trade, one winner. Step aside, take your money, and go home. All right, now maintaining discipline is really critical. And people ask me, what do I mean by this all the time? Maintaining discipline to me means if you've got strategies or methodologies like we have in the room that are proven successful. We've been trading them for years. We've got thousands of trades in each one of these strategies. They're going to be 80% effective or more. And typically, I don't take anything that doesn't have at least an 85% win rate over 200 or 300 trades. But that means maintain discipline means stick to those stick to those strategies. Okay, stick to those strategies. Don't be listening to somebody on social media that's telling you about this trade that they've seen, this setup they've seen, this particular MACD crossover trade that they've seen. Find the ones that are successful, that you know are going to work long term, and stick with them. That's maintaining discipline. And then remain patient. You've got to wait for these setups to come to you. Be patient when you're looking for these trades. You have to wait. I mean, most of my time every day since I've been trading professionally is I spent way more time waiting, watching, and looking at charts than trading. I put some trades on, and when the market's bad like it is right now, it's been choppy for 2 months, we don't have very many trades on. When we get a trending market, I might have a bunch of trades on. But most of the time, I spend my time looking for these high probability setups. That's what's going to make you the money, and you stick with those. So again, maintain discipline, remain patient. All right, and as a profitable trader, profitable retail traders, we need an edge. And remember who we're trading against here. We're not trading against the institutions. You're not going to beat the institutions. A lot of people like to think they will, but you won't beat the institutions. We're trading against other retail traders. And what we need such as the SPY super system, we need software that lets us know if the institutions are in the trade. We need better strategies and better methodologies than the other retail traders have. And if we do, we're going to beat them. We're going to take money from them. That's what this boils down to. Remember, you're kind of in a war here with other retail traders, and those with the best weapons, are going to be more successful. We're rolling in there with tanks and big guns, and they've got pea shooters and pop guns, and it's just not even a fair fight. Okay, so what are our edges over other retail traders? We have the SPY Super System software, again, that runs on Thinkorswim. This I'll show you plenty of these charts. This software identifies when institutions are in the trades and when they're not, and when they're just neutral, when they're not doing anything. We also trade something here. This is really important. A lot of retail traders don't even understand what this is. Trade relative strength and relative weakness. Take relative strength or relative weakness is how is that stock that you're looking at, how is it trading versus the SPY or the triple Qs. Let me just turn off my news feed for a minute here. I have a news feed going all day where I get updates on the market, stocks that stand out, etc. We had one today that flushed around pretty hard here this afternoon that Muddy Waters put out a blurb on. So anyway, relative strength is how is the stock that I'm looking at, how is it trading versus the SPY, like on a 5-minute chart? If the SPY is moving sideways and down, and your stock is moving up, stacking green candles, it has relative strength, and vice versa for relative weakness. This increases your edge because of the stock that you're in. If the market turns and goes against you, it's not going to go against you as hard because it's got relative strength or relative weakness to the market. Very important, not very well understood. Most retail traders don't use this. They'll use RSI, which doesn't mean anything. I mean, to me, it's worthless. But they don't know enough to look for this trading relative strength and relative weakness. Very important. Trade with the market trend if there is one. If you traded today, you notice that it was a pretty trendless day. We had a big move down on the open, then a nice move up. Market was red, the SPY was red, it was green, it was red, it was green. It just popped all around. That's all it did. And so when we have a trend, we can trade with the market. If we don't have a trend, we have to be more selective. We have to stay in trades for a shorter period of time. We have to take quicker profits. And buying near support and selling near resistance is critical. The support levels and resistance levels we talk about on the daily chart and on the 5-minute chart, this is where you want to get into a trade. In other words, don't be chasing a trade that's stacking green candles right out of the gate in the morning and keep on moving. It keeps going up, 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 and you're sitting there getting panicky, and that's emotion starts to take over, and you've got FOMO, fear of missing out. You jump in. Typically, you jump in right near the top, and then it reverses on you. Whereas if you had waited for it to come back down to the support level and bounced off of that support level, you'd have been in much better shape. As it is, you're ended up with a red trade. You're probably bailing on the trade and losing money. So buy near support, sell near resistance. Okay. The compass system, which we used to call it the compass system, is now called the SPY super system. We've added some additional elements to it and some scans, etc. But it looks at looks for high probability trade setups that the institutions are in, and it also sidesteps ones that look good but fail more often than they succeed. And this is very, very important. And it does this by identifying when the institutions are driving a move and when they're not. The Compass software, the SPY Super System software, analyzes complex trading data and displays the results in easily identifiable visual format. This is the great part about this. It's crunching lots and lots of data, lots of numbers, but it's going to present it to you on the screen so that you as a trader can easily determine whether it's bullish, bearish, or neither one. Okay, and so again, it makes it easy for even new traders to be able to understand whether the institutions are in the trade or not. Okay, so that's what we'll show you those. Again, that's another Thinkorswim platform chart. I'll show you those as we go. So this is how we get an edge over retail traders. We're only taking trades that are being driven by institutions. We're trading stocks that have relative strength or relative weakness to the SPYs or the Qs, and we're trading in the direction of the overall market trend. If you follow these 3 rules right here, just these 3 rules, you'll be ahead of about 96% of the retail traders out there. Most of them don't do this. They certainly can't do this if they don't have the ability to do it, and they typically don't look at relative strength and relative weakness. And how does this give us an edge? Again, our trades will be supported by institutional buying and selling. Critical. Stocks will be outperforming the index, the SPYs or the Qs, and they'll be moving in the direction of the overall market. All right, so that's how we get an edge over the retail traders. This is I just kind of want to present the thought process I go through when I find high probability trade setups. This is something that's a lot of retail traders overlook. The first chart you should look at for any trade that you're going to be in for more than 15 or 20 minutes. If you're doing a very quick trade that's going to be just a quick intraday trade, you don't really have any intention of holding it overnight or even holding it for an hour. Then you can just use the 5-minute chart. But anything else, any trade that you're taking for a swing type trade, and a swing trade means if you're coming in at 10 in the morning and you're getting out at 3 in the afternoon, to me that's a swing trade, even though it's intraday. You're going to be in there for a while, right? You want to look at the daily chart first. Always look at the daily chart first. Make sure if you're going long, the daily chart is bullish. Make sure if you're going short, the daily chart is bearish. So that's the first thing I look at. Then I want to look at the trend with the market and the stock to see if I can identify a trend. If there is one, I want to trade in that direction. If not, I'm going to have to focus on the other elements. The compass indicators are the SPY super system indicators, now we call them. Those have to be aligned in the direction of the trade that you want to take. So if you're going to go long, you've got to know that the institutions are trading that stock long, right? If they aren't, you don't want to be in it. And then we look for relative strength and relative weakness, we've just discussed. And then we want to enter near support and buy shorts near resistance. Enter near support or resistance. So you're getting into longs at support as the stock bounces, and you get into shorts at resistance as the stock bounces off of the resistance and heads back down again. Okay, and this is just the same thing written out here. The stock should be traded. To be traded should have the daily and 5-minute chart aligned, and the SPY super system indicators must align in the direction of the trade. All right, and have patience, very important. All right, just to kind of discuss what we do in the room and on the alert service, the kind of strategies that we use, pretty straightforward. Straight calls and puts, of course. Today when we were trading, when we were trading PNW today, we took straight puts. We just bought puts, got in, got out, made a nice profit on it, and we're done with that. Straight calls and puts, very, very common. We also do debit spreads using weekly options expiration. Weekly being this week. We do a debit spread today, we would be doing expiration on tomorrow. Time spreads, which are calendar spreads. These are what we use over earnings. They're a non-directional trade. We don't care which way the stock goes. What we're doing is we're trying to capture the volatility crush when the premium, when the earnings come out, and the volatility in the puts and calls is reduced. That's called volatility crush. We capture that with this particular strategy. And then we have another one called the weekly ATM strategy, where we actually sell puts week after week after week against a stock that's neutral to bullish, collecting premium each week while holding a longer dated term put further out in time to protect us in case the stock goes against us and cut down the margin that we need. And we do credit spreads to capture premium over a few weeks. And then we have in the room, we just do this in the room. This is called the SPY super system. These are very high probability trades to catch the SPY moves, the Q moves, the IWM. You can also use them for futures. You can use them on the ES and the NQ. But we call them the SPY super system. They're based on the 5-minute chart. We don't stay in the trades very long. And I'll show you the results we've had with these. They've been extremely, extremely profitable. Okay, the alert service itself, fairly simple. It's designed for day trades and short-term swing trades. We're not doing investments here. It's designed for traders who can't watch the market all day or don't want to. We put up real-time alerts on the highest probability trade setups we find, and those high probability trades will be identified by institutional involvement. We look at market internals to see if we've got a bullish or bearish market internals, and then we do some technical analysis to further hone those down to come up with just the best trades. Okay. All right. This is an equity curve. I need to do a new one. This is a year old or so. This is basically was on the alert service. If you put $2,000 into each trade that was alerted from March 23rd of 2023 to May of 2024, about 90,000. And it stays fairly consistent. You know, we do have ups and downs each month, but the overall year to year is pretty consistent, as you'll see here. All right. So that kind of covers just the quick introduction of what kind of strategy I use, what we're looking for. I'm going to do the Heiken-Ashi info here. I'm going to do it right here in this before we get into the results we've had, before we get into the actual charting, because I want folks who are interested in Heiken-Ashi to get this quickly. So this is what we're going to touch on right now. And I'm going to show you some live charts today, looking at Heiken-Ashi candles. I haven't even looked at them yet. I'm going to run a scan and find them, and I'll show them to you. All right. So trading using Heiken-Ashi candles with the SPY super system, not the compass system. All right. Okay. So if you not know what regular charts is, these are candlesticks. These are Heiken-Ashi candlesticks. These are not normal candlesticks. And there's a big difference in the way they're structured and the way they're made, and I'll go over that. But if you look at the Heiken-Ashi candles, you see no upper shadow. That means these are flat-topped candles. So bearish candles, bearish Heiken-Ashi candles have flat tops on them. just like that. They can have tails like that, but they have flat tops. So flat top after flat top after flat top. Those are bearish Heiken-Ashi candles. Now, the reason we use Heiken-Ashi candles a lot in our trading is we're looking for reversals out of a bearish to a bullish trend or a bullish to a bearish trend. So what we look for is bearish trend right here. And if you were in this trade, you can stay in it as long as the top stayed flat like that. Notice we start to get little tiny wicks on these things now, but still bearish. Now we go from these flat top candles to wicks and tails. Wicks and tails. The candles turn green, but wicks and tails. See right here, you see this flat bottom candle on this green candle right here. That's a Heiken-Ashi bullish candle. And this would be considered Heiken-Ashi reversal. When you get this candle, after you're coming down, this is a bullish Heiken-Ashi reversal. Now, it's a fairly small candle size compared to these. So this is just this would be a moderate change in direction. I wouldn't say it was strong enough because of the fact that these candles are so big. But you notice you do get a flat bottom, then you start getting wicks and tails, and then you reverse back down again to the short side. Right? So this is a Heiken-Ashi bearish Heiken-Ashi reversal. But what we're looking for here is we're looking for some big candles to reverse direction, because this was a pretty big candles coming down. See how big this Heiken-Ashi reversal candle is right here? Big, huge Heiken-Ashi reversal candle with a flat bottom. This is what we're looking for a Heiken-Ashi reversal to the bullish side. And you notice that the candles stack flat bottom, flat bottom, flat bottom, flat bottom. Get a wick and a tail, flat bottom, flat bottom. You see how easy you can see this trend. And then you get out right up here. But that's what you're looking for, these Heiken-Ashi candles. And the thing about a Heiken-Ashi candle is it's made up of two candles. We'll talk about this. So when you get a Heiken-Ashi reversal candle with a flat bottom like that, it is confirmation that reversal has taken place, as opposed to if you were looking at one candle that was reversing. That isn't confirmation. You would have to wait. When you get a Heiken-Ashi candle, the flat bottom on the Heiken-Ashi candle is confirming that reversal has taken place, and it's going back into the bullish direction here. All right. Now, if you've not used these before, and I'm just going to go through the highlights of this. When you get the webinar video, you can watch it, go through it if you like. But if you haven't used these before in your technical analysis, I'd highly recommend you try them out, because I think you're going to find some pretty interesting results. Heiken-Ashi candles, it means average bar in Japanese. It smooths out the price action, so identifying trends and reversals is clearer, since they eliminate a lot of the noise and makes it easier to see trends and stay in a trade throughout the trend, allowing for improved profits. It keeps you from getting shaken out so quickly. Bullish Heiken-Ashi candles, as I just showed you, have flat bottoms, and bearish Heiken-Ashi candles have flat tops. All right, no wicks, and that's really important. Now, one other thing I'll mention about that is if you see here, you see the wicks on these bullish candles here. Under normal circumstances, if you were looking at a regular candle, these wicks on the top of the candles would make you suspicious. In other words, you'd think that this really isn't that strong a bullish candle, because it tells you on a standard candle that the buyers come in, they drove the price up, and then the sellers came in and they drove the price back down again. That is not the case on Heiken-Ashi candles. Wicks on the top of Heiken-Ashi candles are even more bullish than without wicks on the top of the Heiken-Ashi candle. Right, so that's important to remember. And now, bullish trends are going to have flat bottomed Heiken-Ashi candles one after another, just like that. Boom, 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 boom. And the bearish will have bullish flat top candles one after another. So when you get a reversal, what you're looking for is flat top candles going to flat bottom candles. That's going to give you a reversal from bullish to bearish and vice versa. Okay? And again, you can generally stay with a bullish trend as long as no flat topped Heiken-Ashi candles appear, indicating a lull or reversal in the trend. And now reversals in the trend that I just showed you now, reversals in bullish trends will have a flat bottomed Heiken-Ashi candle, followed by a smaller doji Heiken-Ashi candle, followed by a flat topped Heiken-Ashi candle. That's a bullish to bearish reversion or break to the downside. Okay, basically a compression break or or a break out of the current trend. Okay, and I won't go over all of this. It would take too long, but this is something I did on Reddit a long time ago. Went into detail about using Heiken-Ashi candles. And again, I've traded these things with really great success. I use them all the time on the 5-minute chart to enter trades on an intraday trade. If I'm looking for a stock that breaks above support or resistance level, say a stock is breaking above the VWAP, the volume weighted average price, I'll switch to Heiken-Ashi candles. And once that breakthrough the VWAP is confirmed by a Heiken-Ashi candle, then I have a much higher probability of that trade working. I'll show you some of those. And then I do mention here that once you have a valid Heiken-Ashi reversal, the first thing that needs to be true is the Heiken-Ashi candle height has to be at least as large, preferably larger than the prior candles of the movement that's reversing. And I showed you that back here. When these are coming down, this isn't really a good bullish reversal because these candles are so big and these are so small. This is a great reversal. These candles are small. This is bigger than all of them. Okay. One thing also to be aware of, when you have Heiken-Ashi candles on your chart, the price that's reflected on those Heiken-Ashi candles won't be the actual price of the stock. There'll be a few pennies off because remember, there's two candles making up that candle. Obviously it'll still show on your regular chart as normal. Okay, let's see. These are just basically saying the trades you should follow the criteria that I've outlined in the room. Relative strength or relative weakness, institution should be in the trade. I look for Bollinger Bands expanding. I'm not going to go into that, but I do look for Bollinger Bands expanding to identify a break of compression. Okay, again, it's critical that the institutional traders are supporting the reversal. That's how I use the SPY super system to find that. All right, this is just kind of a quick recap. Heiken-Ashi candles evolved from Japanese candlesticks. They combine 8 open-close data from the previous period with open, high, low, close data from the current period. That's how the candle's created. That's how the calculation is done to create a Heiken-Ashi candle. Again, the fusion minimizes noise, providing a clearer depiction of the trend, which is what we just talked about. Average is average pace. That's basically what it is of the two candles. And again, unlike traditional candlesticks, Heiken-Ashi doesn't follow the typical 1, 2, 3 candlestick reversal patterns because you can't use the wicks and tails like you do on standard candles. Heiken-Ashis are much clearer, as far as I'm concerned, to be able to use for these reversals. It excels in identifying trends, potential reversals, and classic technical analysis patterns. All right, so these are the advantages. A long hollow candle, I wouldn't too bad. It depends on how you get your candle structured. But this just tells us that flat tops are bearish, flat bottoms are bullish. You don't have to worry about the wicks and tails because they don't operate like they do on a standard candle. All right, and understanding trends, this is what we just talked about. Flat bottom candles in an uptrend signals a strong visual of current strength. So you can see the flat bottom candles here, the green ones. You can see this trend here. You've got a little red candle stuck in here, but big green candles with a little red candle, and then you go right back into the trend again. And you see how easy it is to identify the trend. And this is a reversal right here. Here's your wick and tail. You go from a flat bottom to a wick and a tail, and then a flat top. That's a bearish reversal right there. All right, that's a small bearish reversal right there, and then another bullish reversal to the upside right there. And we'll go through some of these charts. No gap trading, Mike. There is no gap on Heiken-Ashi candles, as I'll show you. There are no gaps. But I mean, obviously you're looking at the regular candles to identify gaps. But there are no gaps on 5-minute charts anyway, for the most part, unless you get a halt or something. 5-minute charts typically don't have any gaps. Now you will get gaps on the daily chart, so that's something that you would be aware of. All right, tips for using Heiken-Ashi candles: examine nearby support or resistance level impacting potential gains. This should be for any candle. If you're going into a trade long, you don't want to be trading right into the 200-day moving average, right? You want to be trading with enough room to the 200-day moving average to actually give you some profitability. Align the trade with the current market trend if you can. Choose a stock with relative strength and weakness. Again, these are the same criteria that I use in the room. Monitor the expanding Bollinger Bands. You don't have to really do that, but that's something I like to do. After entering the trade, I usually switch to regular candles when I want to exit the trade, so I can identify the reversal that's going against me. I can identify it more quickly, especially if I'm in profits, and I can take profits more quickly. And again, it's going to identify waning momentum more quickly using regular candles. All right. So that's the Heiken-Ashi candles. They look different, but they're very, very useful. And this is basically the advantages. It smooths out the price action, reducing the noise. It makes identifying trends much easier. It improves identifying confirmation of trends and trends reversals. This is the biggest key right here, because most of the time when you're trying to get into a trade, you kind of like to get in on if you're using a 5-minute chart and the stock's been bullish and it pulls back. You want to get in on a reversal back into the original trend, right? And that's what's going to get you in at a really good price, right close to the support level, but confirm that it's reversing, right? So that's how this works. And again, it helps identify potential exits when the candle bodies shrink or the reversal occurs, right? So those are your advantages of Heiken-Ashi candles. Now, I got a couple of charts here. These are just graphics, and I'm going to go to some live charts. We'll flip back and forth. This is a regular chart on Uber. Doesn't matter when it was; it's old, but you can see this is a regular chart on Uber. This is actually TC2000 that I use for my charting. I use, of course, the Thinkorswim. I use the compass system or the SPY super system to let me know that institutions are in there. But I use this for my charting. And you can see here's a gap. We're going to mention, you mentioned the gap. Mike mentioned gaps won't show up on Heiken-Ashi. You'll see that in a minute. But here's the trend that you're watching here on regular candles, right? Here's Uber with Heiken-Ashi candles. Now, you notice that the gaps are there's no gaps. But here you see this wick and a tail here bouncing off this line here. That's actually the 200-day moving average. But you see how it bounced off the 200-day and put in a flat bottom candle? Now that flat bottom candle on a daily chart is actually made up of 2 days, right there. That's made up of 2 days, this and this. So that's where you're getting a flat bottom. This is a Heiken-Ashi reversal, and you notice that the flat bottoms continue up here for 5 days. Now in my TC2000 chart, I have the green candles colored blue if the Bollinger Bands are expanding. That just tells me that there's a compression break. You don't have to have that, but I do on my charts. I have pink for compression breaks to the downside, blue for compression breaks to the upside. So here's the Heiken-Ashi candles here. See how easy the trend is to spot. Moves across right here. You get out here as it starts to flatten, and get back in again. You could get back in right here and ride it for a few candles. Most of the time when you get these Heiken-Ashi candles reversing, you'll get several candles in a row. All right, so that's Uber, regular, Uber with Heiken-Ashi. And you can see how easy the trend is to see here. All right, I'm going to look at some live ones now. I'm going to do this a couple of different ways. Let me bring up my TC2000 chart. And I'm going to show you some Heiken-Ashi candles here, just so you can see Heiken-Ashi. Then we'll look at them on the SPY super system, right? But what I'm going to do is I'm going to run a scan. Bear with me just 1 minute. All right, so I got a few here. I just ran a scan. This is looking for bullish Heiken-Ashi reversals. All right, so this is GME today. Now these are regular candles I got right here. Here's Heiken-Ashi candles. All right, so this is a Heiken-Ashi candle. You see the flat top here? Heiken-Ashi candle to the downside. This is a Heiken-Ashi reversal on GME. You can see the regular chart how big this drop was. Right, big volume, obviously. If something happened, they actually were issuing more shares to bring in some money to buy cryptos. But that's what happened here. But if you look at the Heiken-Ashi, you can see that this is telling us, if this start working again, there we go. It's telling us I've got a Heiken-Ashi reversal to the bullish side here, to the bearish side here. Now, notice over here, you can, if you start looking at these charts, you can see these very easily. Here's a wick and a tail, wick and a tail. There's a flat top, flat top, flat top. This is a bearish reversal right here. And then it compresses, and then you get another bearish reversal to the downside. And here's a bullish reversal to the upside right here. So that's what that's showing you. Now here's Palantir, Heiken-Ashi reversal in Palantir today to the downside. See the flat top after having a wick and a tail? That's a bearish Heiken-Ashi candle. Here's a Heiken-Ashi reversal on Palantir here. If you grab Palantir here, as it broke here with a flat top, look at the run you got on this thing. Really, really nice. And easy to see, very easy to see. And you can see right here, it's over, get out. All right. So let me go again. I got a couple of them I just want to show you here. So there's Sophie, that's another one did a Heiken-Ashi reversal today. These are just showing, these are actual trades today. These are live charts. Is Intel with a Heiken-Ashi reversal to the downside, and Hood with a Heiken-Ashi reversal to the downside. And SPY had a Heiken-Ashi reversal to the downside. Even though SPY was had a fairly flat day today, the last 2 days as well was put in a Heiken-Ashi reversal below the 200-day moving average. All right, so that's the shots. Now let me go over and do one other thing. I want to show you this on the SPY super system. All right, so here's the SPY super system. This is actually what it looks like. This is the SPY today on the SPY super system. It shows you what the SPY super system chart looks like. This is Think or Swim. These are some of the scanners I've got running. This is a cascading up. This is a cascading down. These find relative strength, relative weakness. But here is the SPY super system, and this is the information that's on there. All right, this is current time frame momentum. This is multi-time frame momentum. This is long-term trend. These are critical. And the only thing you've got is colors to look at. You've got yellow and red is bearish, blue and green is bullish. And you can see at the end of the day, the SPY was bearish across the board. Okay? And if you go back and look today, it was very choppy. You see how it was going from bullish to bearish, back and forth, very choppy day. Not a good day to be trading the SPY. All right? But if you look at something like PNW, which we traded, this is the one we traded today, and these are standard candles I got here right now. This is PNW today. You notice the red here in the current time frame momentum, and the yellow on the multi-time frame momentum. You got a couple of blues stuck in there, but look at how much selling there was in here. This is why we went short this stock today. All right, we went short the stock here this morning. All right, on this breakdown, and see it just kept coming down. We were out of it before it popped back up here. Right now, if I switch over to Heiken-Ashi candles, which you can do here on Think or Swim, there's Heiken-Ashi candles. There's the Heiken-Ashi candles on today on PNW. All right. So here's your flat top right here. All right, and this purple line is the VWAP, volume weighted average price. This was a breakdown here with Heiken-Ashi candles to the downside. See how smooth this is? It goes down, you don't get any movement to the upside. You get another Heiken-Ashi flat top. That's a bearish reversal. You stay right in this trade. You can stay in this trade all the way down through here. Really easy to see, and see the current time frame momentum on the SPY super system is telling you sell, sell, sell. The institutions are selling the heck out of this thing. All right, so that what showed you what the Heiken-Ashi candles look like and how you find those. Again, if we look at the other one we were looking at, what was the one we were looking at over on here? Bear with me just a sec. GameStop. Let's look at GameStop. So GME. Right, GME. All right, so here's GME on the Compass system or the SPY super system right here. All right, so we go back to the beginning of the day. We still on Heiken-Ashi candles? We are. Here's your Heiken-Ashi reversal on GameStop this morning. Too early, this is right at the beginning of the day. You wouldn't be taking it that early. But as it comes across here and compresses, and you get a Heiken-Ashi reversal right there, you see this goes from buying blue to selling yellow. See the drop right here? Look at how nice that is. If you just took that, you're out. You've got a beautiful profit here, just trading Heiken-Ashi candles off of the James Stubbs. So that's what they look like on the compass system, on the SPY super system. The flat tops, flat top, flat top, flat top. And there's a continuation again, flat top, flat top, flat top. Right, so this is the SPY super system, and that's what the Heiken-Ashi candles look like on compass system, SPY super system, as well as the my TC2000 charts. All right, so that looks at some of those. So now I wanted to, that kind of covers Heiken-Ashi. Let me see, do we have any questions on those Heiken-Ashi candles at all? It's really not that complicated once you understand how they can help you trading. I mean, they're different. They're candles, but they're much easier to help you trade and get into trade and out of trades, and keep you in trades. But it also gets you into trades after a confirmation has taken place. Very critical. All right, so now I'm going to talk about the room and the alert service and what our results have been as we go forward here. I'm going to show you some charts. This is 2023. This is the trade results using $2,000 per trade. If you took all the trades at $2,000 per trade, typically there's not a lot of trades each month or each week. I think this week we've only had like 3 or something. So there's not an awful lot, but we did make a little over 60,000 in 2023 from the room. 2024, 54.9, 55,000. So, you know, pretty even. You know, it depends on how the market dictates a lot about profitability. How long can you stay in a trade? How long can you be to get out of a trade? You know, it's if you get choppy markets, your profitability is going to be pushed down a little bit. Trending markets, profitability goes up. All right, and I'm just going to cover pretty quickly some of what our wins are. And the reason I'm doing this is obviously to show you that we have good results in the room in the alert service. But I want to show you what these are the percentage gains on the trades that we took. And most of these were just puts and calls. But you can see here that we run anywhere from 10, 15% up to about 35, 40% is generally maxed out. We did do a 96 on Boeing here. We did a 65 on Mara. And we did, yeah, those are the 2 good ones in January. But again, we had a 90% win rate, 20 wins, 2 losses. The win rate typically is going to run between about 82, 83% up to about 90%. But 2,000 invested in each one of these trades, netted 75.05. We do have losses. We had 2 losses this month, so we do take losses sometimes. We actually had one losing month in 2024, and I'll show you that. February, our best month last year, 24 and 2, 11, 7, 45, 92% win rate. The alert trades that month, by the way, 20 wins, 2 losses. We don't alert on every trade because we can't. Some of them are too quick, and some of them we take too late in the day. But it was still 20 and 2 for 6,900. All right, that's February. All right, March, May, I jumped around here. I didn't want to put everything out there, but again, I want you to see the percentage gains, how consistent they are. 30, 40, 18, 48, 32, very, very consistent. We're not going to get 400 or 500% of a trade. If you think you're going to get 400 or 500% per trade, you don't want to be in my room, because first of all, you can't do it consistently. It's just, you're not going to get those kind of results and be profitable. You can't do it over long term. It just doesn't happen. All right, so there was May, again, pretty nice, 88% win rate, 4,900. June, 86, 7,500. So you can see that what we've done here, pretty much when you get the video, you can look at them more closely, but I want to conserve a little bit of time here. So there's August right there. This was our only losing month last year. Here's September. Only 13 trades, 8 wins, 5 losses, very few. Lost 1786 in the room, lost 295 on the alert service, 8 and 4. But again, they kind of get swamped by the wins here. You know, 4,500 here, 6,000 here. October, we jumped back up again to 74.48 profitable. And the alert service went to 6,063. So again, you can see the results that we have in the room. This is on 2024. Again, there's November, another nice winning month. And I'm going to cover the last couple months as well, but on the alert service, I want to talk about, for anybody who wants to be in the alert service, what you're going to see when you get the alert. When you get an alert, you're going to get the stock symbol, obviously. You're going to get the option strike price. You're going to get the option expiration date, and you're going to get the price to pay for the option. Okay, that's is what's going to show there. So it tells you exactly what you want to do. Now you get one when you get into the trade, and you get another one when we want to get out of the trade. And if we adjust it, we may adjust it again. You may get another one to raise the sell price or lower the sell price, depending on what's happening. If we're gonna take a loss on it, you'll get a text on that as well. And just to understand how we achieve these results, and I think I pretty much covered this. We know when institutions are in the trades and when they're not, and we're only getting in when the institutions are in the trades. And we look for market internals. That's basically the volume of stocks moving up with the volume of stocks moving down to create market internals. We're going to get in if those are heavily bullish or bearish as well. Now, I will take trades when the institutions are in them and the market's neutral. Market internals are neutral, but the institutions are in the trade. I'll take the trade. Okay, so we don't only just take them when both are in our favor, but we do take them only when the institutions are in our favor. And we have a neutral to either a bullish or bearish market internals that correspond to the trade we're taking, that direction. Okay, and how do we do this? A SPY super system, it does triple screen assessment. We're looking at momentum. This is to me the most critical thing. We're looking at momentum across multiple time frames, and we're looking at trend across multiple time frames. Sometimes you can call this fractals, or you call it triple screen assessment. I call it looking at multiple time frames. This is a chart of Tesla. That is an old one, but again, you've seen the Compass super system or the SPY super system already, so you know what these are. Green is bullish. You can see Tesla was very bullish that day. This was a SPY super system reversal. This was when we took the SPY trade for a quick trade off of 5 minute charts. Okay, we took it here and we wrote it down, and we did. This is how we do it on a 5 minute chart. See the little thin line here? That is the 15 EMA. This is the VWAP. Those are our support resistance levels. Stock breaks below the 15 EMA, we take it, and there's the arrow for it. So this is where we get in, and this is you would stay in it as long as the stock stays below the 15 EMA. You could have stayed in it all this way down. Okay. Now, the results I just talked about the room. These are the SPY super system results. Now, this is for people who are in the room or they have the SPY super system software and want to trade the SPY, the Q, the IWM, the NASDAQ, the futures. You can trade the futures on this as well. But this is the results that I had, because I can't alert on these. They're much too fast. I can point them out in the room when they're occurring, but these are the results I had. Members have better results and they have worse results. It just depends, because you have to be able to manage these yourself. So July 16-0, May 25.96, August 56 wins, 6 losses, 2 scratches. A lot of trades in these, but you're only in one at a time, and you're typically only in for 10, 15, 20, 35 minutes, something like that. Very short duration trades. So, but you need to be able to be there watching it when you put these on. Right, so 2,000 invested in August produced 82.01, September 71.32, October 48.31. And again, you'll only be in one trade at a time, and they'll be very short duration. All right, so here is November 54.5, in December 69.15, 10,000 in December, 9,000 in January and November. We did have a little over 10,000 in January as well. But again, it's important to remember that these results aren't included in the room totals. Remember, I showed you the room totals. The room totals, this is October of 2024. The SPY super system produced 4,831, which we just showed you. The room itself produced 74.48. None of these trades are included in this, and none of these trades are included in this. These are two separate methodologies you use. The SPY super system for an intraday quick trades for folks who want to trade off a 5 minute chart and be in and out of trades fairly quickly. These are trades that they will last all day or a week or 2 weeks or 3 weeks. This is the option trades. All of these results here are exact, because these are, when I put the trade in there, I post it and I send it out alerts with the entry price and the exit price. So anybody who followed the trades should have produced almost exactly the same results as I got on this. All right, and that was in October. Here is November, 93.70 on the SPY Super Systems, 73.93 on the SPY Super Systems in the room. All right, and again, 14 and 2 here, 79, 73.93. Over here we had 90.59 trades. Those are a lot of trades. You can make sometimes 5, 6, 7 trades a day off the SPY Super System if they set up, only if they set up. Right, and here's December, 10.450 on the SPY Super System. A lot of wins. We had quite a few losses too, but they're fairly small because again, we're getting in right at support and right at resistance. And then the December options room trades, 14 and 3, 45.97. The smaller total here in December here, but this is pretty nice. So there's the first quarter of the last quarter of 2024, 24.651 on SPY Super System, 17.774 on the trade and the room. Pretty nice. So 42,000 altogether if you took them all, but it's not likely you will. These you're going to have to manage yourself. They're fairly quick. These you can just follow me on. These will be posted, all of these. All right, so I'm going to show you the charts of the SPY Super System trades, and then we'll show some starts of the regular trades, and then we can wrap it up. So this was SPY Super System trade we took in August. Again, the only thing that's of interest to you here is this compass, the SPY Super System current time frame momentum right here. See how it says current time frame momentum? This is what we're looking at, because the chart might look busy, but it's not. We're just looking at the current time frame momentum. We're looking at the VWAP. See where this is? Volume weighted average price. This is a level that all the institutions use. Volume weighted average price. 15 EMA right here. That's the 15 exponential moving average. When we don't get in on the VWAP, we can get in on the 15. Right here, we get in on the 15 EMA and a VWAP break. See how the price broke above there? The SPY Super System produces these little arrows, these pink arrows. These are called pop symbols, or pop out of the box. They show a compression break. Notice we went from selling right here, red, to buying blue, right there on that candle. That candle was telling us that we're breaking out. The institutions are buying. Time to get into the trade. And we get into the trade right there. And we stay in it, and now the 15 becomes our stop because the 15 is pulling away from the VWAP, and we just stay in this trade all the way up, and then we get out right here as we start to get some momentum dying. All right, we get out right there, took profits, $220 a contract, and you notice this went right to yellow here eventually, so we would be out. But this is the only one of these. We're not using this for SPY Super System. We're using this. All right, here's another one here. This was we just did this in February. $90 profit. Most of the time, the profits are not going to be in the $200 range. They're typically going to run $70, $80, $90, $120 per contract profit. That's usually what you get unless you're having a really nice trending day. And we haven't had a lot of those lately. We haven't had a lot of trending days, a lot of choppy days. But here you see we went from blue here was buying, we went to selling, but we're waiting for compression to break. And here the compression breaks. Pop out of the box symbol right here on the 15. We take it here. We get out of it right here. This just two candles, right? Still red, but we got it off right here because we're getting some bounce, and we take the profits in that. And this is the actual format that you see now. I eliminated one of the indicators at the bottom, which I don't use anymore. But the money flow, I didn't think it was that effective, and I put in the actual oscillator so you can see what kind of angle you're getting on it. And we also, if you buy the SPY Super System, you'll get this layout as well. This is just for doing SPY Super System trades. All you've got is the current time frame momentum, the oscillator, the VWAP, the 15 EMA, and the pop out of the box symbols. That's all you get. That's all you need to use to trade it. Pretty simple. And you'll get both of these. You'll get this format. In this format, you can swap them back and forth if you buy the software, the SPY Super System software. And again, this is a trade off the new SPY Super System software, as I just mentioned. You can see here that we went yellow, then blue, green. Buy it here, write it up, take it off here. All right. And again, you go back over to blue here. You can take it long here, ride it along the 15, take it off here. That's all you really need for doing SPY Super Systems. Now, on the swing type trades, you do need all of the indicators. This was another one on the SPY here. This produced $130 of profit. That's fairly common. We had compressed here. We broke above the 15 with a pop out of the box symbol. We ride it up. About 8 and 10 candles for profits. IWM, same thing. Right, there it is right there. yellow, selling, blue, buying, right there. And then it goes to green. This is buying, we buy it right here. Doesn't go anywhere for 5 or 6 candles, but it stays above the 15, and then you go ahead and write it right, and you get up right out here, 90 bucks. IWM, it doesn't move as much as the SPY or the Qs do. SPY Super System here, beautiful trade on IWM right here, completely red. Institutions selling the heck out of this thing. You get it right here as it breaks below the VWAP with that pop out of the box symbol. You write it down, and you get out right here as it starts to show some momentum starting to wane. And notice it went to blue here. Okay, and there's another one. So this is what they look like. These are 5-minute charts. You can see they're fairly easy to see. It's the selling. What you do is you wait for the entry. Here it is as it breaks below the VWAP. You stay in it. It just moves sideways here. You're just compressing, but you stayed below the VWAP right here, and you actually stayed below the 15 the whole way, and then you flush down. Okay. And this was from another one from 823, but the same basic information here. The SPY Super System is giving us the current time frame momentum. This is what we're using to enter the trade. That and a pop out of the box symbol if we get, when you don't have to have these, but you can get them, and it breaks above the 15 in the VWAP, and you write it up, and you get $150 a contract on this nice little trade right here. And here's another SPY trade here. I didn't put the arrows on here. I wanted you to be able to look and identify this. You notice that we went from red here selling to blue buying, but you notice we hit the VWAP, so you don't go in right here. You don't go in right here. We're right on the VWAP. Here's your entry. As you break above the VWAP with buying going on, this is where you get in, and you just write it up for 4 or 5 candles. Okay, there's the IWM. It's another one. Easy to see. I mean, really easy to see. If you look what's going on down here, you can see it's buying most of the day. You're looking for an entry. You get an entry right here as it rides along the 15 and pops right here with a pop out of the box. There's where you buy it, and there's where you sell it, right up here. And this is SPY System. This is one, just so you can actually do this both ways. This one I took the SPY short right here as we broke down below the VWAP, the pink line. You see we're red, institutions selling, break below the VWAP right here, breaks down, and I take it here, and then I get basically a little green candle here. So I take profits. And then it comes back up again, and it breaks above the VWAP right here, and it goes from selling red to buying blue. I can take it long, and I take it long right here, and I write it up. And this white line is a pivot point. These are fairly good resistance levels. So I went ahead and took it off as it kind of meandered around above that. But that was a trade. So I took it short, I took it long, back to back. And another SPY trade here, just so you can see, you can see where to take these. You can see right here, this is where you'd want to take it. See how we went from buying to selling, green to yellow. There it is, coming straight down. Really not that complicated, but they're really, really effective. But you want to be trading with the market. You want to make sure that you've got a little bit of a trend to follow in the market. If the market's chopping up and down between the VWAP, above it, below it, above it, below it, you don't want to be getting into those trades. You want to have some kind of a trend that you can actually follow. This one here was, this was an uptrend all day. This was a decent uptrend right here. So, you want to have some market behind you. All right, so that covers the SPY Super System trades. These are the trades that we take in the room and on the alert service, just of some of them here. The reason I want you to see that is because here is your current time frame momentum here, multi-time frame momentum right here, all right, and long-term trend. We want to use all of these on the swing trades. We want them all to be blue or green for long and yellow or red for bearish. So right here, this is HIMS, and I took it right here. Probably could have taken it back here, but I didn't catch it, I don't think. But I took it here and this, by the way, is the VWAP, not used on the daily chart. This is not, you don't use this on the daily chart. But here I took it and I wrote it up, and I made 25% on this thing. I left a runner on, some options left. I left on a few and got a 269% pop. But basically everybody got the 25% on that trade right there. Easy to see. Here's Palantir. We took Palantir along here. See how it's compressing. See how we go from selling here, yellow, buying green. We get in right here. This is a daily chart. It pops up. We get out right here as it flattens out. We just took profits on it. Market which has been choppy. So this was when we wanted to take 31%. We did. Twilio, we took a 58% profit in 2 days in Twilio. We took this as it went green, went from yellow to green on the multi-time frame. Current time frame was already green. Institutions were buying on the daily. Now we go to the multi-time frame, which is on the 1 day, the 3 day, and the 9 day. This tells us that they went to green as well. We buy it here, I get out of it right here. Could have stayed in it, but again, the market had been very choppy, and we wanted to take profits on the thing. So 58% profit was pretty nice in 2 days. Lulu, this was a nice one. We're in, this was just an overnight trade right here. We get in here, we get out the next candle, 56%. We get in for $1.92 a contract, get out for $3 a contract. Pretty nice. 192 turned into 300. And again, you can see you can see where we entered it right here, where it went to yellow. We already had red down here, but we had selling here. Institutions are selling it. We take it and it pops down for us. MDT went from yellow, selling, blue, buying, coming up along the 15, take it right there, write it up. Institutions continuing to buy, continuing to buy. Another one, VKTX. So I think you get the idea. You're looking at your colors to tell you green is and blue are buying, red and yellow is selling. This tells you what the institutions are doing. You now know what the institutions are doing. You want to do what they do, but you just want to pick your entry. You want to get the best entry that you can. This is a nice trade here. In for 8:30, out for 11:30 on McDonald's. Again, this little shaded area is called the dynamic compression zone that the SPY super system creates, but we also had a pop out of the box symbol right here, breaking out of compression, take it here, overnight, bam, out 37%. This was on Amazon. This was a 5-minute chart. This was an intraday trade. Again, looking at we're only interested in the current time frame momentum, what's it doing. Now it's good that the multi-time frame was also green, but this is what I was interested in. And it came across here, yellow, goes to green, I catch it here. All right, and we were in this for 45 minutes as it rides along the 15 and 32% profit on that Amazon trade. ENPH, another 5-minute chart. See the compression here? Whoops. Compression. See all the red institutions selling the heck out of this thing. Multi-time frame for momentum, current time frame momentum on the 5-minute, all red. Where are we going to do? We want to find the best entry. We get it right here as it pops below the 15 with a pop out of the box symbol. We're in this for 1 hour and ENPH 20%. Verizon, same thing. Compress, breaks down below the VWAP right there. And we were in this for 1 hour and made 50% profit on it. Everything's red. You can see the institutions are selling. I mean, once you see this, you can see that the institutions are selling here. All right. And this was an overnight on Tesla. We actually took this short overnight on Tesla because we had a pop out of the box symbol in the 5-minute. We had everything gone red and yellow. So we knew it was bearish. And we took the overnight trade and the stock fell from 112 to 120 to 112 overnight. We rode it down to here. As it rode along the VWAP, we took profits right here. That was a really big trade. You don't get a lot like that. Okay, so that covers the SPY super system, what the software looks like. This is the software you can buy and you can put it on your Thinkorswim platform. Rightline will put it on there for free. You have to buy the software, of course, but they'll put it on and for free. There'll be no charge for that. And the Thinkorswim platform is also free, so you don't even have to trade on it. You just load it up and you put the SPY super system on there, and that gives you this, gives you the exact same stuff that I just showed you. Again, here's what we trade in the room and on the alerts, and then we have the SPY super system in the room for basically for quick type trades for folks who want to manage trades quickly during the day. All right, so what we have to offer, just so you can see as we come to a close here, you can get a 2-week free trial on the room and the alert service. If you do that, it's going to be free for 2 weeks. It's not a long period of time, but it's 2 weeks, and you get the training room, you get the alert service, you get all my modules. I have training modules, videos on about 30 of them on all the indicators, all the strategies we use. There's one on doing the SPY super system. There's one on Heiken-Ashi candles. There's one on doing strangles and straddles, time spreads, everything. You've got videos in all of those. And that's for 2 weeks. And then it rolls to a quarterly subscription. Of course, you can cancel anytime you want, but it rolls to a quarterly subscription at $396, right? So that's for the room and the text alerts. Then if you want to get the room in the alert service at a better price, a much better price, then you can go ahead and get the yearly, $11.96 for the room and the alert service. It comes with a private Discord chat. We have 2 other professional traders in there, all right? And in the videos, of course. Or you can do a one-time payment. You get this forever, and that's at $24.96, gives you the room and the alert service. Michael, where do you go to sign up? I think if you go to the chat box here, there'll be links to the SPY Super System and to the trading room and the alert service. But I'll give you a number here you can call. See that 786-732-4656. That's Right Line Trading. Just call that number. If you want to talk to Rory, he'll go over all the details with you. All right, so this is the trading room and the alert service on an annual basis. Right here, $11.96. You get the alerts, you get the trading room, you get the Discord community, and you get all the videos. And a one-time payment for $24.96 gives you all these things forever. You don't have to resubscribe each year. And then we have the SPY Super System. Now this is the piece of software. This is a software that goes onto your computer. On the Thinkorswim platform that's loaded there. The Right Line will put it on there for free. They take over the machine. It'll look exactly like my SPY Super System will on my chart that I showed you, with scanners and everything all in there. So you get the trading system, you get the scanner, you obviously get the videos, the masterclass, an installation. You get a month free in the room and a month in the text alerts for free if you buy the SPY Super System software and have it installed. $14.98, really a good deal. Now you can also do a one-time payment, which is you get it forever. Don't have to renew. $500 more, $19.98, a really good deal. And again, this is for the software itself, and you get a month in the room and a month in the alert service. If you do the lifetime, you get 3 months in the room and 3 months in the alert service, and then you can decide whether you want to subscribe to that further. All right, so there you go. Your 2-week trial with it rolls over to the quarterly for the trading room and alert service with the videos, and you get it free for 2 weeks. Cancel anytime. Or if you want to get a better price, go to the annual, $11.96 for the annual on the room and the alerts, $24.96 for a one-time payment. Okay, and there's the software. Michael, where's the 2-week trial? I don't. Let me look in the chat. If it doesn't show up there, you can just go ahead and call Rory, but I'm not sure. Yeah, it says there 14-day trial, free trial. There's a link there that says 14-day free trial. TC2000 layout. Now that's my own. That's a piece of software that I use for scanning. I use it for scanning, but I use the SPY Super System for a lot of the scans. My TC2000 is what I use for charting, because it's hard to chart for me on the SPY Super System because there's so many lines and stuff on there. So I do a lot of specialized technical analysis on the TC2000 charts because I can recolor candles and stuff. But it's not. It doesn't give me any of the institutional information. So I have to have the SPY Super System to get the institutional information. Okay. Thanks, Michael. Appreciate the questions. Thank you. All right, that pretty much covers the video for the webinar for today. I appreciate your taking a Thursday afternoon to spend some time with me. Took a little bit over an hour. I didn't want to spend too much time, but I did want to cover the Heiken-Ashi candles. I think that's really important if you've not used them before, or if you've used them and you understand them. Perhaps we were able to give you a little bit of a better methodology on how to use them effectively in your trading. All right, so I appreciate it. I look forward to seeing some folks in the room and on the alert service pretty soon. And have a great evening. And we'll be back in there tomorrow. We'll see everybody who comes back into the room or on the alert service. See them on Friday morning. Have a good one.
Thank you, David, for another insightful and practical session. Your clarity and consistency in the markets continue to inspire traders at all levels. And a big thank you for the offer you've extended, everyone. The details are in the chat box. And that brings us to the end of today's Traders Corner Investor Summit. On behalf of the entire Traders Corner team, I want to thank each of our incredible presenters and all of you for joining us today. Remember, the chat contains links and offers from every speaker we've had, and they are time sensitive and exclusive, so be sure to take action. Keep trading smart, stay informed, and we'll see you at the next summit. Until then, stay profitable. Thank you guys and gals.